we are back to one section. Oh, you can hear me.
aside from
This is what I don't understand. Like, why don't the Bitcoin maxis support the current Biden administration? Because they're the one. Oh, are we online? Nope.
and we're back.
And we're back.
I want you to finish that thought, Rizzo.
Cool.
Welcome back to the Mara News Desk at Bitcoin 2024, powered by Bitcoin Magazine. Once again, joined by Dylan LeClair, Frank Corva, and Mark Moss. The subject of the desk right now: why should Bitcoin be a strategic initiative for the United States? Why a strategic priority with all that's going on ahead of election 2024? Dylan, let's dive back in.
Well, yeah, I mean, the U.S., and this is a popular stance among the kind of sort of protectionist right, particularly J.D. Vance coming in and saying, look, the dollar has been great for the coastal elites, it's been great for Wall Street, it's been great for tech, it's been great for the military-industrial complex in D.C., but it's really, it's hollowed out the middle America, right? It's hollowed out basically, you know, the Rust Belt, anybody that's doing any sort of manufacturing, that's been shipped off overseas over the past, really 40 years. And so while the dollar strength is really, really, great for the things I mentioned before, it does actually hurt a lot of middle Americans and the lower class. So one of the things that I think is going to be front and center is, and they've already discussed this, is the dollar strength among other foreign currencies. And one of the things that, if you look back more than, 50 years or so, gold played a really, really huge role in this kind of international monetary system, whether it's settlements or just being a reserve asset. And so when we're looking into the future, maybe not now or immediately, but Bitcoin, I think, has a very large role to play. Despite there continuing to be fiat currencies, the dollar, the euro, the yen, they're not going away immediately. As many, very hyper bullish maximalist rhetoric might.
As I was going to say, doesn't Bitcoin compete against the U.S. dollar system? Isn't that in some ways the express goal of the movement? Mark, your take.
Yeah, I would say not necessarily. And I think if people are smarter and are looking at it on a bigger picture, and when I say this, people being the government leaders, et cetera, right, they can see that the tide has changed and the dollar homogeny has been falling. The world is breaking into a multipolar world, and we can see what's happening specifically around the BRICS nations, Russia, China, et cetera. And China and the BRICS nations are moving back to a gold-backed system. And what China's doing now, and Saudi Arabia is selling oil outside of the dollar, a lot of those excess funds are now being recycled into gold, not U.S. treasuries. And that gold market is going to break. And I think it's going to break to the upside, which is going to bring the dollar down. And I think if the U.S. is looking at this from a longer strategic lens, they realize the dollar is threatened, and that's going to happen either way. And so maybe we should start hedging our bets and start moving into somewhat of a Bitcoin standard. And really, the U.S. needs to get onto the gold move, and I think they will at some point if they want, because people can see what's going on here. And so the dollar is under attack. We saw Jerome Powell come out, what was that, I think 2 years ago now, and said that he could see that we could have more than one reserve currency. So Jerome Powell from the Fed has already sort of admitted this. The tide is already turning. The BRICS nations are bringing gold back. And so the U.S. dollar is going down. To Dylan's point, not tomorrow. It's not like a light switch. It's just a slow, a gradual transition. It's a process, not an event. But I think if you're looking at it from a longer strategic lens, you realize we have to move on to something different. And gold is maybe that interim step, but Bitcoin is the longer-term step. We might as well have a head run on it.
Of course, the headline yesterday, Senator Cynthia Lummis coming out proposing a bill that would put Bitcoin on the balance sheet of the United States strategic reserve asset. Of course, the U.S. already owns a substantial amount of Bitcoin. Frank, your take on this proposal, is this serious? Is this something that could get serious consideration in the current Congress?
All I could say is I hope so. I hope that people really think about this, because as Mark just said, so he's hoping that the United States sort of warms up to this idea of putting more gold on the balance sheet. We're seeing central banks around the world acquire gold en masse right now, and which is sort of, they're sort of seeing the writing on the wall. Sort of U.S. treasuries have been sort of like a base layer around the world, something to invest in, that countries are invested in. That seems to be moving to gold. If Bitcoin is gold 2.0, as some people term it, then, yeah, over a long-term time horizon, I hope that the United States sort of has the foresight to say, okay, well, we should have some of this on our balance sheet as well as a strategic reserve asset. And I think this is something Trump mentioned as well. But yes, I saw the news about Lummis, and I do hope that she's serious about it, and I hope that people in government pay attention to what she's saying, because I think again with a bit of maybe a lower time preference, long-term time horizon, I think it's essential that companies that not only the United States but that all countries have some sort of Bitcoin as a strategic reserve asset strategy.
And of course, we saw Germany over the last several weeks come out, liquidate a 50,000 plus Bitcoin stash. Some are calling this a strategic blunder on par of China's ban of Bitcoin mining. Mark, Dylan, your take on Germany's government sales in contrast to what the U.S. is proposed to do right now?
Yeah, I think it's just about incentives for the politicians, right? They're on short-term limits. They're not thinking long-term, multi-decade, right? Or like many hodlers would. You hold Bitcoin, I want to hold this for my kids, or I want to hold this for a better future for myself. The incentives are just not there for the politicians running up a debt-based monetary system. They don't want the Bitcoin. They want euros to spend into their into their districts, into their jurisdictions. So it's understandable. I think also it's important to note that when we're talking about sovereign nations, even 50,000 Bitcoin, that's a lot of Bitcoin as a percent of the total supply. It's a lot of money for anybody. But for a nation that's the size of Germany and their economy, despite a little bit of a contraction since the Russian natural gas kind of phenomenon that happened in 2022, they're still a powerhouse. They're still an economic powerhouse, and the however many billions they got from the Bitcoin sale really ultimately isn't going to make or break Germany.
I think the question here is, what's the risk, right? If you're the United States and you're looking at sold already hundreds of thousands of Bitcoin, what's the risk in not having a strategic asset reserve?
Well, I think Dylan said a key piece there, though, the difference between Germany and the United States in this regard. So he said that Germany wanted to sell the Bitcoin for euros, right? So Germany doesn't have the reserve currency of the world. They can't print their own currency. They're on a euro standard, right? Not a German mark standard. And so the U.S. is a little bit different in the sense we print dollars. And so it's like, I own the beach, and I'm gonna give you my one scarce asset for more sand. I have all the sand I want. And so for the United States to sell Bitcoin for something they literally print from thin air makes 0 sense. For Germany, it does make a little bit more sense. They needed the euros. Now, really, as you said, we already have, 210,000, 205,000 on the U.S. balance sheet. So really, it's an accounting move. Just take it from whatever, the DOJ department to the Treasury Department or something
U.S.
like that.
Marshals right now.
Or whoever has it, right? So it's just an accounting thing in the United States. So I think for the United States to sell it for something they just print from thin air makes 0 sense. Like, why not just keep it? But to Dylan's point as well, I mean, they don't think long-term like that. So I think there's it doesn't seem like any risk to keep it. It seems like it's all downside. And I would liken it not just to China's banning of the Bitcoin mining that they did, which was a strategic blunder, but really I called that the strategic blunder 2.0 because when the whole world transitioned from a silver standard to a gold standard, China didn't want to do that. And China said, no, we're not going to a gold standard. We're staying on silver. And they lost their position as a global leader in the late 1800s. And I think they've been trying to get back to that gold standard ever since, but now the world's already shifting to a Bitcoin standard. And so really, I would liken it more towards that, a massive strategic blunder that could potentially see the U.S. lose its position in the world.
Well, I want to talk about Donald J. Trump's talking point here that America should be investing in Bitcoin mining. A lot of criticism from the Bitcoin community saying, Bitcoin mining already concentrated in America. Do we really want more mining in America, or do we want to decentralize? Your take on that, Frank?
Well, yeah, I think it actually is important that mining decentralizes within America. Right now, the majority of the mining is happening in Texas, if I'm not mistaken. I think a large amount of the global hash rate actually comes from Texas. So what I'd like to see, if there's other places, especially that have cheap energy or renewable energy in the United States, I would love to see some sort of strategy at the state level in multiple different states where they're becoming, they're more friendly and welcoming. I'm from New York, where a state that's notoriously not so welcoming to Bitcoin mining, which is, I think, a huge mistake. So I'm hoping when the moratorium on Bitcoin mining with non-renewable energy is up in the next year or so, that we change our tune. And a lot of these sort of upstate towns, these post-industrial towns, they sort of refurbish these mills that they have from when we were sort of an industrial powerhouse and turn them into Bitcoin mining facilities, because I think it's a huge missed opportunity if they don't do so.
I think one of the real key points here is that Bitcoin is still very small. It's 1.5 trillion or so. I mean, that's massive, but at the same time, it's still at the nation-state scale. It's very, very small, right? This is a small currency, small, mid-sized bond market, and so when you're thinking about the liquidity needed to, how much in trillions are these sovereign nations holding in G7 currency reserves, right? Bitcoin's just a drop in the bucket, and so I think post 2022, after the U.S. Russia invades Ukraine, the U.S. freezes the U.S. and the G7 nations basically confiscate their reserves, say, the debt that we owed you, we're not going to pay it, essentially. That sends a really big message to China, Iran, already Russia, and, even people nations in the U.S. kind of sphere of influence that, look, money will be weaponized, as Mark said earlier. And so Bitcoin's still really small, 1.5 trillion, but when Trump comes out and again, not a shoo-in to be president, or Cynthia Lummis saying, hey, Bitcoin is a strategic reserve asset, a digital Fort Knox, if you will, I think it sends a big message to every power broker out there that says, okay, we banned it, but maybe we need to take a second look.
Yep. And if I could just add on real quickly, I mean, Bukele announced a couple years ago at this event that El Salvador would not only make it legal tender, but also put some on their reserve balance sheet. And we can see already the change that it's already started to make. And so Bukele has been going around with other nation states, smaller nation states, to kind of help them do the same thing. So it's already contagious that way. And I always thought the dollar would be the U.S. would be the last one because of the dollar. But to kind of Dylan's point, if the U.S. were to say, okay, we're going to do this, every other nation has to come on board with that. So Bukele, he'll start a ground-up movement. That's cool. I'm all for that. Obviously, we all are. But if the U.S. comes on board, I mean, that's the big domino, as we call it.
Well, let's just stay with that. What does that do to the Bitcoin market, given the scarcity of supply? Let's just say the U.S. did become a buyer of a serious size. We know now El Salvador buying 1 Bitcoin daily, over 5,000 Bitcoin. How would that shake up the Bitcoin market? Is there enough supply to go around?
Well, it would be obviously tremendously bullish. I think there's rumors of this being kind of thrown around the last couple of weeks. Even some people asking, well, is it priced in? Could it be priced in? This will be priced in flows, and I think the majority of it won't even be priced in on any marginal flows coming from the U.S. or the government. I think honestly, a commitment to just not sell the current Bitcoin would be sufficient enough to spark, to catalyze a ton of billions, tens of billions, hundreds of billions even of inflows for the long term, right? Because every power broker has to say, wait, what are they doing? Oh, they already have 200,000 Bitcoin they're not selling. We have zero. And again, I think also you have to consider the fact that there's 70, 80 million Americans that will be going to the polls voting for Donald Trump. Maybe people in your own life that have been highly skeptical of Bitcoin, regardless of their political leaning, but more on the right that says, wait, the guy that I've voted for twice, 3 times said what? And that's really significant, right? These people are in institutions at the individual level. This would catalyze a big shift.
Let's stick with the Bitcoin voter that you just put forth that argument there. What would you say to people who just think that voting solely on Bitcoin isn't the right thing to do, right? Maybe they think another issue is more important. Why should Bitcoin be a single issue? To the floor.
Well, I don't really support a single issue voting. I think that's a little bit too close-minded. And I think overall, if I could just give a message to a voter, I would say stop voting personally and selfishly and really think about the greater good. So it shouldn't be a single issue. That being said...
So a vote for Bitcoin is not a selfish vote, in your view?
Well, because as I said at the intro, that the Bitcoin issue isn't a political issue. It's really about a freedom issue. And so we should have the right to choose how we want to store our value and how we want to transact. So it's a freedom issue, not a Bitcoin issue. And so for me, that is the highest value. I think that's what we should be voting for. And I'm always going to vote for someone who gives me more freedom, not less.
Interesting. Dylan, your take on that and how you're thinking about voting at the ballot box?
I will just preface this with saying I abstained.
How are you voting? Who are you voting for? Tell us right now.
Dylan, would you care to make an endorsement?
I abstained from voting in 2020, just to be clear. I think, people vote for their interests. I mean, that whether it's economic interests, this is multifaceted, and everybody has their own things they care about. So anybody shaming someone for what they do at the ballot box or why, right? Like, this is harmful to democracy is like, well, this is what democracy is, right? And every other industry, right? For the longest time, it was the Bitcoin industry was very much kind of reactive, right? It was too small to really make a dent in the political sphere. And I think, maybe it was RFK, maybe it was the past 4 years of a bit of hostility from the Biden administration, where the industry now says, okay, well, we're going to flex our muscle a little bit, and we're going to be proactive. We're not going to be reactive, and we're going to go on the offensive, not the defensive. And so, again, I don't think, I don't know how large that single issue voter block is for just Bitcoin, but it is out there. Yeah. There is a sphere of people that will vote just on who is better for Bitcoin for the industry, and I think that industry has a disproportionate amount of capital relative to its size in numbers, and politicians, lobby groups everywhere are coming to realize that.
Well, let's stay there for a moment about the capital issue, because this has come up in a number of recent headlines. The Fair Shake PAC raising over $170 million, donating now to candidates who are pro-crypto. There's allegations from certain groups that, essentially now, would become the dark money, quote unquote, that's influencing politics. Frank, you're shaking your head there.
So I wouldn't go that far with it. Yeah, there are allegations, but I do think it's important that there's. I don't love the idea of lobbying, and I love the idea of sort of influencing politicians with money. looking at it through sort of a realistic lens. That's just sort of the way things work, for better or worse. So having some influence, and as Dylan said, sort of that being part of the proactive approach versus a reactive approach. I'm not going to say I'm behind it. I'm not a part of lobbying, but I get it. I surely get it, and I think when putting that in context, I don't think, you know, the crypto industry, the Bitcoin industry is anywhere near something like the NRA or some other massive lobbyist. So calling it sort of dark money with, you know, maybe paralleling it to bigger lobbying groups like that, I don't think it's a fair parallel right now.
Mark, your take.
Yeah, I would agree. And, you know, unfortunately, it takes money to get the message out there, and no longer, you know, that's why we need freedom to transact, so we can have a voice. And so we have to pool some money, we have to put together. But to his point, I mean, it's a very small number. I mean, look at what the unions are putting in, look at what Big Pharma's putting in, look what the finance industry's putting in, the military's putting in, et cetera, right? And so I think it's a small number. But at the same time, to Dylan's point, I mean, the industry is mobilizing, and that is a good thing.
Yes.
I believe that we should all be good citizens, and a good citizen is involved. A good citizen is paying attention. A good citizen is organizing. And so I think we should all be better citizens. I think Jordan Peterson says that, you know, if we abdicate responsibility, a tyrant will always step in to fill that role. So I'm for the industry coming together, putting the money together, and kind of putting its voice forward.
Well, let's talk briefly about some of our citizens. Of course, Edward Snowden going to be talking on Saturday. And one of the biggest reasons perhaps to vote for Donald Trump for an RFK, that Ross Ulbricht potential pardon, right? Both candidates have come forward. Let's talk a little bit about this. Why is it important, or is this a reason to vote in this election in your estimation, Dylan?
Well, you know, to be frank, I wasn't around in the Silk Road days, but I know a lot of people, a lot of freedom-minded kind of libertarian types regard Ross Ulbricht, you know, as somewhat of a hero, right? Kind of building this open marketplace that anybody can transact with anything, right? There's obviously kind of an ugly past in the U.S. with the war on drugs and you know the extent of which these things are criminalized or not. And so kind of an open freedom marketplace with freedom money was this radical idea. And, you know, obviously now Ross has been in prison for I don't know how long, right? And somewhat of a
10 years,
political prisoner, if you will, you know, getting, I think, you know, multiple life sentences for this marketplace and a bunch of allegations thrown on him, and, you know, some of which turned out to not be true. So I think, yeah, that's a big statement to be made. And I think that appeals to a lot of people. And it would be good to see, you know, all three candidates on the same page there.
Frank, Mark, your take on the Ross Ulbricht issue, potential pardon?
Well, back to freedom on the ballot, right? And, you know, we can get into the ins and outs and the intricacies of what that Silk Road was and that open marketplace, and did he facilitate drug trade and all these different things. But, I mean, he served a decade. Like, I think that's a pretty big chunk. And to Dylan's point, I mean, multiple life sentences for what? We have people that commit murder that get less than that.
Right.
And so I think maybe he should have been punished. I don't want to go in there and be judge, jury, and executioner on that point, but he served a decade.
Yeah.
I think the punishment has to kind of fit the crime, so to speak. And you know, we've already seen a lot of the crimes on drugs being relaxed, especially around marijuana. I'm for that, and so I think a pardon for him makes sense. And I think it does crystallize the base. Now, however, you know, Ross Ulbricht isn't the most famous person in the world. You know, for the inner OGs of the Bitcoin space, we get that. But I think it does again show freedom back on the ballot, and let's kind of open this back up.
Well, winding down here, of course, with this panel, but would be remiss to not talk about the institutions and how they're making their presence felt. Today, obviously, Howard Lutnick will be on the stage on Saturday. Cantor Fitzgerald CEO. The rumors that Larry Fink of BlackRock might make an appearance hasn't turned out yet, but the days are not over. I want to stick with what's going on in the markets with Bitcoin, with the ETFs, and really the big question is, you know, why is Bitcoin not higher now? We're sitting at $64,000. We've seen the inflows from the Bitcoin ETFs. For the average hodler at home who is expecting more, what would you say, Dylan?
Well, I mean, just to hit the point home again, the ETFs have been the most successful. The Bitcoin ETFs, IBIT in particular, has been the most successful ETF launch in the history of ETFs. IBIT has taken in more than BlackRock's flagship product year to date, QQQ, the Nasdaq ETF, the tech ETF. So it's been a resounding success. Bitcoin, I think, started the ETF launch around 40,000. It's at 65,000-ish now. I mean, it's obviously been a success. You know, paradoxically, the reason that we aren't at higher prices or new all-time highs today is not a result of the new institutional capital coming in. It's more of a result of the OG hodlers, slicing a bit off, right?
Blaming it on the OGs.
Well, I think this is how it goes, right? It's kind of this push-pull relationship where the people that buy the knives for years, the 70%, 80% drawdowns. when it is floating around all-time highs, when you do have, when you did give up so much to buy Bitcoin when no one else believed in it, it is okay to take a little bit off.
But would you say people, isn't there a disconnect between the billions we're seeing in daily inflows, right? The headlines now are these ETFs are taking billions, they're buying billions of dollars of Bitcoin. How does the price stay stable given those conditions, Mark?
Well, I don't blame it on the OGs. I blame it on Wall Street, right? And so they use these financial products for trade, for arbitrage, for hedging, right? And so as the asset gets bigger, the market cap gets bigger, it's harder to move, and so the volatility obviously goes down, right? So we've seen that, right? The drawdowns have become less, and the upsides have been less as well. So the volatility is being dampened, and really these institutional products have opened it up to funds, hedge funds, et cetera. And so they're doing a lot of trading. So there's a lot of hedging, right? And so they're sort of bringing Bitcoin and keeping it down within that range. So I think a lot of it is sort of that manipulated price that just comes naturally when Wall Street comes on board with that. And I would expect that to continue, right? And one of the biggest criticisms about Bitcoin has been the volatility, specifically around trying to use it as a currency because the price is too volatile. And we always say, well, once it gets to 5 trillion or 10 trillion, the volatility will go down. And that's exactly what we're seeing. And so the other thing, though, I would just point out to everybody, just keep this in mind, is that Bitcoin has big moves. And so it can sit at 60,000, 60,000, and then all of a sudden in 30 days it could be 100,000.
So you would go against this idea that Bitcoin has IPO that's had its success, its best days are behind them, Frank?
I wouldn't necessarily say, I don't think its best days are behind it. I think its best days are ahead of it. And I know maybe not in terms of like, 300% appreciations in a course of a few weeks or something like that. But to Mark's point also, when you're dealing with Wall Street, I think you're dealing with people who are of the mindset of like, oh, I just made 20% on an investment. When you're in the world of Bitcoin, making 100% on your money within a few months is sort of like the norm. Obviously losing, big chunks, a large percent of the value is also part of the norm. But I think part of it is like, oh, it's up this much over this short of a period of time. Of course I'm going to take some money off the table, and I think that's just the way that those markets work. They're a little bit mature. There's people, a lot of these funds have people to they're investors to answer to. So just saying, I'm going to let this this Bitcoin I bought at maybe 48,000 ride to like, no, I'm just holding to 250. It's just people aren't going to look at it like that, I don't think.
Well, of course, we'll be sending you over the main Nakamoto stage, Industry Day here at Bitcoin at 2024. Moments away. We want to end this panel strong. I want to talk about bullish catalysts going forward. We've talked about the dampening price. We've talked about the range-bound Bitcoin in 60,000s. What catalysts are ahead?
Well, the catalysts are either likely Kamala Harris or Donald Trump will be president. They will all be running multi-trillion-dollar deficits, and the Fed's about to cut rates into that, right? So the catalyst, as maybe boring as it is very much the same story as it's been the past few years. It's that they will continue to issue more currency. They will continue to suppress rates because they have to. Because
here early this morning, my name's Alex. I'm going to be your host.
Well, thanks for joining us. Smash that like button. We're going live to the main
stage right now. The first session of the day, we're going to kick it off with
Stay with us.
Sophie Von Leer from Strategic Maverick. She's doing a session on mastering strategic thinking, leading Bitcoin companies effectively. Everyone, please give a warm round of applause for Sophie Von Leer.
Well, hello everyone. My name is Sophie, and today I'm here to tell you about how to be a Bitcoin leader. Well, you might say Bitcoin is leaderless, so what's the point of talking about leadership? However, Bitcoin deserves all of us, to lead it to the future it deserves. So, today what I'm going to tell you about has the potential to reduce your turnover rate significantly based on research. Also, it can very much add to your bottom line. In fact, one of the research has showed that it can add to the bottom line by 20%. And additionally, it can help your organizational culture to be much more entrepreneurial and innovative. So the idea that I'm going to talk about is this persona that I have developed called Strategic Maverick. Think of it as an archetype of a Bitcoiner. Someone who can look at the future and really plan accordingly. Additionally, have that entrepreneurial maverick persona as well. But before I get into the research, the ideas, the things that I want to tell you today, allow me to tell you a little bit about myself. Well, like many of you, I came to Bitcoin through analyzing, understanding, and meaning-making of my pain and my past, and developing resilience. Growing up in Iran, I had to really, really fast learn how to adapt. And coming here as a teenager and going into engineering and getting my bachelor's and master's in engineering, and then soon finding myself leading very large engineering teams with billion-dollar contracts, really pushed me into learning how to be the kind of person that could serve and help others, and truthfully be the kind of person that I could be proud of myself. And frankly, being Persian, I always think about how to making my parents happy. However, all of this were at some point combined with my PhD in leadership and research, and doing many interventions for companies like Amazon Web Services and some of the companies you know in the Bitcoin space. So from all that experience and from the research that I've done in the space of leadership, I meditated, I prayed on how I could say something in the 30 minutes that I have that would allow you to have the most amount of takeaway and really transform you in the kind of leader that you want to become. So, and once again, I'm here because I'm a Bitcoiner and I'm proud. I'm an engineer, I manage large teams, I care about leadership, and I think I'm a decent person. So I get to that a little bit more as to why that matters. So, as I've mentioned, a strategic maverick is a persona, is an archetype, is a type of leader, is a lighter identity that I want to talk about today. I define it as the kind of people that pretty much overcome challenges and become better at life in general, but also leadership. They are the kind of people that are anti-fragile. And they are also the kind of people that have the ability to learn from these challenges and take on future with much more tenacity and grit, and overcome them by having a strategic mindset. Also, what I want to talk to you about, which is something highly spiritual for me, is having service mindset. I'm sure a lot of you here are familiar with the concept of service. After all, Satoshi, our father or mother, has taught us how to be service-oriented. He or she has left behind a legacy of service, something that we don't know how it come about or who left us this legacy, this inheritance, but because of it, we are all better. And it will change generations to come. So I think we owe it to him or her to be also service-oriented. So before I get any deeper into my presentation, I want to remind you of the 3 concepts that I've covered and the 3 trifecta of the things that would make someone a strategic maverick. So the first thing that I'm going to cover today is service mindset. And then next, I'm going to talk a little bit about strategies to be more strategic, pun intended. And also, I'm going to talk a little bit about the idea of becoming anti-fragile. Because we've all heard it's a good idea to be adaptive, to be the kind of person that learns from mistakes, but not many people talk about the tools that it requires, mental tools that it requires to be more adaptive, what I call adaptive resilience. So in plain language, I'm going to talk about how to prioritize the needs of others, and also going beyond the now and not focusing on only the tactical aspect of managing an organization, managing a family, managing yourself, and also how to evolve from pain. However, this is not just something that applies to an individual level. It also applies to organizational level. What I have to discuss today also helps organizations to be more decentralized. Well, Bitcoin is decentralized technology. However, a lot of our organizations that we see today, after a while when they grow, they become more centralized. We have a leader on top and a bunch of followers. And there isn't much of a system in place to make sure that everybody has the power of decision-making and entrepreneurship and having that initial cultures that began the organization. So hopefully, as you can see, this corresponds to service mindset. Having more service mindset allows for higher degrees of decentralization. Another thing is that having a strategic mindset allows for having more bias for action, which is something that in companies that I work with, and I've done a lot of interventions and trainings for, they have a very heavy emphasis on constantly improving and constantly thinking about what's next. And having that mentality of thinking about the risks, not only about program risks, but the little everyday tasks of how to manage your daily task and risk in mind, and also optimizing opportunities. And at last, most of us have heard of the concept of learning organizations, organizations that evolve and grow. So having adaptive resilience on an individual level very much leads to having organizations that evolve organically. So as an engineer, I couldn't resist to create an equation, forgive me. I really, really think that having a strategic action and resilience combined is not enough. And only service mindset, if you look at the equation, would lead to having a strategic maverick. But they're all combined allow for someone to embody this concept of a strategic maverick persona. Look at the cool transition I've created. Service mindset. So, service mindset, as I've mentioned before, it's a little bit of a spiritual concept for me, frankly. It is the idea of having the ability to go from disconnection to connection, from isolation to creation. From the idea of, instead of thinking heavily about your own needs, thinking about the needs of those around you, and not just your customers. A lot of us hear service as far as, oh, well, be service-oriented and meet the needs of the customers. But what I mean by that is that think about the needs of your teammates, your stakeholders, your followers, your family, and constantly going beyond the ego and thinking through the lens of another. And that requires building trust. And that definitely requires having a relational component to your leadership and just who you are as an individual. So stakeholder management is another key point here. However, I would emphasize the idea of building trust as an idea of service orientation. Well, to impress you, I tried to dig up the research on how service orientation and service mindset not only is a good thing, right? It also very heavily helps organizations to have higher performance, financial performance, less turnover rate, I don't want to bore you with this, customer satisfaction, innovation, creativity, and of course having better organizational citizenship, which what that means is that everybody feels much more heard and innovated and that their ideas are being implemented. So we covered service mindset as a philosophy, as an idea, as some abstraction until now. But I wanted to give you some tools to take away today and not just be inspired, but rather have some mental toolkit that you can draw from when you go back to your organizations, to your families, to your communities. I search my soul very heavily in finding the best tool that I can bring today, since I've done this for many organizations, and it usually is a training that takes weeks to be implemented for someone to change their mindset to be more service-oriented. However, one tool that over and over again becomes useful and I see the most amount of impact is the concept introduced by Edgar Schein. Dr. Edgar Schein is the father of organizational culture. Very cool guy, I would say. I've met him several times in my life. And he created humble inquiry, which is a form of asking questions. It sounds simple, I know. Everybody tells you ask more questions, ask better questions. But humble inquiry very much embodies what is best about service orientation in the way that actually opens up the space for people to not only express themselves, but also ask the hard questions. And for the person that is asking the questions to be truthfully curious. A lot of us are born in a state of mind where we are absolutely clueless. I don't know about you, but I definitely was born in a state of mind that I didn't know what's going on around me. And I was extremely curious to learn about the environment, the people, and the things that allowed me to grow, survived. Having that degree of curiosity, it very much allows for people to have the right persona for asking the right questions. And it allows for other people to really, really get to know you better. So it actually deepens relationships on a fundamental level. Some of the examples of asking the right humble inquiry questions that really allows for that relationship to develop is, how can I better support you in achieving your goals? So if you can see here, it's not about making assumptions as what the other person's goals are about, but rather focusing on, again, service mindset of the individual's goals and only acting as a conduit, as a service-oriented individual for that energy to flow in a way that would allow them to grow, allow them to be empowered and inspired. And other questions that I'm not going to read from the screen. But what I want you to take away from this is the idea that every minute of every day is an opportunity to ask the kind of question that can change the trajectory of your life. And pray you embody human that goes beyond just this moment in time, but becomes eternal and meaningful for everybody involved. The next concept that we discussed in the triad of being a strategic maverick is the idea of taking strategic action. A lot of us in our organizations, in our families, in our individual lives are so busy thinking about the now. We are so busy thinking about the tactical stuff. What am I going to do today? How am I going to accomplish my to-do list? How am I going to answer to the thousands of emails sitting in my inbox? And rarely we think about the future and the ideas that comes after now. So having a strategic plan in mind and having a strategic action, so it's not just a plan, so we are moving on from the mindset to the behavior, is a very important idea for accomplishing that persona of someone who's continuously improving and evolving. Well, again, I sat down and tried to think about all the trainings I have given as a consultant and as a coach, and summarize these ideas of a strategy to these 6 cardinal rules of thinking strategically. I think the number 1 is anticipating shifts. I think the most important thing is to know that change is constant. I mean, as Bitcoiners, we all know
everything. Welcome back to the Mara News Desk at Bitcoin 2024, powered by Bitcoin Magazine. Once again, I'm your host, Pete Rizzo, editor of Bitcoin Magazine. The topic now on the desk is Bitcoin and crypto. Of course, it's Industry Day here, and we're shortly finding, as we'll see on the main stage today with the announcements, that these two sides of the industry are quickly coming together, maybe clashing no more. We've got some new guests here. To my far left, Gwart, host of The Gwart Show and Gwart on Twitter, and Christian Carolus, Director of Financial Freedom at the Human Rights Foundation. So guys, want to kick it off. What's the current state of play in Bitcoin and crypto, and are these two sides of the industry, which were formerly foes, coming together in a time of peace? Gwart.
Yeah, I think that certainly appears to be the case. It's long been said in Bitcoin that anything that happens elsewhere will be eventually brought to Bitcoin, and I think we're starting to see this play out. And I think there's a tremendous amount of new development, I would say, in the past couple of years that seems promising to some extent.
Well, let's start there. What has gotten people excited? Because, flashback to Bitcoin 2023, and these would have been fiercely divided camps. We would have had, Bitcoiners been staunchly, no NFTs, no, quote, use cases on my blockchain. What flipped?
Yeah, I mean, I think certainly the ordinals and inscriptions had the first and most sort of poignant impact on this, and especially kind of ripped away some of the some of the notions that this wasn't going to be feasible on Bitcoin. So I think this certainly kickstarted it, and then there's been obviously a movement since to just push expressivity and increasing development in this space. So this is that's what I would say was certainly the catalyst.
CK, your take?
Yeah, I mean, I don't think that Bitcoiners, let's say the ones that have been here for a while, ones who identify as Bitcoiners necessarily like this development. But I think what's interesting is that Bitcoin itself is resistant to its biggest fans, if you will, the purists.
Permissionless nature. Right?
So, you know, for me, I personally see Bitcoin as, one, it is permissionless technology, and this is kind of proof of permissionlessness. And then two, Bitcoin adoption actually happens in a viral and unpredictable manner rather than a logical manner. And so while confusion happens, while not on my blockchain happens, while people may get riled up, ultimately Bitcoin just is. And the way that it moved forward, it kind of it just emerges.
So, of course, we're talking about the launch of ordinals last year in January 2023. We saw the launch of runes this year in April 2024. Both protocols, I think, have a common theme, right? They're trying to bring, quote, use cases from crypto to Bitcoin. Are there other use cases that we might see? What's the state of play? Are these both successes? How do you see the market evolving? Are we trending towards these use cases coming back to Bitcoin, or how do you see the market, Quart?
Yeah, I mean, I think the ordinals are they're here to stay, and I think that there will be, I'm not saying any of the current ordinal iterations, but I think that the general idea of digital art is here to stay. I'm quite interested in still seeing what we can do in terms of pushing the L1 scaling wise and what is feasible now. I think there's been this inclination as of late to, go the route of L2s and really sort of borrowing these ideas from Ethereum, the roll-up centric roadmap, and I'm still excited about what's feasible with HTLCs, DLCs. I mean, I still think there's room to push there. So it's sort of in a interesting spot.
Well, I think the critics here have a little bit of a hard time seeing the forest through the trees. And the question that we get a lot is, what's the prize, right? Why do this? It's a nice right now. There's Bitcoin and there's crypto. Bitcoin is this solid digital gold. Crypto is where we try all the experimental new things. Why erode this divide? What's the upside here? CK?
Ooh, I don't really know the answer to that question. Ultimately, I think that what inscriptions and ordinals kind of showed is that there was actually a deep desire within the crypto community to be able to align with a lot of the benefits that Bitcoin offered, and it kind of gave them something to scratch their itch, both with 21 million, this is immutability, as well as you can kind of do, the use cases that excite you. Ultimately, I truly think that what we're seeing emerge in front of us is the failure of Ethereum, and Ethereum really breaking down from a narrative perspective. I think Ethereum is breaking down from a sound money perspective. They tried that narrative, and Ethereum is breaking down from a coin issuance perspective too, with other competitors like Solana kind of squeezing them as well. So ultimately, we're kind of seeing this bounce back.
So more to do with the failures of the crypto system than maybe the strength of Bitcoin. Guart, your take on that?
Yeah, I mean, I would. That is slightly more caustic than the terms that I would use maybe, but I do generally agree. I think there's been this idea, we'll observe what happens elsewhere, right? Like I was saying before, we'll observe what happens elsewhere, we'll bring this to Bitcoin. Well, I think there's some maybe slight shift back now towards realizing that perhaps the use cases that seemed viable elsewhere aren't quite as viable as we would have thought, and it could in fact be many houses of cards, and there may be small incremental improvements perhaps to the tech stack that we've seen elsewhere, but writ large, we haven't seen massive unlocks outside of Bitcoin.
Well, according to Galaxy Research, Bitcoin L2s raised $95 million in Q2. That's a 100% increase from Q1. So obviously there's venture demand here. Well, so why are investors investing in these projects? What are they investing in? Guart, your take.
Yeah, I mean, I think we've seen this resurgence, right? And we've seen this resurgence in interest from developers. There's long been this idea that developers left because there's nothing to do on Bitcoin. Well, now we're seeing this come back to some extent. It will be interesting to see how these play out. It's not immediately clear that there's a trustless bridge mechanism yet to really put Bitcoin on these sidechains. And I would just say that there's also been this idea that, well, you kind of need to prove product market fit elsewhere.
Right.
And I'm not entirely sure that product market fit has been proven elsewhere. So it'll be interesting how.
Well, how do you assess product market fit with, let's just take an example of meme coins, right? If you look at the crypto space right now, the craze is we're going to maybe see Hough Girl here later, just launched a meme coin. We have Scottie Pippen, formerly of the Chicago Bulls, tweeting about Satoshi Nakamoto yesterday. Can something like a meme coin have a product market fit? Is this just malinvestment?
Yes. No, I mean, I can answer that. Look, we live in a high-velocity trash economy where people are struggling to get alpha. People are struggling to...
Or they want an easy way to get ahead.
Yeah, I mean, they want to get ahead, and they're trying to get out of fiat, and money printing, getting closer to the money printer, a.k.a. being a VC and investing in L2s early, or being a degenerate and getting into meme coins early. It's all very logical when you think of it as a frame of... the dollar and all these other things, are kind of creating this incentive to want to gamble. So, I think, people want to get close to the money printer. That's it. So that's why there's all this malinvestment, is because there's, these are tokens that are liquid, and it's just the meme or the use case or the narrative that is viable and is part of kind of like this this most recent trend.
Well, very Bitcoin defense there, of course, talking about central banking and some of the things we talk about in Bitcoin. Is that how it's seen in crypto, Gwart? How are they looking at what's going on in the meme coin phenomenon? Is there disdain there for what's going on? Is this success for them? What do you?
Yeah, I mean, I certainly think so, right? Like, there's been 5 years of launching these governance tokens and utility tokens, and people are realizing they can launch these tokens themselves. They can get on one of these websites and literally launch a token in 30 seconds themselves. And so people are, looking at this and saying, why are we enriching the VCs when we can literally create these ourselves? We can print these out of thin air too, right? And so yeah, I mean, there is a, I think, and they always say don't say that this time's different, but I think there's really increasingly a movement within the crypto community to look at this sort of barbell strategy of Bitcoin and meme coins, and the stuff in the middle is probably not that useful or valuable.
Crypto has always just been the memes, Pete, and that's the reality. Now it's just becoming more and more acknowledged, and people are just going straight for the money printer.
Well, of course, we're going to be sending it back to the main stage here in about 5 minutes. We'll be hearing about Bitcoin mining then. Topic now is Bitcoin and crypto. Smash that like button on YouTube. If you're following us, of course, we're bringing you all the action from Industry Day here at Bitcoin 2024. The topic now is what we're seeing behind us. We're looking at the booths. A lot of Bitcoin L2s here. The question that I would have maybe for the panel is, what product are they selling? What's their goal in being here? Gwart, maybe take us into the minds of these young entrepreneurs who are here.
Yeah, so I mean, there's been this emergence of DeFi, right? Like, decentralized finance. And there's various things you can do with your tokies. You can borrow against them, and you can trade them, and you can leverage them up. And this hasn't really been feasible with Bitcoin prior, and now we have some, bridges. Not sure they're trustlessly verified, but we have bridges now. And I guess there's this rationale that people want to do this with their Bitcoin. And I think from what I can tell with a lot of these L2s, they're replicating a lot of what we've seen elsewhere. So we'll see, how it works on Bitcoin. It'll be interesting to observe.
Well, I guess the question, again, that many people are asking is this progress? Is this progressing towards something? What's the ideal end state here? Is there an end state? Or is it a barbell, as you said, we'll be left with Bitcoin and crypto, and we'll just be back to the divide?
Yeah, I mean, I think that I kind of zoom out on this, and I think, like, what does the average person need, right? Like, the average person
They need a Hough meme coin.
Well, they're not financial engineers, right? Okay. So in terms of the total addressable market of a lot of DeFi, like, maybe the total addressable market for DeFi are the people who are currently in DeFi. These people who want to be financial engineers on their own. Now, does this present somewhat of like a vampire attack on traditional finance? We may see. I mean, I think stable coins are a Trojan horse in this sense. And there's obvious, we shouldn't be using wires anymore. We shouldn't be using ACH. Like, stable coins are so clearly better. But, for the rest of this stuff, like, 99% of the world does not need to leverage long on perps on a decentralized exchange. They don't. And we need to be realistic about that. So in terms of, like, I view the total addressable market of Bitcoin as, or the trickle-down effects of the total addressable market of Bitcoin as everybody in the world, truly, right? I don't necessarily view that with decentralized finance, let's call it.
Well, the Ethereum ETF went live this week. Obviously, maybe disappointing numbers for some in that space. Maybe a little bit lower percentage of the Bitcoin volume. So, what kind of narrative here is Wall Street hearing? Right, I think that's a concern when people hear about building on Bitcoin L2s, is that there's narrative confusion, narrative pollution. We're diluting Bitcoin's narrative. Is this something that you guys agree with?
Yeah, I'll try with that. So, when I look at Bitcoin and then I look at how people view Bitcoin, I think people view Bitcoin through their own pre-existing lens. And that's why you kind of see this trend of people being primed at certain levels and kind of getting into Bitcoin. So very early on, it was the cypherpunks, and then, maybe it was the libertarians and so on and so forth. So, ultimately, I see like this narrative pollution is actually just appealing to the different
adoption, maybe.
This is appealing to the different mental models of people, and then you got to meet people where they're at and then move them towards what Bitcoin is truly offering, which I think is actually a definancialization. So not a decentralization of finance, but a definancialization of the world, and making the world a more sound kind of like economic system.
But isn't the trend here, I think, obviously towards more ETFs, right? I doubt that the Ethereum one will be the last. We'll see kind of Wall Street pour into this industry. Don't they need to have a narrative to buy, right? Doesn't there have to be a reason to buy some of these products, Gord?
Yeah, I mean, I think, obviously we have our biases, but I would generally put most of the rest of crypto in a different category, which to me is just tech, right? And tech continues to improve, tech continues to iterate, and there will always be a faster L1. There will always be a more capital efficient perp dex, right? So my point with this is just saying that, you can sell the tech with these ETFs, and I don't see any issue with that. I don't see why Solana shouldn't have an ETF. I don't see why, for the next 5 years we won't have many ETFs coming onto the market and selling the idea of tech.
Yeah, I want to jump in here too. I've been long predicting that the crypto apparatus is actually a DDoS on the SEC and these securities laws. And the reality is that a lot of these laws are they're not consistent, right? So the reality is that the SEC is unable to actually kind of enforce what's on the books already, and I would say that the ETH ETF is actually really a sign that they're bending the knee now, and that they're probably going to see a flood of illegal securities start to be relabeled or whatever, and truly the SEC just can't handle the sheer volume of this issuance, and I think we're entering into a new paradigm of what people should be allowed to do as retail.
Well, that brings me to my last question here before we head back to the main stage. Obviously, Donald J. Trump will be here on Saturday. A big push from the crypto industry to, as you said, change securities laws. There's been some support in Bitcoin for this, some dissent. I think, why do you see Bitcoiners championing action against the SEC when Bitcoin is a commodity, it's already regulated, and to many extents, there's not much to gain from some of these new laws from a Bitcoin perspective?
Yeah, I mean, I think that stable coins to me are a good example of something that's like very clearly obvious and needs some regulatory oversight or whatever, and they will be, like I said, the Trojan horse. And I think that Bitcoiners maybe in the past have been a bit critical, calling a lot of these things illegal securities, but I think that maybe there's perhaps a realization that Bitcoin is going to win on its own merits, and that we are no longer concerned about the tech. So we'll see if that's
CK,
accurate.
your take on the regulatory environment, how it relates to Bitcoin and crypto before we go back to the main stage.
Yeah, I just think that some people don't have enough confidence in Bitcoin, and they want to lean on regulators to do their job when they don't even realize, like I said, that these regulators are being DDoSed, and they just don't have the bandwidth to deal with it. So I think that this technology is overwhelming, and ultimately Bitcoin's going to win because it's a better system, not because a regulator locked down some illegal security.
Well, Bitcoin colliding with crypto, Washington colliding with Bitcoin. We're going to be sending it back to the main stage now for nation-state game theory, energy infrastructure. You're going to be hearing from Harry Sudock of Grid Infrastructure, Jeff Lucas from Bitfarms, Lisa Hough from the Bitcoin Today Coalition, of course moderated by Troy Cross of the Bitcoin Policy Institute. Stay tuned with us. We'll be back with more special guests all day. We're going to send it over to the main stage. It's Industry Day here at Bitcoin 2024. And if you get some extra time, head over to bitcoinmagazine.com. Pick up a subscription to the Bitcoin Magazine latest issue, the privacy issue on stands now, talking about the Samurai case. But again, the topic we're going to, nation-state game theory, happening now at the Nakamoto stage. Stay with us. Smash that like button. Hit that subscribe. We'll be back with more after this.
So what is money and how does it get value? Paper money has value because someone says so. Bitcoin is different. It's like digital gold. It has value for many of the reasons gold does, but that's only the start. It has a limited supply, only 21 million, so no one can decide to just print more. Because no central authority controls it, it can never be shut down. And unlike with banks and credit card companies, you don't need approval to use it. It puts the power back in all our hands. Bitcoin lets you control your finances. Kraken lets you buy Bitcoin. Kraken, see what crypto can be.
Why?
What's the second best? There is no second best. We will ensure that the future of crypto and the future of Bitcoin will be made in America.
Why?
What's the second best? There is no second best. We will ensure that the future of crypto and the future of Bitcoin will be made in America.
So yeah, today we're going to be talking about runes.
We're talking about runes.
The first.
Oh, very cool.
You're out there, John. He wrote that provision as an intern for the White House.
That would basically ban Bitcoin mining in the US. I like John, I love John, but I think that was a mistake. On the other hand, we have Donald Trump saying that all the remaining Bitcoin should be made in America. A great phrase, but implausible. Anyway, wildly different postures, as you can see. And so our panel is really pushing into the mystery of why different nation states and different nation state actors would take such diametrically opposed postures towards Bitcoin mining. And just to give the game away right at the beginning, we want to talk about, first of all, the importance of energy itself for nation states in different aspects. And secondly, we want to talk about the relationship between Bitcoin mining and energy infrastructure, which is maybe more complicated than you would think. So first of all, I just want to do an introduction of my panelists here. I'd like each of you to tell us who you are and what your background is and what brought you here. Why don't we start with you, Lisa?
Good morning. I thought this was going to be empty. Thank you all for coming so early this morning. I'm Lisa Hough. I'm Ella Hough's mom. She asked me not to say that, so I had to be sure and say it this morning. Former energy trader, grew up in Houston. My dad was in the energy business. My whole life has really revolved around the energy space. And there's this enormous connection between energy, national security, and what our Bitcoin miners are doing to make us a more resilient world, not just a more resilient country, but a more resilient world. So delighted to be with you guys and to be with these esteemed fellows today.
Good morning, I'm Jeff Lucas. I'm the CFO for Bitfarms, and I appreciate all you being here for the Red Eye special. So Bitfarms, we're about almost 12 exahash now, 21 by year end and 35 plus by next year. We will shortly have about 600 megawatts of capacity here. We operate in 4 countries, Canada, the United States, Argentina, and we have a lot of growth going on right now and a strong presence in Paraguay.
I'm Harry Sudock. I'm the Chief Strategy Officer at Grid, soon to be joining CleanSpark, and I'm really an energy and prosperity maximalist at the heart of it. And so this topic is particularly germane to sort of my Bitcoin journey and education. You know, I didn't come into this as an energy expert by any stretch of the imagination, but the relationship between better money and better electricity and the intersection of those two ideas is really what gets me most excited.
Well, Harry, why don't we start with you, since you've just described yourself as an energy and prosperity maximalist. Let me take the other side. Don't we need to conserve resources generally? And why are you an energy maximalist? Shouldn't we be kind of conservation maximalists?
So the short answer is no. We should not be conservation maximalists. We should produce dramatically more electrons in the most clean and responsible way that we know how as a people, because there's a classic chart which basically shows per capita GDP across one axis and megawatt hours per citizen along the other axis, and the relationship between prosperity and energy production is ironclad. There's no daylight between those two ideas, and so it's a burden upon us to figure out how can we generate dramatically more so that we can deliver dramatically more as global citizens to bringing the world forward, whether that's across technology spectrum, whether that's across food and education and all of the biomarkers of human flourishing. The energy density per capita is the sort of single numeraire for that idea. And if we don't do that, we're going to owe a great debt of shame to future generations.
Yeah, I've seen the statistic about how much energy we use per capita in the U.S. And if we were to convert that into human labor, it would be something like 500 or 600 personal servants for each one of us to live the way we live. So in some ways, we all already live like kings relative to the entire history of humanity. and that's brought to us in ways that most of us, don't understand or even acknowledge. It's completely invisible to us. And maybe in the future, the number of personal service equivalents will be vastly higher if we develop more energy. Lisa, you mentioned the national security and energy in your introduction. What does energy have to do with national security? I thought national security was about like weapons and the military.
Yeah, I think that's the common the common image, right, that comes to mind when we think national security. We all view these tanks and troops lined up, but national security is three-pronged. National security is a strong standing military. National security is diplomacy, which is what's one of the most hopeful things about this incredible conference this year, the number of diplomats that are coming to speak and to listen to us. But the third thing is your GDP, right? What does a country make, and who are its people? And so when you have countries with abundant energy that they're harnessing, that they're embracing, that they're growing, that they're making more resilient, you have things like the ability to have refineries in Texas or sheet metal manufacturing in the middle of the country, car makers, Coca-Cola bottling plants. All of those things require us, people. When we go to work at those places, at any job, we are putting money in our state coffers. When we put money in our state coffers, we're supporting energy infrastructure, roads, schools, etc. When we think of poor countries, we think of countries without that standing infrastructure. But really what you're looking at is a country with low access or a reduced harnessing of available energy, and thus you're limiting the capabilities of your population. So national security is three-pronged. It's military, diplomacy, and it's energy infrastructure.
Excellent. Okay, I want to shift us to the relationship between Bitcoin and Bitcoin mining and energy infrastructure. I think that the stances that different governments and political actors take towards Bitcoin mining differs in part because some of them think it's bad for energy. So they would agree. Some people would just think like Bitcoin mining is bad because energy is bad. They just kind of hate. They're energy haters. They're conservation maximalists and energy use minimalists. Other people who oppose Bitcoin mining oppose it because they agree that energy is good, and that's why they don't want to give it to the Bitcoin miners. They see Bitcoin miners as stealing energy from other more productive uses or better uses of energy. And so I'd like the panelists to talk about the relationship between Bitcoin mining and energy infrastructure. I'd like to go right back. I'll get to you, Jeff, but I'd like to go right back to Lisa for a second on the relationship between Bitcoin mining and energy infrastructure. How is it that Bitcoin mining could be a positive for energy infrastructure rather than a negative?
Bitcoin mining is just this genius of a thing, right, that's seeking out cheap energy. And so you all are probably familiar with a lot of the examples that are happening around the world where they're harnessing water, they're harnessing geothermal, et cetera, right? But there's also so much infrastructure within a current energy grid that's not being utilized, right? We're not monetizing every molecule. And so a few examples of that might be a natural gas processing plant where those are typically built out at multiples of the amount, they're attached to a grid, they're built out much larger than what capacity is actually occurring today, right? They're built with a vision that there will be more demand in the future. So what you have there is basically wasted capital because you've had a private company or maybe a public company go to the capital markets and build this infrastructure and then not utilize it. So there are places all in the energy system that is standing today.
What percentage do you think of like, for instance, natural gas? So you have a background in energy. What percentage is wasted right now in the U.S.?
I don't know what that number is. I was speaking just anecdotally to a power generation company, and this goes back 3 years or so, and I was saying, you guys should really look at Bitcoin mining because you're a power generator, and a non-zero % of the time, you're paying to have your excess power taken. And this happens whether or not you are running wind turbines or it's a natural gas power plant. So I went to this company, I said, what is that actual number? And they said 4% of the time. So if we think about the amount, what would be the percentage that Apple would pay a consumer to take an iPhone? It's 0, right? Apple would never pay somebody to take it, but we have energy companies who are paying to have excess power taken. Well, now there's Bitcoin mining, right? And it's accretive. It's a fine tuning of their balance sheets to really make productive use of every dollar that they've invested in capital infrastructure.
Great, Jeff. Can you tell us you have an operational perspective on this because you actually do it? And can you tell us what it looks like in the real world to improve energy infrastructure with Bitcoin mining?
Sure, I'm glad to do that. But let me step back, just for a moment, because actually, Harry and Lisa, you gave a great construct there. So let me try to apply a practical context, because we have and we're building out several hundred megawatts in Paraguay. So to play upon some of the statistics that you mentioned, Harry, here, Paraguay has about 6.8 million people. It has a GDP of roughly around 2 years ago, about $43 billion. Per capita income was about $600.
Oh my gosh.
So clearly, political stability and economic growth and prosperity are paramount naturally in people's minds here. And there's no doubt whatsoever that energy infrastructure is absolutely key behind all that being successful here. The challenge, as you point out, and we've learned in our discussions with you, Harry, is that you design an energy environment or infrastructure for the peak load period, not for the average usage. And as was pointed out, as you just said, that could be 3 to 4% of the time here. So that's not a very efficient use of capital in capital-constrained countries such as Paraguay. The political leaders recognize just how important that infrastructure is to advancing their own longer-term goals here. Sometimes they have shorter-term consequences as a result of that. But that aside here, they realize just how compelling it is. Now, what role does mining play in that? Well, you take a look at our industry. Several years ago, in the earlier days of our industry here, the goal was to mine as much Bitcoin as you can, take your miners, run them 100% of the time or as close to that uptime as you can achieve. But the industry and the technology have become far more sophisticated now. With the firmware that's in existing miners, with additional software you can develop, you can fine-tune the performance of those miners. So rather than a country having to actually build out for those peak periods, which only occur 3 or 4% of the time, they can be far less. They can rely upon us, one, to dial down the power when it's not needed, or secondly, to utilize that extra availability and keep the system balanced and manage the loads much more effectively. So that's truly the beauty that miners bring, and we're seeing that more and more every day. And when we have discussions, for example, with the political leaders in Argentina and Paraguay, they're new to this. But they glom onto this very, very quickly. They recognize how the fact is they can improve their infrastructure, their political stability, and their personal goals, while at the same time doing it in a fashion that minimizes the capital deployment required.
Harry, do you want to talk about what you wish people understood about how energy is produced and how Bitcoin mining fits into that?
Yeah, I think that we suffer societally from sort of there used to be an illiteracy crisis across the planet, and now I believe there's an innumeracy crisis where our relationship to the numbers and the system engineering principles that really govern our lives is just this sort of opaque wizardry that we don't deeply understand anymore. And so when you think about what an energy system is, right, there's only 3 roles in the system. There's a turbine that spins with a big magnet, and that's how the electrons are created. There's a transmission system that's designed to move those electrons all over up to about 500 miles. And then there's a spider web of delivery systems at those endpoints that make sure those electrons get into houses or very large conference centers, depending on where you may be. So, you know, those are the three fundamental roles, and there are constraints amongst those roles where it's very expensive to move power over a great distance, and it's very expensive to build the infrastructure required to deliver. And so the cost of those investments end up getting passed back to the users. So I had a conversation with an East Tennessee utility executive, and it was right when inflation was peaking over 9%, and he called me and said, you know, I'm very concerned because I'm being put in a position where I only have 4 options. Option 1 is I degrade service. I deliver lower quality because it's too expensive to continue to deliver the quality that I have in the past. Option 2 is I raise prices and I pass these costs back to individuals. Option 3 is I add debt to our local economy and borrow money, which ends up getting passed back to all the users. Or I find someone like you who's going to buy this power on a flexible basis, give it back when I need it, and generate the incremental revenue required to make the system investments such that I'm able to deliver the current equivalent quality without raising costs. And so, forgive me, but I'm the son of a CFO who tells me with great regularity that revenue cures everything. And so from a utilities perspective, when they meet a Bitcoin miner, rather than saying, is this fake criminal internet money, or saying, aren't you just a power hog, or whatever other kind of fudster type of approach that they would typically take, they should come to us in those conversations and say, oh, you're the revenue. You're the revenue I haven't been able to find for the last 30 years because there's no flexible load customer that looks like a Bitcoin miner. They're not out there. And so revenue cures everything because these are systems that require continuous reinvestment. If you look at our transmission lines, they're woefully underinvested in many, many parts of the country. And that means that the quality of life in all of those places, they deserve better and they can get better. But we need to go there, we need to buy an enormous amount of their power, and we need to give all of that power back when they need it. And we're going to be able to deliver prosperity and print enormously profitable businesses along the way. And that's why we all do what we do every morning.
Let me add to that point. We spend an inordinate amount of time educating folks, including the political leaders, as to the points that you just made, which are absolutely brilliant. Let me focus on Paraguay. They share the output of the 3rd largest dam in the world, called the Itapu Dam, about 14 gigawatts. They share it with Brazil. The problem is they don't have the transmission and the distribution infrastructure that you spoke to. They can take advantage of it. They sell about 90% of their output, their allocation, back to Brazil for a fraction of what they can get, actually, for what we pay as miners here. So we bring them double benefits here. One, we bring them the revenue figure, Harry, to which you spoke to. But secondly, the flexible demand. Again, that minimizes the extent of the capital investment they have to make to build out that electrical infrastructure and achieve that political stability and international independence.
Well said. Lisa, I wanted to come back to you about Texas in particular. What is Harry gave us some alternatives to Bitcoin mining.
Yep.
But how does it look, or how has it looked in Texas?
So I wanted to add on to something Harry had said. Probably you all are aware that Warren Buffett has, said really not flattering things about our industry. And I'm going to tell you what he tried to do in Texas that is very illuminating, no pun intended. In 2021, after we had this horrible winter storm and so many Texans lost lives and we suffered without power, Berkshire Hathaway Energy swooped in to speak to our state and said, hey, we will build peak, we will come in and we will build 10 peaker plants for you. And we will outlay this capital. It was like $50 billion. We will coordinate the capital. We will make this investment in your state. These plants will be 50 megawatts apiece. And for that, we want a guaranteed rate of return of about 9%. Now, what this would have done, and Texas, by the way, said, yeah, no thanks. First of all, we believe in free markets. But what that would have done is, for me as a ratepayer, it would have added a number at the bottom of my bill every month that was like $1. And the nail salon across the street in the strip center, theirs would have been about $8 or $10. And the Coca-Cola bottling plant that's on the freeway near my house, theirs would have been $100 or $200, right? So it would have been like this insurance almost against the power going out. Okay, so that's 500 megawatts, 10, 50 megawatt plants. But then you have Riot, who in Rockdale, Texas, went to the capital markets and they coordinated money and they put shovels in the ground all by themselves, no burden to me, the ratepayer. And they built a 500 megawatt Bitcoin mining facility, which when that storm hit, you know what they did? They turned it off. They put all that power back onto the grid, no burden at all financially to me. So why does Warren Buffett, you know, curse our industry? It's look at the incentives, right? He's somebody that is trying to push upon us an incentive-based, you know, another burden for a taxpayer. That is not a free market. That is not what we stand for here in the country with the strongest capital markets on earth.
I want to ask each of you one last question. I think the panel so far we've gotten energy is good. Energy is good for national security. It's good for humanity. We've also gotten Bitcoin mining is uniquely good for energy. It's good because it doesn't just use power, it pays for power, and paying for revenue solves everything. But it's also good because it is a unique buyer of power, one that is flexible, and grids are sized to peak loads, which happen very, very rarely. And Bitcoin mining can fund the infrastructure that meets those peaks without adding to the peak, and that's unique. My partner at Bitcoin Policy Institute, Margot Paez, and I just wrote a piece, wrote a report called The Locust and the Dung Beetle about AI and Bitcoin mining, which is trying to make exactly this point, that AI, at least in its current incarnation, is inflexible and it's a buyer of energy, but it's also adding to peak. And Bitcoin mining, while it's buying, is not adding to peak. And that is all the difference. I want each of you, if you can quickly, to turn to the prescriptive side. If nation states would benefit by having a flexible buyer of electricity, what are the sticking points for that actually happening? Why isn't it happening in some places and happening in others? So you can address this however you like. Advice to lawmakers, like how do you set up a state to welcome and best use this form of energy? Or whatever, final quip, final thought. Lisa, I may have put you on the spot here. I didn't prep this, but.
Stop watching the mainstream media.
That's pretty good.
Mm-hmm. Yeah. So we seek to maintain a very balanced portfolio with our data centers that we have in Canada, the United States, Paraguay, and Argentina. But really what gets us most excited in so many respects are the opportunities that do exist in places like Paraguay and Argentina. But you need to keep your eye on the long ball here, because there are challenges here. In the shorter term, you have the risks, as a lot of investors call it, of the stroke of the pen, that overnight you're going to have a legislative action that's going to result in either a tighter market here or higher pricing. But by playing a key role in educating the political leaders of these countries, you can go a long way to capturing that long-term value. That value is immense. It's under-recognized by the street right now and provides a wealth of upside potential for those of us who are playing in that arena.
I think that essentially the technical innovation has already happened, right? The technology is here, it's delivered. We have the ability to generate, hundreds of gigawatts with nuclear power, to build enormous dams, to build, incredible peaker natural gas plants, all over the world. The technology is solved. The Bitcoin mining network of data centers solved. We're flexible. We know how to do this incredibly well. It's done. The area for innovation that remains is just contractual innovation. And that's a place where it's a little trickier because it's not about writing a new line of code or taping out a new semiconductor. It's about getting the stakeholders and interested parties to understand your worldview and understand your track record of delivering successful outcomes. And so the soft skills required to deliver contractual innovation are where we're going to turn our focus to next as an industry broadly, because the technology is here. We just need the contracts to run larger and faster and better.
Excellent. Well, this has been a really wonderful conversation with a high-powered group of people. I have to give a special shout out to Harry's mom, who's apparently a fan of mine. Hi. Thank you very much, everyone.
Okay, thank you. Good job.
Oh.
Welcome back to the Mara News Desk at Bitcoin 2024, powered by Bitcoin Magazine. I'm your host, Pete Rizzo, editor of Bitcoin Magazine. We're joined by a new round of special guests here. Alex Thorne, head of research at Galaxy. Margot Paez, fellow at Bitcoin Policy Institute. You just heard nation-state game theory, energy infrastructure on Industry Day here at Bitcoin 2024. Now we're going to switch the topic a little bit. Backing the dollar with Bitcoin. So we'll have a big speaker here tomorrow. You may know him, Robert F. Kennedy Jr. This has been his key policy proposal, or one of the things that differentiates him now from Donald Trump, who we'll hear from on Saturday. Backing the dollar with Bitcoin. Why do we want to do this, Alex? Why is this a good idea?
Well, RFK's proposal, right, is to partially back the dollar, partially.
Right.
So with Bitcoin and I think metals, too, precious metals, proposal that
basket of assets.
His uncle, John F. Kennedy Jr., or John F. Kennedy, apparently wanted to do something like that. That's what RFK has said. I wouldn't back the dollar with Bitcoin.
Okay.
I think it's a terrible idea. I think it
coming out strong.
It will immediately crash the value of the dollar if you start formally buying Bitcoin for the purpose of protecting the dollar, hedging debasement, whatever it is. So some of the proposals I've seen include putting Bitcoin in the Exchange Stability Fund in the Treasury Department. Terrible idea. That will just if you bought corn in that vehicle, it would crash the dollar, right? Better to buy Bitcoin as a nation state for geopolitical reasons, in my opinion, for national security reasons. There's no need to literally crash the dollar as you buy Bitcoin. I think it obviously does make sense to hold scarce assets, any nation, to hedge from the likely debasement of your currency forever, but there's no need to accelerate it as for that purpose. So I'm more of a supporter of legislation that would say create a special purpose vehicle like the SPR.
Maybe like the Lummis bill that was proposed yesterday.
Yeah, I haven't seen it yet. I saw it was reported. I've seen two things. One, I saw somebody said that it would be that the Fed holds the Bitcoin. Also seems like a dumb idea to me. And then the other one was somebody mentioning the Exchange Stability Fund inside the Treasury. I don't like either of these. I think you actually should have like a multi-sig that includes the Congress as well, and it should be specially authorized.
Distributed amongst the government.
Yes, like the Strategic Petroleum Reserve.
So Margot, you're on the research side over at the Bitcoin Policy Institute, interfacing with Washington. Is this idea viewed as a crazy idea there, or fringe? Is it mainstreaming? Your take?
I think it's very fringe, especially for Democrats to even consider backing the dollar in that way. But, you know, this is a very, very unique moment in history right now. We had President Biden drop out just months before the election in November.
Right.
Donald Trump was nearly assassinated.
Right, yes.
I mean, who knows? I mean, everything is up in the air. Anything is possible at this point.
Well, I think it hits at really what people are concerned about this year. I think more than anything ahead of election 2024 is the economy, right? People are feeling like they aren't getting ahead. And one of the reasons that we talk a lot about Bitcoin is the U.S. dollar, right? So it brings us back with backing Bitcoin with the U.S. dollar. It seems like people want solutions for the U.S. dollar. Is there a solution here? Is the U.S. dollar slowly trending towards zero?
Yeah, I don't think there is a solution. I think, look, every reserve currency in the history of the world has eventually failed, right? Except for the dollar, but that's the dollar.
There's still time.
Yes, there is still time. I think you'd be crazy to think that it will last forever, right? You'd have to believe in the end of history to believe that.
Okay.
So yeah, I mean, I think it's pretty much inevitable. If the Dutch would have loved to own like the French livre right? And the French would have loved to own, knowing what they know now, like the British
Welcome
pound.
to Bitcoin 2024.
It really is this like shell game, like confidence game with these. Again, the second you start hedging your own currency's value, it's going to, you effectively ensure that it will collapse.
Well, Margot, I guess the question is there a sense in Washington that the average person isn't getting ahead, that the dollar is the problem? Is there even acknowledgement of that?
Ooh, that is a very, very, very deep question. I mean, my sense is that most people have not yet connected an issue with currency or fiat currency in particular and their economic problems. I think most people and most politicians are really more focused on job creation and uplifting the middle class. I believe that was also one of Kamala Harris's recent campaign platforms, that she's making that central to her platform. So I don't see the concern around the dollar itself becoming a central theme in this election or for people just yet. But if there is some major economic crisis, that could change, where it makes that distinction very clear.
Well, I think one thing I wanted to point out is we just really haven't seen a convergence of Bitcoin and the economic issues, right? We've seen Trump come out, talk about financial independence, talk about energy independence, but there really isn't a lot of talk about how the average person can use Bitcoin to get ahead. Why is that, Alex?
Yeah, I don't think it's well known. I agree with Margot that there's no interest, I think, in Washington to have a discussion about the value or longevity of the dollar. I will say there's tons of interest in talking about inflation and how damaging it's been, and so it only seems like a mere hop, skip, and jump to get from there to actually talking about Bitcoin's value as a scarce asset as opposed to simply as
certainly inflation driving a lot of consumer behavior in Bitcoin, a lot of people dollar cost averaging into Bitcoin. Maybe you could speak to those trends that you've seen, Margot, or just how your life has changed as someone who owns Bitcoin.
Oh, wow. Yeah, I mean, for me, it's completely made me rethink saving, rethink about, valuing the future investments over the present. And I think all of that is really valuable for people when they learn about Bitcoin, when they realize, okay, actually our currency, fiat currency, this debt money actually forces us to spend now and forces us to be very wasteful. And when you are able to take that step from fiat to Bitcoin, you have this realization that there is a better way to organize your life and to change these fundamental incentives, and a certain part of that can be from switching out the type of currency or type of money that you're using. So there's definitely a lot of value there that just is not yet mainstream enough for people to get. So far, it's really all about investments, speculation still, ETFs, and that's more taking people towards store value. But I think when we get to the point where if we were to have like an inflation crisis, right, I think people would start to see and value things a little bit differently, and they may think of Bitcoin more as than just an investment, like it's actually something that they can use in their everyday life.
Well, I think the worry here is this a marriage of convenience, right? Does this result in real change? By this I mean, Donald Trump supporting Bitcoin, RFK supporting Bitcoin, or post the election, do we go back to what's good for the dollar is what rules in Washington? Alex, your take?
Yeah, no, I think that's absolutely what happens. I think this is purely politics. I think, look, it's better to have at least a laissez-faire approach to Bitcoin than the current, I would say, mostly hostile environment we have from the U.S. government today. But I wouldn't expect a national Bitcoin policy to truly emerge from any of the candidates. In the end, right, power in Washington is derived partly, in large part, by the dollar's dominance. That's sort of why I'm arguing, too, that if you own Bitcoin as a nation, the U.S. were to add it as a reserve currency or hold it strategically, it shouldn't do so in relation to the dollar. It should do so because other nations are holding it, because it might be used in trade.
Are holding it, right?
That's what I mean. It should be more of a geopolitical thing, and that way you could probably do both, stack it as the government and you protect the dollar's value in the scheme of things. I mean, I really think that the second you start backing the dollar with other things now, it's going to start losing value almost
Well,
immediately.
I'll switch to another thing that we haven't really heard Donald Trump talk about, and that's the exemption for small purchases, right? Capital gains still on every purchase. There is an imbalance between the Bitcoin and the U.S. dollar, and Bitcoin is in some ways not really competing as a currency at present, but could. Margot, your take on that?
Yeah, I think Bitcoin could definitely compete as a currency in the future, but I do think that we need to see the dollar, the strength of the dollar really, really decline to that point where people really say, okay, I need this alternative. On the other hand, there is this whole movement around BRICS, and so I think that's very interesting as well in this whole kind of multipolar world that is developing. And a lot of countries do want to get out of the dollar hegemony, so you know there is a lot of potential there. I think if there is some way for other countries to compete with a different currency, that may actually leave an opening for Bitcoin to come in. But right now, I still see the dollar as very, very strong in that regard.
Yeah, I agree, though. I think that you would rather, theoretically, if we admit with ourselves that the dollar won't always be the reserve, then wouldn't you prefer a global decentralized digital scarce commodity to say like your adversary's currency being the one? I think it's really hard to get people to go from step 1 to step 2 there in that thinking.
Let's go with a question from the YouTube channel. Of course, we're broadcasting live on X, YouTube, and Rumble, taking questions live. So if you're watching, follow along. One of the thousands of people, shoot us a question. We'll bring them up. This one from a listener, viewer. They want to know what the Bitcoin and crypto markets are going to look like after the selection. I'll add a modifier there. What's the best case scenario, right? We know things are bad currently. There's some good, right? The ETF's going live. There's some bad, which we just discussed. But what's a win here for Bitcoin and crypto look like in November?
Dozens of companies go public, by the way, I would say. A change of leadership at the SEC. If somebody like Hester Peirce were put in charge of the SEC, one of the most interesting things people don't talk about, I think you will see dozens of IPOs from the Bitcoin industry, from the crypto industry.
Isn't that happening currently? We just heard Fold go public yesterday.
I'm pretty sure the only publicly listed companies in all of crypto are
the
Coinbase, the miners, and Fold now, and maybe 1 or 2 other SPACs, but the only Fold and Coinbase are the only 2 venture-backed companies to ever go public, basically, in crypto. All the miners are not venture-backed, basically. Galaxy is public in Canada, but we're not venture-backed, right? So I think that would be one of the main things. You could imagine everything from, like, you know, Bitcoin brokerages to, like, literally the surveillance companies, Chainalysis, perfectly strong business, right? Like, they I don't see any reason why, but the SEC is.
So you're saying public markets benefits, lots of new options for stock
and then,
buyers.
of course, more ETFs. I would
and
say
more
most
ETFs.
likely,
Okay, interesting. Margot, your take on how Bitcoin wins in November?
I think Bitcoin wins in November if a government doesn't try to impose too many regulations on how people can use Bitcoin. I mean, I think this is great. Right now we have this issue of Bitcoin Magazine, and it's the privacy issue, right? I just put that up there.
Beautiful.
Oh God, I look terrible with this hat on. But yeah, the privacy issue, right? And I think that's a really big issue right now. We've had people arrested with Samurai Wallet and all this happening, and I think that Bitcoin wins if we win in these trials, and Bitcoin wins if these regulations do not stop people from using Bitcoin in any way that they want to use it. But I do agree that this is, I think we're entering a future for this whole industry that is really about to blow up and go mainstream. I think the ETFs really showed that.
Well, I want to stick with your hat, of course, make Bitcoin great again, but for many, the red hat in America has become a divisive symbol, right? So I think people might look at the Bitcoin conference, they might see the hats in the crowd, they might see Donald Trump, and they might think, you know, maybe this isn't something we should support. You mentioned Kamala Harris, the current presumptive nominee. Is there a risk here that essentially there is retribution from the industry based on what's happening here in Nashville at this conference? Do you get that sense, Margot?
Okay. Do you think, sorry, could you say that again about
Harris? So, you know, retribution, essentially, could you see a new administration say, hey, you know, you supported the wrong candidate, sorry, you know, you haven't, you're going to stay in the doghouse, proverbially?
I don't know. You know, I think sentiment changes very quickly depending on what happens, what statements are made. So, I don't know. I think I keep an open mind on that.
No retribution here from a forward administration, maybe a Democratic win in November. Your take, Alex?
I think I think there's a risk. I think I don't think anybody should really want Bitcoin to be partisan in American politics.
I think there are contingents who do believe that.
Yeah, I don't think you should, I guess. Let me rephrase it then. Yeah, you definitely shouldn't want it. It's obviously the network has no concept of partisan or any kind of politics, right? It's not aware that Bitcoin isn't doing anything like related to politics.
You don't think Satoshi wanted us all to vote for Donald Trump in 2024?
That's a good question.
Yeah, actually, I think it was on the March 7, 2008.
He posted that on Bitcoin Talk.
It was like around 12:30 p.m. and he said, "Look, in 2024."
Well, maybe let's talk about what
we should Photoshop that up.
What would Satoshi think? Satoshi Nakamoto, of course, the founder, creator of Bitcoin, still unknown, anonymous out there. What would you think his perception would be of the situation, Alex?
I think this is well beyond what Satoshi had envisioned. I've read all of the Satoshi commentary. The closest is, how Finney talked a little bit about sort of really wider adoption, but I think this is way beyond what anyone really thought was possible, to be honest.
Huh. Margot?
Yeah, no, I don't think that this was anything that Satoshi could have possibly imagined, that it would have gone this big, and then that it would have become literally, really a part of the 2024 presidential election in the United States. Even reaching that level, I think that was beyond anything he could have envisioned.
Well, we got some fans in the chat here. Timmy Rich, Bitcoin should not be partisan, all caps, wholeheartedly endorse that. But maybe backing up a little bit to 2023, 2022, one thing we haven't touched on the desk today for those viewing at home is FTX, right? The corruption in crypto that we saw. Sam Bankman-Fried, 32 years old, sentenced to 25 years in prison, had to pay back $11 billion. I mean, really this, for a lot of people in Washington, was the introduction to Bitcoin and crypto, right? That the failure of FTX. Is this still a concern? Has the industry moved past this? Is Washington still thinking about what happened with FTX? Alex, Margot?
Yeah, I would say nobody is more to blame for FTX than Sam Bankman-Fried, but I think it's also fair to put some of the blame at the foot of regulators in the United States, right? This was an environment where it was impossible for a lot of people to access. They were known for leverage and like multi-collateral, using multiple types of collateral to back your levered positions, right? Something people wanted, and they couldn't build it here, so they built it on an island right next door. They, I think if there was a regime that could regulate exchanges in a way that didn't push them out of the country, then you would see more business be done and more safely. Instead, people were pushed offshore to things that had no regulation at all. So I think there's a case to be made that a clearer regulatory situation in the U.S. for crypto exchanges could have helped prevent an FTX. But nobody is more to blame than Sam himself.
Margot?
Yeah, absolutely. And also, tying this back into the whole political discussion, Sam Bankman-Fried gave a lot of money to politicians, especially on the Democratic Party.
Almost all of them.
He was including, even a very progressive candidate out of Florida, a young guy, Gen Z. There is a big concern, I think, still about the future here, about whether you can have another Sam Bankman-Fried. And just the concern around the ties between these very corrupt individuals and members of Congress or at other levels of politics, right? So I do worry about that we are not done with seeing these types of people in the industry.
Let's talk about, obviously, self-regulation. The industry always getting better, always improving. Bitcoin always getting better and always improving. How has the industry changed and responded to the FTX collapse? Has it gotten better, Alex?
We haven't seen the widespread emergence of something like proof of reserves, which I still am a big supporter of. I get made fun of sometimes by friends of mine.
We did see yesterday.
They're like, nobody cares about it.
Metaplanet and Hoseki tying up on the partnership
yesterday,
a publicly traded Japanese company. So, few and far between.
I would love to see that more widely adopted. I think that's one of the clearest thing. We know now that Sam didn't have anybody's Bitcoin. There was no Bitcoin at the exchange in general. So, you'd have seen it at least that if this was somehow the standard in the industry. We've seen some improvement. I think Kraken has done some. We've seen OKX has done some. But you can do this in real time. You can do it on a daily basis. That would be helpful. I would say there has been, I think, ostracization of bad actors more. But yeah, I don't think the landscape has fundamentally changed that much. You still have plenty of offshore exchanges. I would say Binance being put in surveillance by the U.S. government.
Of course, Changpeng Zhao, CEO, currently in prison in California.
True. He's got to be getting out any month.
October.
Yeah. So
he's 1 month into 4 months.
I would say,
if you're out there watching along in California, you're thought of fondly.
Yeah, I think that actually Binance coming under more regulation and having this, whatever it is, a consent decree or whatever they came to.
So you see
that's
regulation
very
as
positive.
a solution to this era of the crypto pirate exchange?
Yeah, I mean, not all regulation is bad. Good regulation does a very good job, and I think around these exchanges we may need some regulation to protect those retail investors now. And I think that might help mature the industry and send a message like, this has to stop.
Well, let me take into a point here. We haven't talked about Gary Gensler and his chairmanship of the SEC. I know he's not a popular guy, Mr. Gary, if you go on X, a lot of fire Gary Gensler hashtags. But really the question I would ask is, why is he not more popular in the Bitcoin community? I mean, to an extent, he has followed through on a lot of things that Bitcoin maximalists have wanted, right? He has been very difficult on alternative cryptocurrencies. He has put a very high bar in place for them being regulated. And is there a concern maybe at this conference, Bitcoin 2024, that goes away after November and alternative cryptocurrencies compete with Bitcoin equally? Alex, your take?
That's a good question. I think you're right. There is a likelihood.
Is it striking too much of this marriage of convenience that we have?
I think I think you're very correct in the implication of the question, which is that if a new, more laissez-faire, lenient SEC as it relates to crypto comes into power, then it absolutely will be supportive for altcoins in general, right? That's the SEC's never gone after Bitcoin. They've never alleged that Bitcoin's an unregistered security, right?
Currently regulated by the CFTC.
I would say they did do a lot insofar as, yes, Gary Gensler is the
but
chairman who brought the ETFs.
Hasn't that been good? Shouldn't we have supported that in Bitcoin? Why haven't we seen support for that?
I don't know. I think Bitcoiners in general are skeptical of government officials, and despite the fact that there have been wins for Bitcoin under Gensler's watch,
the ETF
I mean,
well,
right? The ETF, acknowledging that Bitcoin is more of a commodity than a security, and making that distinction. Like, I think all of that is fair, but I still think that people are skeptical, and so they don't want to put all of their eggs in one basket and just think that the government is never going to change their mind on Bitcoin and that it's always going to be good.
Let's just take a bill like FIT21, right? I look at a bill like FIT21 from a Bitcoin perspective, and I see there's not a lot really maybe to even like here from a Bitcoin perspective. This is a bill that largely deals with making alternative cryptocurrencies considered decentralized, considered not securities, putting registrations on investors, accredited investors, right? Limitations on how much crypto assets you can buy. Alex, your take on that bill?
I mean, that FIT21, other alternatives being considered in the Senate, they would regulate spot Bitcoin as a commodity and give spot oversight to the CFTC. Keep in mind, this is an agency that doesn't regulate any spot markets currently, right? Okay. It's unprecedented. You can't regulate the trading of spot corn because it happens on a farm between two folks. Where's gold? Where's gold's primary trading venue? Does anyone know? It's pawn shops all over the world.
Probably one of these
million stores in India, right? Like gold is traded all over the world. There's no way to actually regulate a global spot market of commodities. So I think that is problematic for Bitcoin in particular, and any others that end up falling into that definition.
But I guess the question here is, should there be the bipartisan support that we've seen for some of these initiatives?
I think people just want some certainty, because regardless of the I think Gensler, keep in mind, he'd be dragged kicking and screaming into the Bitcoin ETFs. He has been judged by courts across the country as wildly overstepping his power. So I think it's reasonable for Bitcoiners to look at a regulator effectively making the rules up as they go for a multi-billion-dollar industry being
as
bad.
I said, Bitcoin is already regulated, right? It's been regulated since 2013 as a commodity, right? So what does Bitcoin gain from sort of?
No, I agree. I don't think it gains too much. I think, but if you put some regulation around the exchanges themselves, which yes may trade altcoins, but they also trade Bitcoin, I think you could get some consumer safety out of it. But I agree, those bills are primarily about clarifying what is and isn't a security, and there's no question about Bitcoin's security status. So it's not,
Yeah, I mean, I'm concerned about any legislation that comes up to try to regulate Bitcoin itself. It concerns me because I worry that there will be some kind of fine print in there that may take away our ability to use Bitcoin as a medium of exchange, or to use it in a way where we don't have to KYC ourselves. That part concerns me about that, and I think that also concerns a lot of people, even though there is a desire for certainty. It is a certainty also that
I can do whatever I want with my money.
Well, I guess it gets to the larger point here, which is, this conference, particular Bitcoin 2024, Bitcoin 2023, you think about, it's been very much Bitcoin and crypto, right? We've seen a stark division, maybe a wall between those two parts of the industry. It seems like with some of this regulation, there's a peace. Maybe you can explain why that is, Alex.
I mean, Washington policymakers mostly see they may know that there is a difference, but they're not receptive to a Bitcoin isn't crypto argument, right? They see this as a one big industry, for better or for worse. So I think it's important for Bitcoiners to understand that. And they know this. We see this all the time, right? You see the big venture firms, the big exchanges have a lot of lobbying activities in Washington, mostly not related to Bitcoin, because again, Bitcoin's status is mostly cemented. I totally agree with Margot. The biggest, and I don't believe this is in FIT 21 or the DCCPA, which is the old one from the Senate, anything around KYC, mandatory KYC, inability to run a node, basically what Elizabeth Warren has been suggesting, that is terrible. That would be bad for Bitcoin.
Boo,
the Digital Asset Anti-Money Laundering Act is her bill, and it's an absolute disaster.
Yeah, John Deaton will be here running, of course, against Elizabeth Warren, so plenty of politics to come. If you're into that subject, it'll be a long 3 days. So, sorry, you were saying, Margot, about Elizabeth Warren.
Oh, I was just saying boo, Elizabeth Warren, for so many reasons, not just about Bitcoin.
Let's talk about her anti-crypto army, right? Because a couple years ago, this was lauded as the what should be the Democratic faction that they should support. Is the anti-crypto army here? Do they exist?
I think that they received a lot of pushback from that, and she's not saying too much about the anti-crypto army anymore. And I think that's because there's a lot of people within her own party who do like crypto or Bitcoin, and it's just not popular. There was a study that came out of the Nakamoto Project recently that looked at that they surveyed Americans, and they found that actually Bitcoin is nonpartisan. So it doesn't really matter if you're a moderate, a Republican, a Democrat, an independent. For the most part, people are open to Bitcoin. So for the Democrats to stake everything and for Elizabeth Warren to stake an entire re-election campaign on being against cryptocurrencies, I think that's a huge risk. And I think they're seeing that. They're seeing young people, by and large, are really open to crypto, open to Bitcoin, and they're just risking completely alienating a very large portion of the population.
I want to read some fast facts from the, I think, Harris poll you mentioned, but 33% of voters believe Bitcoin and crypto will be a factor in their choice of candidate in November. 77% expected their candidate to be knowledgeable about crypto, and roughly 20% of Republicans and Democrats surveyed own crypto. So those are some of the numbers that support the bipartisanship. Is that what you would expect?
Yeah, it's on with 20%-ish from both parties, so we'll call it 20% of Americans. I think that's actually pretty reasonable guess. I mean, I've been, there was the presidential executive order, 2 years ago, where they claimed, I think, 18 million Americans or something, which was low, I thought, but about, so 10, 20%, I think that's about right. The real question for the election, obviously, is these swing states. And I have started to see some polling that they do
What do you identify as swing states these days? I know it's changed a lot.
Yeah, Pennsylvania, Michigan, Wisconsin, Arizona,
Virginia now,
possibly Virginia, or, but even, it depends, yes. I mean, I think if former President Trump had picked Governor Youngkin from Virginia, they could have maybe put it in play. North Carolina, I think, possibly in play. It's been mostly red, but as a Democratic governor. But the last time it went blue was Obama. So yeah, Ohio, Pennsylvania, Wisconsin, Michigan, Arizona, maybe Nevada, right? Those are. Luckily, there's a lot of Bitcoiners in Nevada. I was in Vegas recently for MicroStrategy's conference, and there were Bitcoiners everywhere. So.
Well, some states going blue, some staying red. Obviously, we hope that the USA goes orange. That's the theme here. We're going to send it over now to an interview at the Human Rights Foundation. You're going to be taking a look at the floor here at Bitcoin 2024 Industry Day and some of what's going on amongst the attendees. We'll be right back after these messages or after this interview. Keep it right here on Bitcoin 2024.
Welcome to Bitcoin 2024 in Nashville, presented by Mara. I am here right now with CK over at the HRF. CK, why don't you tell us a little bit about what you guys are up to?
Yeah, so the whole team is here. We got our booth. We're talking about how Bitcoin fits in with financial and human freedom and how it's a liberating technology for the world. HRF is a pro-democracy nonprofit, and we focus on supporting democracies and fighting authoritarians. And no one is really talking about in that sphere how Bitcoin and how money and how finances fit into supporting liberty and supporting individual rights. So we're trying to spread the word. Our financial freedom team is focused on both Bitcoin development as well as Bitcoin adoption. And yeah, we're excited to be at the biggest Bitcoin event in the world.
Love that. And for those listening at home, the HRF does stand for the Human Rights Foundation. For many of our audience, you guys are all in America. There's a Bank of America ATM around the corner from you. For most of the world, however, they do not have access to this. Can you share a little bit about, some of the priorities you guys have this year, what you guys are trying to build towards?
Yeah, I mean, look, we're giving away a lot of Bitcoin to open source developers, to community builders, and people who are helping adoption. We have the Bitcoin Development Fund, and every single quarter we're giving close to 10 Bitcoin to those different kind of projects, usually 15 projects a quarter. Tons of folks are applying, and yeah, I mean, our priorities, again, are to spread awareness of Bitcoin and make Bitcoin as useful and accessible to people who are in need. You talked about, not all countries have a Bank of America ATM or Apple Pay. There's actually an amazing quote from an Iranian. He was responding to a Bitcoin comment about how Apple Pay is everything better than Bitcoin. And he was like, look, I live in Iran. I can't use MasterCard, Visa, Apple Pay, any of that. I can use Bitcoin. And that is the key, is that Bitcoin is permissionless. Bitcoin is globally available. And look, we got this shirt. Bitcoin is breaking chains, okay? So Bitcoin is breaking chains, and that is what it's all about.
Love that. All you open source developers out there, keep that in mind. Let's go change the world. CK, thank you for your time, brother.
Thank you.
Welcome back to the Mara News Desk at Bitcoin 2024, powered by Bitcoin Magazine. Pete Rizzo, editor of Bitcoin Magazine, now joined with fellow editor Erin Van Werdum and the author of the Genesis book, now on sale on Amazon, at bitcoinmagazine.com, wherever books are sold. And this is going to be a special segment we're calling Bitcoin Basics. Obviously, we're all excited about Bitcoin 2024. Donald J. Trump to speak on Saturday. So many speakers to come, a lot of education to do. Erin, welcome. And we're going to be talking about the basics of Bitcoin.
Yes. So maybe you're new to Bitcoin. Maybe you just heard about Bitcoin. You're tuning in. Maybe this beautiful man right here just told you.
I attracted you to the industry, yes.
Just taught you about Bitcoin. Well, one of the first things you'll learn about Bitcoin is that there are only 21 million Bitcoin. There will only ever be 21 million Bitcoin. So why will there only ever be 21 million Bitcoin? The short answer is, about the exact amount, we don't know. The creator of Bitcoin, Satoshi Nakamoto, he did mention at one point that 21 million seemed like a right ballpark. Not too many, not too few, about right, but why 21 million exactly? Why not 20 million? Why not 100 million? Why not 10 million? We don't know. Maybe 21 was Satoshi's lucky number. Maybe he was into blackjack. We don't know. What we do know is how we get to 21 million. So, new coins are mined every 10 minutes. And there, in Bitcoin, we have this thing called the halving. So in the first 4 years of Bitcoin, there were 15 new Bitcoins mined every 10 minutes. Then after 4 years, this amount was cut in half, and it was 25 new Bitcoins every 10 minutes. Then it went to 12 and a half, etc. Around the year 2140, there will be 21 million Bitcoin. Now, what's more important than the exact number of Bitcoin is the fact that it has a fixed supply. Many other currencies, fiat currencies, dollars, euros, they don't have a fixed supply. They have a flexible supply. They can grow. There can be more. There's more dollars printed every year. There's more euros printed every year. Bitcoin has a fixed supply. Now, this is a somewhat controversial point within for economists. Not all economists like this. So many economists today think that the money supply should grow as the economy grows. So that way you have a stable purchasing power of your money. But there are also economists that say no. A fixed supply is actually better. That way, money works more like a ruler. Like if you want to measure length, you don't want the centimeters on your ruler to change every day. If you build a home and you use a ruler with changing centimeters, you end up with a crooked home. So in the same way, if you see money as a ruler for value, a fixed supply is a much better way to measure value over time. From an individual perspective, it's also nice that there's a fixed limit. If you have fiat currencies and more dollars are being printed, that means your dollars decrease in value. They decrease in purchasing power effectively, while Bitcoin cannot be debased. So say you have one Bitcoin, you will have 1/21 millionth of all Bitcoin that will ever exist. So from an individual perspective, there's a good reason to hold it. It's kind of like digital gold in that sense. The trade-off is that Bitcoin can be very volatile. So there's this famous story about Laszlo Hanyecz. He was a computer programmer who in 2010 bought 2 pizzas for 10,000 Bitcoin. Today, for 10,000 Bitcoin, you can buy way more pizzas than that. But there's also periods where Bitcoin goes down in value, sometimes even by 50, 60, 70% in a couple of weeks. So this fixed supply does make Bitcoin somewhat volatile. But that is the trade-off. Do you want a form of money that can be debased? Or do you want a form of money that cannot, even if it's more volatile? And over the years, the value of Bitcoin has, for the most part, gone up pretty spectacularly. So that's why Bitcoin has a limit of 21 million. Over to you, Rizzo.
Here I thought it was about 64-bit integers and the complications of computer science. Erin van Werdum, of course, the author of the very great Genesis book, The Story of People and Projects That Inspired Bitcoin. You can get that on newsstands, or not newsstands, bookstores, wherever they're sold. BitcoinMagazine.com, of course, selling it as well. Highly recommend that read. Erin, we'll be back with you with more segments later in the day. We're going to a word from our sponsors now. We're live from Industry Day at Bitcoin 2024. Stick with us on YouTube, Rumble, and X. We'll be back.
Anyone can be a part of the Bitcoin economy. It's like a good church.
Because it's an ethical ideology, there are many people that feel very spiritual about it.
I think that Bitcoin has those characteristics to be not just the most Islamic form of money, but the most Jewish and the most Christian form of money as well.
Bitcoin is just another step in the technological development of how we can serve God better.
It is trying to remove politics from money. Bitcoin can make the world a better place.
Fired up, I love it.
So what is money and how does it get value? Paper money has value because someone says so. Bitcoin is different. It's like digital gold. It has value for many of the reasons gold does, but that's only the start. It has a limited supply, only 21 million, so no one can decide to just print more. Because no central authority controls it, it can never be shut down. And unlike with banks and credit card companies, you don't need approval to use it. It puts the power back in all our hands. Bitcoin lets you control your finance. Kraken lets you buy Bitcoin. Kraken, see what crypto can be.
Welcome back to the Mara News Desk at Bitcoin 2024. We're back. Research at Galaxy, Margot Paez, fellow at Bitcoin Policy Institute. And of course, you just heard Erin van Werdum talk about why 21 million politics, the specter of the CBDC, right? We haven't yet heard this at this conference, haven't yet talked about it on the desk, but really a big igniter of this political discussion that's been going on is this fear that government will control our money, will wrap their tentacles around our purses, pocketbooks. Alex.
I mean, being opposed to the CBDC is the first policy that Trump spoke about that's related to crypto. I think the interesting thing is you have calls for this mostly from left-wing politicians. The Fed is completely ambivalent to this. They commissioned a report that they put out 2 years ago about whether or not they should do a CBDC, and the report basically failed to identify any problem to solve and did not identify blockchain technology as a potential
let's
solution.
back up. What is a CBDC for people at home? Why should they be concerned?
Yeah, that's a good question. I don't think actually a lot of people know. I know the Fed doesn't really know. I don't see a big difference necessarily between, say, USDC, Circle stablecoin, a privately issued, but right, because banks are intermediaries that enter money into the money supply, right? The Fed doesn't. You don't go to an ATM and take out money from the Fed. So personally, I don't think it would be that much. A regulated stablecoin could look plenty like a CBDC. I think what people are afraid of is that it would be individuals having accounts at the Fed. So now you have the Federal Reserve monitoring all your payments. But I think when the rubber meets the road, your bank's already doing that. From a privacy standpoint, I guess it's probably slightly worse. People also worry that they would create things like ticking clocks on money, right? They give out the stimulus during COVID, and they say if you don't spend this on, food and Wheaties, and in the next 100 days, it expires.
So you're saying the CBDC as a boogeyman, perhaps oversold. Aaron, would you agree with that take that in many ways CBDCs are already here with the crypto dollar apparatus that's run up around the globe?
Yeah, I have a slightly more nuanced take, or maybe not more nuanced than you, but
let's not compete on nuance here, folks. Yeah.
I think a CBDC can be an extremely scary thing depending on how it's implemented. If it's implemented, as you mentioned, that there are certain restrictions on your money and that everything you can do can be monitored and censored, and there's this central body that's controlling all of this, well, that's a very dystopian future. That's exactly what Bitcoin is trying to prevent, essentially. But if you look at the current situation with commercial banks, a lot of that is already possible. You can already censor, and the transactions are being monitored, and now these commercial banks have a big role. So if we forget about Bitcoin for a second, then CBDCs could technically be an improvement over the current system if you implement it with strong privacy and sort of democratic control over how it's managed.
And of course,
now,
work at MIT ongoing on that right now.
I was going to say Project Hamilton at MIT was pretty well designed, I think, had some good privacy guarantees.
Yeah.
But again, that's just it was a science experiment from the Boston Fed.
Yeah, so it depends a lot on how it's implemented. It can be implemented in an extremely dystopian way, but there are also more nuanced interpretations.
Margot, maybe you can speak to the larger concerns. Maybe they mentioned a lot of specifics, but what are the big threats, concerns? What do we not want with our money that CBDCs inspire?
Yeah, I think CBDCs are concerning because, look, you have, first of all, the government is already very centralized in terms of power. And we can make all of these claims like, yeah, if you do it just the right way, it'll be okay. If you have just the right politicians in charge, it will be okay. But there is nothing is forever, right? So you could have the greatest president ever who is pro-privacy, who understands all of these benefits, but they're only going to be in the office maximum 8 years. And then you have the other bodies, you have of Congress, you have the representatives, you have the Senate, right? And they can make decisions as well that could supersede past decisions around a CBDC. So I think that's a really big concern for people. It's just that there's no permanency there in terms of trust. And that trust can be easily violated. And unfortunately, in particular for the US government, there is a long history of violation of trust in terms of privacy. I mean, the Snowden files, Edward Snowden leaks really showed us very clearly that the governments are spying and collecting all of our data. And so for the government to be now in charge of our bank accounts, that is a big risk. It is true. It is a good point that we have these massive banks already that surveil us to a certain degree. They're tracking our transactions. But on the other hand, you do have competition there. And a secondary concern is that if you have a CBDC, what does that mean for the rest of the banking system? Does that minimize competition? Does that centralize banking into one power? All of that is very concerning, and I think that is why it is so much better to have as many banks as possible, as many people being their own bank with Bitcoin. The competition is really what drives the innovation and drives the message about where people are at in terms of their concerns, right? So, my ability to choose between a CBDC and Bitcoin, well, obviously I'm going to choose Bitcoin. But if I don't have that choice, that is truly a very dystopian future.
So I guess the question here is, do we support legislation against CBDCs? Do we need direct action to stop this now? Is it that pressing of a concern, Alex, Erin?
I mean, I think you're right, Margot, that there's a slippery slope here, right? And when one party is in office and they take, so I would say, sure, you could right, Warren Davidson and Tom Emmer.
Right, we have seen multiple
those
proposals,
bills.
Right?
I think that's fine. I don't think there's any need for. I don't think for a CBDC. I don't think the banking system is, waking up saying, "Gosh darn it, there's got to be a better way for me to get money in and out of the Fed." Jay Powell has explicitly said that they want to maintain the two-tiered banking system, meaning the relationship between the Fed and the commercial intermediary banks would remain the same. So it wouldn't, therefore, be in their construction that we all have an account at the Fed, which I think is good for privacy, but it also leaves you wondering, well, then what the hell would it even do? Like, why even bother?
Why bother?
So I don't think the risk is very acute. I don't think there's a big risk if you want to formally ban them. I don't think it really matters. But I think it's more likely to happen if you don't ban it. So why not?
So just ban it.
Yeah, just ban it, and then
just to be sure.
Well, they should get specific authorizing legislation to do it in the first place.
Erin, you're of course not an American, coming to us from the European markets. How is it looked at over there? Obviously, there are more progressive central banks in Europe moving on this now.
I must admit I don't keep track of where all the CBDC proposals are. I'm from the Netherlands. From what I understand, the central bank there is working on some proposal, but it has a limited, like you can only have up to like 2,000 euros worth of the CBDC, so it's very limited. This is designed to prevent bank runs. While you could argue that if the CBDC has any purpose, it is sort of to keep banks honest. So the one sort of restriction they put on it is not even doing that in that sense. So yeah, I mean,
well, we've got a comment from someone in the channel. I just want to read. It says USDC is the new new CBDC. So as I said, in many cases, maybe this is the specter of CBDCs is already here. What do we think about USDC and USDT and these dollar stable coins? And are they the more pressing concern than a CBDC?
Oh, yeah, absolutely. I do think that they are a pressing concern because I think that it is a way for the dollar to remain a reserve currency or to maintain dollar hegemony by having these stable coins. And so I think this is something that is really underestimated by the public, that they think that just because it's a type of crypto or cryptocurrency that it's that it's got all the properties that Bitcoin has. I don't think it is. I don't think they do, and I think that it is much more of a threat and much more realistic probably for the dollar to remain relevant into this new age of cryptocurrencies.
Getting a lot of nods here, Alex.
Yeah, I agree. I think stablecoins are very supportive for the reach and power of the dollar. I think that's why policymakers in the United States should support them. They extend the reach of the dollar. They're also buyers of U.S. debt, which is needed. Most of the proposals to actually formally legalize them would require that they're collateralized primarily with short-dated treasury bills, right? So like 90 days or less, I think, was one of the proposals that I saw from the House Financial Services Committee. So they're absolutely supportive of the dollar, and they absolutely are not Bitcoin, right? You don't have any of the same guarantees. They're not uncensorable transactions. Tether is blocked and frozen like thousands of addresses that hold it at the request of the U.S. government, so and others. So, but I mean, I think in many ways a digital wallet is more convenient than. I mean, I was just traveling abroad, and it's really not that easy to use dollars and convert on the fly. If you're not carrying the local currencies, it's still not that easy.
And of course, here at the Bitcoin conference, lots of Bitcoin being accepted at the vendors on the floor. We're going to go to the floor right now with one of our event attendees and vendors, Foundation Devices. We've got Q Gahimi out there on the floor interviewing foundations. We'll be right back after this break.
Thanks, Rizzo. I'm here live at the Expo Hall at the Bitcoin 2024 conference in Nashville, joined by Seth for privacy at the Foundation booth. Seth, why don't you let the viewing audience at home know what is Foundation, what do you guys do?
Yeah, absolutely. So we're pumped to be out here, the biggest booth we ever had. We're booth 211 right by the Nakamoto stage. Really, our focus is trying to make self-custody of Bitcoin as simple and approachable as possible. We're trying to make it something where when you actually need to use Bitcoin, when you actually need to withdraw from your exchange, whatever, you don't want to cry every time you pull out your signing device, your hardware wallet. We want it to be something that is really enjoyable and as easy to use as possible, while also being something that can scale up to as advanced of a Bitcoiner as you become. Because we all understand that rabbit hole is really a journey. When you start, it's so daunting to just think about self-custody, but then when you've been using Bitcoin for years, it becomes very much second nature. You want to do more advanced things like child keys for your hot wallets, Lightning, coin control, those kinds of things. So we've really built an end-to-end suite of products with Envoy as a mobile wallet and a companion app for Passport, and then Passport, our hardware wallet. So really our focus here, we've got demos of both. We have a large portion of our team here to walk people through what both devices are, see how the interactions work, see how the air-gapped communication works, those kinds of things. And yeah, good time so far.
Wonderful. I mean, look, nothing more stressful than that moment from sending it from the exchange to your hardware wallet. But be sure to check out Foundation, their devices. If you're here at the conference, come check out their booth. Back to you guys at the desk. Awesome, Alex. Thank you so much, man.
Yeah, absolutely.
Good. Awesome.
Thanks, guys. Thanks. Appreciate it. Get better at that during the day.
I definitely feel like I can handle having an earpiece and someone talking to me while I'm doing
mixing
that.
service were arrested in April of 2024. We're talking, of course, about William Hill and Keanu Rodriguez, who are currently being tried in the state of New York for their Bitcoin mixing service. Samurai We've seen bipartisan support for both of them from Senators Cynthia Lummis and Ron Wyden. But obviously, a lot of concern here about the criminal activities that Bitcoin and crypto enable. This case caught in that crossfire. Alex, Margot, Erin joining us to talk about this subject. Who wants to fill the audience in on why this is such an important issue that it would make the cover of a Bitcoin magazine?
I can do that, yeah. So far the presumption was always that developers are not responsible for how people use their tools, specifically if developers don't touch the coins. So if it's non-custodial, if it's custodial, if a company holds your coins, then they become responsible legally for how it's used.
We're talking about how Bitcoin is software or data. It can move around in different ways.
Yeah, exactly. So if a developer builds a privacy tool, and then users of that tool use it to do illegal things, then developers so far were not considered liable for that. Now these court cases that are pending could change that, and that could completely change, how software is developed, how Bitcoin software is developed. In the Netherlands, there was a related case, the Tornado Cash. Yeah, the Tornado Cash case. I went to some of the court cases. And there, the precedent was basically set, indeed, that the developer is responsible for how the software is used. Now, this enters in a whole new, gray area, basically. Like, where does that stop? Why is the developer of, the iPhone itself not responsible if Samurai Wallet is used in bad ways on an iPhone? Like, where's the line?
Let's back up for a second and talk about Samurai Tornado Cash. Alex, Margot, can you just explain, how does this work? Why does it exist? How does it work?
Oh, I don't know enough about how Tornado Cash works to confidently talk about. I'll let you.
Yeah, I mean, Tornado Cash is a smart contract-based application on Ethereum that basically used ZK technology and pooling to let you put in some amount of money and take out some other amount of money at a later date.
So pool of assets, someone puts something in, someone sets something out, and the developer is not principally moving these funds.
No, and not fundamentally like it, that different than like coin joining. I mean, obviously technologically different, but similar idea that there's anonymity in the masses. You hide along with everybody else. I mean, Vitalik Buterin used Tornado Cash to donate to the people in Ukraine. He didn't want the government of Ukraine, I guess, knowing the source of his funds, right? I mean, there's plenty of legal reasons to want privacy. And by the way, right?
Well, it seems like we know anyway.
It's not even money laundering, right? Money laundering requires as a predicate that the source of the funds be illegal activity. So merely obfuscating the origin of funds is not illegal, and that's not money laundering. It only is if the origin is crime. And I agree with Erin. I mean, imagine that you write plans for some illegal act like a theft or a terrorist act in Microsoft Word. Is Microsoft responsible for that? Obviously, if the facts show that the developers merely wrote and deployed code or made code available, but then had no further control over it, which was the case in Tornado Cash, and I understand is mostly the case in Samurai as well. I don't see how. I mean, what are we really doing here? Are we criminalizing typing letters and numbers on a computer? It doesn't make any sense.
And in the case of Tornado Cash, for example, Tornado Cash can still be used. Like, it's a smart contract on the blockchain, like, which very clearly shows that the developers weren't actively doing it. They wrote the code, of course, but it's not like they're now actively involved with how people use it.
Yeah, it's still operating today.
Yes, exactly.
Yeah, this raises questions about, is code, does that count as speech, right? And is this a violation of our First Amendment rights if our code is being targeted? And I don't know if this, how clear the legislation or the rulings are around this particular issue, but it is concerning that if you're going to go after coders for doing something you don't like, this could be brought in far beyond Tornado Cash, far beyond Samurai, and I really worry about for our First Amendment rights and violations on free speech that could come if if the rulings are not in favor of these developers.
So how do we in the Bitcoin crypto industry, how do we support the Samurai developers? What needs to be done, Margot?
Yeah, well, of course you need to raise money, because bottom line is that these court cases cost a lot of money. And I know at the Bitcoin Policy Institute that we do have a fund for these developers.
The P2P Rights Fund, I believe,
yes.
Right?
And so I do recommend for our viewers to really take a look at that.
Is there a website for that?
There is. I don't know it off the top of my head, but if you look,
I think it was p2prightsfund.org. Somebody said last night. I'm not sure.
Yes,
Okay.
p2prights.org.
Okay, p2prights.org.
Yeah.
Yeah, so check that out. Go there. Give money. Bottom line is they need money. It's very expensive. Lawyer fees are very expensive. Litigation is very expensive, and often that is one way to win a case, is just to get somebody to run out of money. So if we can support them financially, that will buy them time, and hopefully they can win their case.
Well, what's the best case scenario here in terms of presenting the defense? Or what's the worst case scenario? Is there a chance that they could go to prison for some time? Alex, your take.
I mean, you look at what Ross Ulbricht's multiple life sentence is. A little different than this, but I mean, yeah, the worst case is very bad. I mean, they could go to jail for a long time. I really do find it, if the facts are such that they're similar to tornado. That's what's crazy about the tornado cash ruling in the Netherlands, is like these. It's just such a stretch from you actually are culpable for what somebody used this decentralized thing for. I think the risk is pretty bad. I would say it is like the Southern District of New York, very activist on crypto, this attorney, U.S. attorney. And I'm not sure that the arguments that they're making, some of which are ridiculous. There was an argument about MTL, money transmission licenses at FinCEN, even though FinCEN expressly said years ago that you wouldn't be responsible in this situation, the coders that. There's a risk of creep, regulatory creep that emanates from this.
Is this just the regulators losing control and lashing out? Erin?
Looks like it. Rizzo, what do you think?
I would say. Margot?
They always want to set an example. And I think that anytime they can find an opportunity to do that, they will, to send that message, don't cross this line. I mean, look what happened with Julian Assange. We're lucky that there was enough international pressure, but it took years to get him out.
And a great topic. I was just about to flip the script to the freedom of Julian Assange. Of course, people rejoiced on social media a few weeks ago. Julian Assange, founder of WikiLeaks, early and prominent Bitcoin supporter, released, but not pardoned, right? So his work still not recognized as the journalistic contribution that it was. Erin, I know that you've spent some time interviewing the family there. Can you talk about Assange's case, and is this over, or does the fight need to continue for Assange?
I mean, at this point, I think everyone's just happy that he's out, right? He's been locked up for, if you include the Ecuadorian embassy, it was like 14 years, is that it?
I believe it's 11 years.
11, yeah, just a crazy amount. It's pretty clear that it was because he was publishing things that the American government really didn't like. So it really was an attack on press freedom, if you ask me. So the fact that he's not pardoned, it's not good, but at least he's free. I think that's the consensus, right? At least he's free at this point, and everyone's happy about that, or at least I am.
So in terms of the pardon, though, this would clean his record, right? I think the argument that's been put forward from the industry is that Assange was doing journalism, much like the Samurai developers were just writing code. Do we expect the argument to continue in that direction? Margot, would you support that?
I mean, of course. I mean, Julian Assange was just doing his job as a journalist and as a publisher. My concern is that the record does not clearly state that that's what he was doing, and so that leaves open room for governments to go after other journalists who they don't agree with, or who are publishing leaked documents. And I think until the entire body of journalism stands up and defends itself against government overreach, that there is going to be a risk that there will be another publisher or another journalist that ends up in jail because the government did not like what was printed about them.
Well, let's stick with Ross Ulbricht. Of course, we'll be hearing from Donald Trump on Saturday. He's vowed to, if not pardon Ross Ulbricht, at least commute his sentence. Is this a reason enough to support the Trump candidacy? How do we feel about Ross's chances? Let's say if Trump is not elected, is this maybe a once-in-a-lifetime opportunity to push for justice in the Ross Ulbricht case? Erin?
You asked me to comment on U.S. politics right now.
You're a European, so yeah, you're the most unbiased.
I don't know. What do people think? Like, is Trump going to keep his word? Is that the expectation in general?
I would expect that he would commute Ross's sentence.
On day one?
Probably not on day one.
Is that what he said, or is it just?
I think he did say on day one at the.
You'll see from the T-shirts
at the Libertarian National Party convention.
I did saw someone with a T-shirt walking.
Yeah, but actually, the funny thing is almost nothing ever happens on a day one, literally. Like, you'd be lucky if something they say, any president says, if they get something they said they would do on day one in the first, like, 60 days, that's usually day one in their mind. I think it's a very, very unique opportunity for Ross. I would not expect anyone else probably to ever. He's not going to get another pardon or commutation, I doubt. I don't see any upside politically for almost anyone to do that. And, you know, on its face, his convictions are pretty ugly, right? I mean, I just want to be clear, right? It's Ross and Julian Assange are not the same, in my opinion, right? I mean, Julian Assange was attacked after publishing a video showing the U.S. government accidentally murdering a bunch of journalists. That was really what set it off. Later, they got mad at him because WikiLeaks published stuff that was damaging to the Democratic Party and a bunch of other things like this, right? Like, Ross did run a website for free exchange that was widely used for drugs, right? I mean, I don't think it's like that necessarily objectionable morally, but these are very different crimes.
Yeah, but it's not a double life sentence.
Well, yeah, I think the sentence is obviously egregious, right? People say, well, he ordered assassinations, and of course the government never actually brought those charges against him. So my understanding is they couldn't actually locate any victims, but that there was stuff in his diary that he wrote about it and stuff. So
well, he if it was him, which was never proven in court, would have paid someone to do it, but the murder never happened.
That's my understanding.
But again, it was never even proven in court that he made the order.
Yeah, I think this is he's got a very slim window here. I wouldn't expect, especially with a commutation or a pardon, that a presidential candidate would just not do it after so explicitly saying it.
Well, why didn't he do it in the first term?
I don't know. The Bitcoiners didn't raise money for him in the first term.
The ins and outs of politics debated here at Industry Day at Bitcoin 2024. We're about to go back to the main Nakamoto stage, where we'll hear from Joey Garcia from Zappo Bank, Christian Catalini from Lightspark, and the moderator Nolan Bowerly, host of The Breakup, the topic, the future of retail banking, made possible with Bitcoin and Lightning. Stay here. We'll be broadcasting live all day for the next 3 days on X, Rumble, and YouTube. This is the Mara News Desk, powered by Bitcoin Magazine.
We're talking about retail banking today. And I'm Nolan Bowerly, I'm your host. I host a morning show called The Breakup. We take a look at the psychological engine behind banking and the economy and contrast it against fiat. Now, the contrasting against fiat is interesting because when we're talking about retail banking like today, retail banking is kind of like looking in the mirror. Our generation, or this generation of fiat that we're just coming out of, kind of invented it, right? What does it mean? So the history of it is pretty interesting. We're going to talk all about the history of it today. Luckily, we have two fellows that have deep experience in this business. Joey, you've been in the business for a long time. Tell me a little bit about your history in retail banking.
So, I mean, this is really interesting, right? So if we talk about banking services and Bitcoin, so two diametrically opposite kind of phases. You hear it all the time today. People are talking about access to BTC in a secure way, all of these different models. And I always like to use the analogy. Zappo was a Bitcoin wallet provider, so Bitcoin custodian, probably the largest in the world back in 2013. We then sold the institutional arm to Coinbase, etc. But we've been in this game for a long time. 2013 is quite a long time ago in the BTC sort of context. But, we were talking about the value of BTC openly and honestly in 2014. In 2015, we were recognized as, the Fort Knox of Bitcoin. Everyone now talks about the World Economic Forum and Davos, and everyone talking about crypto in a certain way. We were making representations at Davos in 2015, talking about a unit of digital gold and what it actually meant. We were talking about inflationary pressures in 2016. It's been a long, long history. But again, sometimes people talk about Bitcoin, let's call it wallet providers and the VASP universe on one end, and banks and retail banking on the other end. And they don't mix. So we wanted to create that kind of bridge between the two. And I think the best analogy I can use for this and why you need a Zappo, why you need to be a Bitcoin and blockchain native business that steps into the banking world, not a banking business that now has an exploratory arm into the blockchain universe. And we are Bitcoin native and blockchain native. We always have been. The analogy that I was going to say before, Nolan, is, the electric light bulb didn't come around from, the development of the candle. It needs a new start. It needs a new adoption, and that is exactly what we are, and that's what we've built. So we wanted to build something to service people and provide them with that accessible sort of bridge between the two worlds. Yeah.
Now, when I think of, like I said, the bit of the history of retail here, it kind of grew out of services that were not available almost, right? We see what banking was in the free banking era. We see what wealthy people get from Goldman Sachs as far as banking services. It's a lot more thorough than what we get in retail banking. In retail banking, is we get some cards, we get a little bit of help with transactions. That stuff's important though, right? We can't forget that just the ability to transact and use these pipes is a big thing. So we'll talk about the other services in a second. But Christian, you're working with Lightspark. You've been looking at Lightning for a while. The idea that we can transact without these third-party intermediaries, that we can use software to secure commercial relationships between buyers and sellers in a P2P way is a real fundamental difference. And it totally changes the toolkit of retail banking. And you're right in the middle of that. What tools are you looking at? What are we giving up and what are we getting from this change?
Yes, I think crypto has been now around for a while, but in terms of really changing the experience from retail banking to global payments, I think we're starting to see the seeds of that just in the last few years. It took a while for the technology to mature and develop. The founding team of Lightspark, when we came together again after the Libra journey, we're still very passionate about this idea of building a truly open protocol for money movement, right? So Bitcoin is a wonderful store of value. It has made tremendous progress on the institutional side. Think about the ETF approval, the recent ETF approval. But when it comes to Bitcoin, the network, I think we're extremely early days. And so when we came together again, we focused on the one network that could really become that truly open and highly available protocol for money, and it is Bitcoin. Of course, Bitcoin on layer 1 doesn't scale, and so we focused on Lightning. We spent, I would say, the first year and a half of Lightspark's life in really making Lightning easy to use, enterprise grade, something that the likes of Xapo Bank, Bitso, Coinbase, Nubank, and many others can really use at scale, not with millions of users, eventually billions of users, because that's kind of where we're going, and transforming this technology that has been around now for a while into something that can touch everyday consumers' experiences, everyday small and medium businesses' experiences, and of course, money movement from tiny, tiny fractions of a cent to millions and millions of dollars. We've grown this very strong conviction that the only one asset that can support all of that, including all the banking experiences that Xapo and others are building, is Bitcoin. And we've been narrowly focused on really making Bitcoin succeed.
Yeah, and again, when I look at that contrast between, what we saw with Libra even, right? Remember when Libra started? And it came into the market, and a lot of Bitcoiners said, oh, shitcoin and all that. Of course, all of that's true. But what it did was it brought the full field of play. It brought the whole game into focus. When you could start to see that the money wouldn't be bound by a jurisdiction anymore, and that it was now totally portable across these borders, you could see finally, remember, if they hauled everyone's ass in, right? The Congress in America said, what the heck is this? Everyone come in and testify. But the contrast was an important thing, right? Bitcoin, out of those hearings, came out, I mean, that's where the word shitcoin came from. Like, it was first popularized then to contrast with Bitcoin. And Libra did a lot to show the benefits of Bitcoin. So when you're thinking about, you know, Xapo, you'd been around for that. You saw that coming.
Yeah.
Was that in line with what you guys saw? When you saw the Libra piece coming out, really giving up the game, right? Things that we said, not secretly, but we talked about amongst ourselves, a whole other side of the world was not ready for this reality change that was there.
Yeah.
And it came all at once. Was Xapo enthusiastic about this?
Yeah, I think, you know, we were part of the Libra Association as well. I was the representative on Libra, and Wences, our chairman, currently was on the board of Libra. And I was talking to Christian earlier, you know, the alignment of what Libra was aiming to accomplish is really, if you think about it, partially at least, covered by what Lightspark is doing with a kind of Xapo integration. Very different sort of way, but you know, the alignment of the mission is still there. And you know, from our point of view, you're 100% right. I mean, I'm not going to go into all the legal and reg triggers around the globe that Libra had. That gets quite difficult. But ultimately, you know, think about an efficient payment system in and out of your bank account. We all take that very for granted. People talk about SWIFT and they talk about SEPA and they talk about, it's brutally inefficient. But now go to a bank and say, reconstruct your entire infrastructure to facilitate a Bitcoin-placed transaction that converts automatically and appears in your bank account. They'll look at you with blank and open eyes and say, oh, we have some research division that are looking at this. But the reality is, but that's what I mean from our point of view as a really blockchain native and Bitcoin native business. That's exactly what we've aimed to do and achieve. And we have it up and running now. So in the last month, I think 30% of our deposits have been over Lightspark and the Lightning network, and it's up maybe 4x, I think, on 12 months. So you can see that sort of starting to move. And not only that, I mean, I mentioned the words on the kind of intro, the bridge between the two worlds. So, you know, the banking world, whether people like it or not, classic payment systems, they need to exist for certain things. But we want to add these layers of efficiency. So you can send a USDC transaction into your USD bank account immediately at no cost and out. So we're bridging that gap, and what Lightspark and the Lightning Network does is really efficiently build out on the Bitcoin protocol and network. So we have it there as a store of value, as a way to protect and grow your wealth in an ultra secure environment. You know, with a savings proposition that allows you to actually earn interest on BTC at no risk. But we're using it with Lightspark to implement all of those other efficient rails, using the technology for the right purpose that it can be used for.
So you guys are definitely cooking together. I can see why this relationship would create all kinds of interesting commercial opportunities for users of Bitcoin, enjoyers of Bitcoin. You know, when I think about the changes, though, that the products that can arrive from the two of you working together, again, I contrast it with what we see in banking. You know, retail banking, as it's come to be defined, it's really sort of we've been left here in default through the history of it. The services that we see as retail, no one set out to make these services. They're the result of the higher end services that you find in private banking kind of being inaccessible. They don't scale because you require high IQ individuals with a Series 7 license to be able to help you and navigate this type of commercial transaction, you know, prime brokerage and securitized lending. These things didn't make sense to anyone, or weren't known to anyone who didn't understand Bitcoin before. If you just came at this from a normal, I'm trying to save my paycheck, you didn't know what any of this stuff was. Bitcoin has sort of democratized at least the understanding of these tools that were usually only available to private bankers at Goldman Sachs as a service that they could offer super wealthy clients. You know, when you see the types of stuff you're cooking with Lightspark, do you see that opportunity where you don't have to follow the prescriptive trail of what retail banking has offered? It's not just cards and checking accounts, savings accounts. With your technology cooked together, bound together, you can start picking up on trends in the industry. Do you see this technology as offering access to all of these financial tools that really Larry Fink was offering to a couple of people because of scalability, right? It was hard to scale these types of contracts. It looks like we can do that. Is that sort of in line with your vision?
I tend to think about, the way crypto is progressively reshaping the entire financial stack and rewiring, the financial sector in layers. And so, the first layer is payments. Before we can build anything more complex, we need to be able to move value across borders, real time, 24/7, instantaneously with as little friction as possible. And ironically, 10 years into, or more into the Bitcoin experiment, I think we're still not there. Now, with universal money addresses, we're making a lot of progress, which is essentially realizing that you don't need a stablecoin, right? So if you're trying to move value between two countries, and as it turns out, people love Bitcoin on both sides, you can quickly go in and out of the Lightning Network, you convert at the edges, and suddenly people have an experience that's very familiar, but also very difficult to achieve in traditional banking, right? So there are services that allow you to move money easily between different countries and regions, but not everybody uses them, not everybody has access to them. And so what we're trying to do together is really democratize that functionality where no matter where your different bank accounts might be located, what kind of use cases you have in mind, value from one place to the other can be instantaneously moved with no friction. And I think that's a concept that's super simple, but the basic idea of sending money as simple as sending an email is going to be truly transformative. Banking hasn't done that yet.
Now, when you say in layers and that the transaction layer is sort of the bottom, I could push back on that using Zappo here as an example because one of the things I think that separates retail banking from, let's call it institutional, has all kinds of titles, rich people banking, let's say, is that savings, of course, was a stupid idea with fiat. You got to become a financial engineer. You're competing against them, and if that's there, if it requires a high IQ to participate, even in the savings, you don't have money to move around. You're not even getting in the point where you're transferring. And I understand you have things to pay for and all that, but when I'm talking about complex or fruitful commercial investment contracts, relationships, things that you can do, having saving money being easy, having that as a base layer is really important. Zappo, of course, builds its whole business off of that. That's why Bitcoin is fundamental to Zappo, is it not?
Yeah, I think there's so many, let me break this down into a few points, and lots of really good points and questions, Nolan, but so think about the base layer of a payments network for a standard retail account user. So you have an account at whatever bank it might be, HSBC, JPM or Chase or whoever you like. The way that banking world allows you to transact with a bank is very restrictive. It's becoming more and more restrictive. So they're trying to widen the gap, disconnect the crypto ecosystem from the banking ecosystem. Let's say a crypto exchange and a trading platform. That's not a regulated, arguably not a regulated custodian to hold, store securely your BTC, let's say. So maybe you wanted to sell some and hold it on some secure deposit or whatever it might be. That bridge is very, very difficult. So with Lightspark, one of the key points is exactly that, bridging that gap between the two, and the UMA network that these guys are building that Chrissy can talk about is exactly that. You're trading on platform XYZ, that's for trading. Zappo is not for trading. Zappo is to hold, store, protect, and grow your wealth. And Lightspark is the bridge between the two. So that's on the base layer with the normal guys, and then going up the scale to the high net worth or institutional, you're also 100% right. So in the classic days, if you want to open a private bank account in XYZ in Switzerland or wherever it might be, that sounds wonderful. You need $10 to $15 million to have a starting point conversation, and you'll be at the bottom of the bracket. So we want to offer those services to a wider audience and a wider network. So of course we offer, 4.6% on your USD, but we pay it in Satoshi because we are Bitcoin native. We offer your savings account in BTC, and you earn interest on that. That's completely Bitcoin native. And the things that we're building out, the products and services, we call it sort of superpowering your Bitcoin. So you're holding it securely, and it's growing and safely, but you have access to your bank because it's in one application. It's all being
I like that frame of superpowering Bitcoin, because that's exactly when you think about these layers, right? Having that fundamental base of Bitcoin allows you to start seeing how you can manipulate it, how you can use it, how you can make it useful for you.
Yeah.
You mentioned Uma. I'm glad you did that. Hart taught me years ago. I have to thank him. I've never had the chance to thank him. He turned me on to Unisocks. Remember the original protocol? And you could do some sock trading and all that stuff. So now he built Uma years ago and launched it very successfully. One of the things that makes me think of is when you talk about supercharging Bitcoin and what I mentioned earlier about scaling these services, because indeed the Swiss bank account, the reason it cost $10 to $15 million is because the human being they were hiring to help you came with a very expensive ticket and a lot of incentive to get them to even do that in the first place. What does Uma, that's the kind of software replacing these human services where we can get these incredible commercial relationships scaled to the retail user. What does Uma offer you guys for that? I understand the Oracle-based nature of it, but what can be built off of Uma that can help the retail person?
Yeah, so universal money addresses build on Lightning addresses. So there are a set of open source extensions that we released that achieve three important things. The first one is making it extremely simple to send and receive money from a person or from a business. So everyone has an address like $Joey@xapo.com. That's how I can reach him. That's how he can send me money, how I can receive money from him. That's the first part. The second one is effects. Conversion between any currency, any crypto, to any currency, any crypto. So that if I want to send dollars to Mexican pesos, or euros to Naira, or dollars to Bitcoin, I can do all of these transformations and hide them behind the scenes. Because to your point about how will the banking experience change, I think some of the concept will remain familiar, right? So people will still think potentially in their home currency, if they're not fully orange pill yet, and they'll want to translate and move value in the currency that they're familiar with. So Uma allows you to do that. And of course, allowing entities like Xapo and other regulated institutions like Coinbase, Nubank, Rizzo, and many more that are coming onto the network in the near future to fulfill their requirements, right? So these are regulated institutions, so when they move value, they have to check a number of boxes. When you put it all together, I think it changes the nature of banking, right? So before, banking would happen just in the Xapo app. But in the future, the Xapo experience will meet you where you are. So imagine you're a creator in a creator economy app, or you're like, in a marketplace. Why do you need to connect those pipes in such a clunky and slow way? Ideally, your banking experience will travel with you, whether you're purchasing something or you're transacting with someone else. It will disappear behind the scenes, and everything will be a lot more frictionless. Because when I think about banking today, even just sending money abroad, even for high net worth customers, well banked, it's still cumbersome. It's still not efficient. It's still not 24/7.
Well, I'm glad you mentioned the creator economy piece, because indeed, if you look at it on the marketplace, particularly for retail, and you see X getting its money services licenses, right? I worked at CoinDesk for years, and I remember when Binance started its news feed, I walked into the CoinDesk editorial room and I said, "We're #2 in media today." And no one knew what I said. I said, "Yeah, but Binance has more page views, and now they have news. Does it matter that there's some big editorial thing?" No, that we're seeing a convergence of content apps and financial services apps. I mean, that's what the Coinbase wallet was always about. If you look at Cash App, for example, the news feed has been right next to with the Bitcoin magazine. News articles have been right next to the Buy Bitcoin button. So indeed, when I think of the financial services that are available to content creators, we're not there yet, but you can imagine a distribution platform and financial services being all available to these people, because it's simply not there right now. We don't have anything it's donations. It's just give me some money, right? Now, all of that said, when you said meet them where they are, some of this makes me think of bimetallism. Right? Have you guys, the concept of bimetallism? We're hearing Javier Milei talk about it a lot right now. El Salvador is bimetal, right? Bimetallism is one money for consuming, one money for saving. It's what America had before they went with the gold standard and the fiat thing. And bimetallism really does offer you this savings money and then all kinds of financial applications. Even when you hear Trump talk about Bitcoin, when he says, "I prefer one," but he's mentioning that the reality is we're entering a new world. And indeed, meeting people where they are, like you're saying, by industry vertical, by nationality. The political money looks like it's becoming even more political. It's going to become to fulfill policy objectives, right? keep these people from starving and keep these people, all that stuff. So we can see this stuff playing. So when you look at it globally like this, do you start thinking in terms of those frames? Like, how can I create interesting financial services while making savings sort of the easiest possible threshold?
It's a difficult one. I mean, we've taken a view on Bitcoin and the Bitcoin network since we started in 2013, and we're not going to change that view. So secure accessibility, secure storage, the proper custodianship and arrangements, the interaction with your financial services world, and then that sort of bridging merger between the crypto world and the classic world, the stablecoin payment rails, the Lightning Network. People sometimes talk about CBDCs and all these wonderful initiatives at the Fed level and the Bank of England and all this stuff. And I always say, look, this is all very fascinating stuff, but if that goes live and the Bank of England issue a digital pound or the Fed issue a digital dollar, all of the banks have got to learn how this entire ecosystem works and provide a secure, wallet service. That sounds pretty simple, and the way that it's going to interact. So we feel that we're doing that already. Did we start adding Ethereum to our wallet? No, of course not. We're like very concentrated on this market. So in answer to your question, will our view change? It can, but we've delivered that message since 2013 of what people should do to expose themselves to this asset in a secure way, and we've built massive regulatory frameworks and security around the way that we do that, and I don't think that that's going to change. I don't think that that's going to change.
No, I absolutely agree. I mean, the reason why we focused on Bitcoin is that if you think about the challenge of moving value, not just between a few countries, but between 200 or more countries, right? Every day, 24/7, with deep liquidity, there's only one asset, and that asset is Bitcoin. It has regulatory clarity. It has on and off ramps in pretty much every country around the globe. And so suddenly, if you look back, sometimes people say crypto hasn't done much, right? But we've built infrastructure with Bitcoin as the most secure and decentralized network. We built infrastructure with the like of regulated institutions like Sapo Bank and others. And now we can connect it all in an open way. So to your point about different platforms, whether it's X or someone else doing this on their own, it's very different when you join an open network that's based on Bitcoin, and now you can all interoperate. We haven't seen that before, right? So PayPal acquired Venmo many years ago. Actually, my co-founder led that acquisition, and you still can move value between those two apps, right, effectively. I think we're going into a future where people will be able to move value, and then to your point about savings, maybe we'll have an AI agent that will take our preferences and just go out and make good decisions. And a big part of that will be Bitcoin.
I've often believed, I did a talk last year on that AI would be our wallet. It's going to be our major. I wrote a sci-fi book about it even called An Eyeball, where the eyeball helps you transact in Bitcoin. But it's important indeed to think about the what developers can do with this technology, because it's open source, right? So if someone does come up with a clever way to secure a financial relationship between content consumers and content creators, then theoretically it can enter the Xapo Lightspark relationship and be brought into the retail banking services. Is that what you're building, that you can gather the open source development bottom-up community?
It could be. I mean, I think when you think about the way that people buy, own and store BTC, or the way that they want to interact with, let's just call it a wider payment services network or world, Bitcoin's been around for a long time. The guys that bought BTC 10 years ago, and you bought sort of $150, and you had sort of some asset, and it was really interesting, and you earned a Bitcoin, and then you bought some more at $500. It was all very interesting. And you had all these ways to store that, or you were using trading platforms or unregulated networks in different parts of the world, and you didn't really care. Like, if I lose my wallet with $100, it's a bit annoying, but I'm not going to lose any sleep over it, hopefully. But when that BTC then becomes worth $500,000 or $1 million or whatever it is, suddenly the way that you interact and you provide services and payment networks and storage facilities becomes much, much more important. And we are forever. So we didn't just, we don't use the word bank. We are a bank. So when I say that we're providing ultra secure systems to help people store and control that asset and interact with a wider ecosystem, you have to do it in a very specialist and narrow way. And it's also about mass or wider adoption. So if I start talking about, very technical multi-sig style arrangements between a family arrangement, whatever it may be, fantastic concept. But my sister is not going to do that. She wants like the simplicity of an interaction with a counterpart that she trusts, that's tried, tested, and everything else. And that will allow an entire different network to access, and that's really what we're focusing on. So the answer to your question is yes, but there's also a massive wider world that we're looking to service. And last point I'll mention, because we're here in the US, and people don't really worry that much about inflation and the USD value, and maybe similar if you're in the UK or arguably in the Eurozone, etc. But when people talk about Bitcoin value proposition, if you speak to the guys in Argentina that have lived like 3 currency collapses in one lifetime, or the guys in Venezuela, or the guys in Zimbabwe, so that is the market that we're also looking to service in a very specific way. We believe in the concept and value of Bitcoin as a storage of value, and we want to offer it in the securest possible way, in the most efficient way.
And we really need to expand the set of institutions and participants, because to date, of course, crypto exchanges, crypto banks like Sapo are engaged in the Bitcoin ecosystem, but we need to get to billions of users, right? So it's all about, with universal money addresses, bringing on entities that maybe allow you to buy, sell, hold, but that's it. They've not allowed you to move it in and out, or to transfer, or to use it really as a payment network. I think as we start doing that, and all the words neobanks come onto this new structure, suddenly people will realize that Bitcoin is the best asset for global money movement, and a whole new range of applications and use cases will emerge. I think we're actually pretty close. As we bring the first 100, 200, 300 million on it, then things will go very fast.
Yeah, to me, what I see is and we'll wrap it up with this thought. It's sort of the blending of consumer technology and the opposite of that, which is Lindy effect, not the iPhone 15, 16. Plain old Bitcoin.
Yep.
Right? Plain old Bitcoin.
Exactly.
All right, everyone, please give a warm round of applause for our great panelists here. Thank you so much, everyone. Thank you so much. Thanks, guys.
If you know crypto.
Welcome back to the Mara News Desk at Bitcoin 2024, powered by Bitcoin Magazine. I'm your host, Pete Rizzo. My next guests come to us from Metaplanet. Metaplanet Inc., the micro-strategy of Asia. Bitcoin holdings in excess of 2 billion yen, and the hottest trading stock in Japan over the last few days. We've got Dylan LeClair, Director of Bitcoin Strategy at Metaplanet. Simon Jurovich, President at Metaplanet. And Mike Germano, there in the middle, head of business at Bitcoin Magazine, B2C Inc., the Bitcoin Conference. So we'll begin with Metaplanet, the talk of the town in Japan. Simon, thanks for joining us, coming all this way. Tell us about the excitement around the company in Japan and what you're seeing.
It's an incredibly exciting time. We announced 3 months ago that we were adopting the Bitcoin standard. We're a listed company in Japan, originally in hospitality. As you can imagine, was a difficult time during COVID, but it was a blessing in disguise. Crypto is something that I've always been passionate about on the side, particularly Bitcoin. First purchased Bitcoin back in 2012.
Early.
Actually on Mt. Gox. That's another story.
Wow.
But as a result of COVID, convinced our board at that time to consider selling the business. We found another company in Japan that wanted to acquire us. And I spent the better part of the next year cleaning up the balance sheet and then preparing ourselves really to adopt the Bitcoin standard.
And of course, you hired a director of Bitcoin strategy and Dylan LeClair over here. How did that relationship come together? Obviously, Dylan known for his markets insights and analysis. How did you meet, and what did you tell him about this idea that you had about becoming MicroStrategy or adopting the Bitcoin standard, in your words?
Well, I can't really take credit for finding Dylan. I had been a follower of him on Twitter, and he produces wonderful content, and I have been following MicroStrategy for the better part of the last 4 years, and Dylan has been producing some wonderful content. He actually reached out to me by email. This is after UTXO became our recent shareholder.
Okay.
We had a conversation, and Dylan said he'd love to be part of this and help us roll out the playbook.
And so maybe we can dive into that playbook. Obviously, you know, we see the headlines here in America about the frenzy around the stock, how it's constantly trending, how, you know, obviously in the face of the economic environment over there, it's become a bit of a viral phenomenon. Maybe just take us into what's happening on the ground. Why has Metaplanet really captured the zeitgeist?
So Japan has really gone through a period of economic difficulty. The yen has reached a 34-year low. The purchasing power of the yen is at its lowest level ever. It's down more than 2/3 in 30 years. And so if you're an average Japanese person, I think you're rather upset. You enjoy traveling, you enjoy buying things, but now your yen won't travel very far. And so I think the timing of us announcing that we would be effectively a proxy for Bitcoin, provide a way for Japanese retail investors to get exposure to the ultimate monetary network. It's not efficient, actually, for Japanese to buy Bitcoin directly.
Right.
It's very the tax rate's 55%. It's treated as miscellaneous income, but if they buy our shares, they would only have to pay 20% tax. So our objective is to be a company that provides leveraged exposure to Bitcoin. So the timing is really quite good. The reaction has been extraordinary. The stock is up 6-7x in the last 3 months. Dylan did some number calculations for us, and we've done the trading volume has been about 1 billion shares, I think, plus over the past 3 months, which is far more than the previous 10 years.
Well, so maybe let's dive into it. So how is the company acquiring Bitcoin? What goes into one of your Bitcoin purchases? How you've done a number of sales now going viral on Twitter for the size of your purchases in yen. So tell us a little bit about how that works on the back end.
Sure. We're effectively using all the capital market tools that are available to us. So we are a public company, so we can issue shares, we can raise money through issuance of bonds. Obviously, MicroStrategy has created this playbook for corporations around the world to follow. So we can't take credit for coming up with the idea, but it is something that MicroStrategy wants the rest of the world to embrace. And so we started the journey. We had on our capital structure some unexercised warrants. And so I facilitated the transfer of those warrants to a group of high-quality strategic investors. That happened back in April. Those investors exercised those warrants, injected cash into the company, and then together with our cash balance, we made our first purchase of Bitcoin. We then issued a bond at an interest rate of 0.5%, and that closed about a month ago. We then used that to purchase more Bitcoin. We're now at a point where the next step is to issue more equity. And we recently had a shareholder meeting about a month ago, and we had overwhelming support from shareholders to embrace this new plan. And we also increased our authorized share capital. That basically means now we have room to issue equity securities. So the company now is just really thinking about the best way to affect a capital raise going forward, and using that, of course, to buy as much Bitcoin as we can.
Well, exciting stuff. I want to bring Dylan in here, the Director of Bitcoin Strategy. What a title, Dylan, to have Director of Bitcoin Strategy. Take us into that role. What does the Director of Bitcoin Strategy do at Metaplanet, and how are you impacting the markets?
Yeah, I mean, Simon and I are basically working together hand in hand to evaluate all these options, evaluate our tools, and again, yeah, just looking to acquire Bitcoin, and also, as part of our broader plan, we want to have, we want to have an outsized impact in the native Japanese markets and community all around Bitcoin. I think Japan is very, it's fertile soil, it's fertile grounds for Bitcoin adoption. Obviously, the Mt. Gox, Mt. Gox implosion has.
Well, some good news recently. The repayments going out, people reclaiming their Bitcoin balances. Maybe some new buyers from that set. But Dylan, continue.
Yeah, and so I think it's all about in Japan. I think it's similar to where the U.S. was 4 years ago in terms of the Bitcoin landscape, but also in terms of the economic landscape, the monetary policy. Short rates are near zero. Long rates are at 1% or so. Japan has the highest debt to GDP in the world, so we think it's primed to come out and have a strong Bitcoin first, Bitcoin only approach. We posted a white paper in English and Japanese on the Tokyo Stock Exchange, and so basically outlining our plan, outlining our Bitcoin thesis, and why there is no inferior, there is no second best essentially, and it's been very strongly, it's been very welcomed. It's been a good perception so far.
And of course, we have the elephant in the room here, Mr. Mike Germano from Bitcoin Magazine. Mike, how are you doing?
I'm doing great, Rizzo. It's actually my first time ever on the desk with you.
Really?
Yeah.
The little known fact, Mike Germano, the inventor of the Mara news desks, now finally reclaiming his rightful place in the center of our stage.
I'm just happy to be. You've just done such a great job over all the years, so I'm just really happy to actually.
And you seem to have a pen and paper there. Maybe you can tell us a little bit about what that's about.
It's about me making notes, but more importantly. Once again, speaking on the Bitcoin Magazine side, we've watched what Metaplanet has done. It's been very exciting. For those of you who don't know, Bitcoin Magazine is obviously located here in Nashville. We have a global company where our content has been, all over the world, but mostly in English.
And Bitcoin Magazine Ukraine as well?
Correct, yeah. So we spent the year, we built Bitcoin Magazine Ukraine for Ukrainian and Russian speakers. Bitcoin Magazine Switzerland we launched last year. And this year, which is something that we're very excited about, we are partnering with Metaplanet to launch Bitcoin Magazine Japan. So we're very thankful for the Metaplanet team. What this truly means is, number one, we believe the Japanese market is an important one. We also believe that's not just about taking our content and putting into AI and translating it. It's about localizing the work that we're doing, building the community around what we're doing. If you could see here at this conference, this is what we were able to do here in the US. We have, obviously, our conference business is growing globally. We're very excited to try to bring more events and really connect people, but we need people who not only understand the market and are passionate about it. Right. And right now, if we're looking at Metaplanet, there's no one else when we're thinking about Japan that's really doing the work, investing the time and effort into pushing Bitcoin. So we are so honored to partner with you and really now bring Bitcoin Magazine Japan up and running.
Well, it's at the tip of the spear, and content so important in education adoption. Wondering if you could speak about that. Obviously, there's retail fervor now around Metaplanet as a stock. How do you take that excitement and then translate it into education opportunities? Is that something you guys are talking about?
Yeah, of course. And I think right now the dominant kind of Bitcoin education landscape in Japan is very much kind of crypto pluralist. The coin desks of the world. And so for us, I think, again, it's really about this unique time and opportunity in Japan. The currency is structurally weak, and there's no path forward. And so for us, the Bitcoin narrative almost sells itself. It's just about getting in the middle, entrenching ourselves in that community, helping with education, whether it's local events, media, obviously, video content. And I think also, the activist role that Bitcoin Magazine has taken at the regulatory level with politicians, just kind of across the board in academia as well, just getting everybody up to speed about what this is. It's not just one avenue or angle. There's so many different kind of directions we can take it. And so that opportunity in Japan is obviously massive. The market is very large. Japan's one of the deepest, most liquid financial markets in the world. And so this was a no-brainer, and we're happy to kind of partner together.
Mike, I wonder if you can speak about that from the Bitcoin Magazine side a bit.
Well, I think it's exciting for us because Bitcoin is a global language, and even though it has to be translated in a bunch of different languages for you to read all about it, but Bitcoin is the one thing that kind of unites us globally. So our goal, our passion to try to expand our company, get more information, and make another node in our network is not easy. It's it might seem like it's growing globally is easy. It's not. You need to find the right partners, and more importantly, Bitcoin has adopted such a unique culture And if you think of everything from Pizza Day, how that's celebrated all over the world, or the White Paper Day, and to really, one of the things that's beautiful about Japan is there really is a beautiful culture there, and how does that now impact how Bitcoiners celebrate, how Bitcoiners talk about their passion in this community? I think it's something that we're quite excited about. And also, to not have a Bitcoin magazine in Japan where we think Satoshi Nakamoto, where I'd like to, I think that's something, we got to give our respect to the
Satoshi
big
out
guy.
there smiling somewhere about Bitcoin Magazine Japan, perhaps.
Absolutely, we hope so.
So want to broaden a little bit to Bitcoin treasuries. Obviously, that's the subject of the conversation, pioneered by MicroStrategy, but maybe we can speak to the broader phenomenon, Simon, of just, we've seen MicroStrategy, we've seen Square now Block acquire, build a Bitcoin treasury. We'll have a Semler Scientific on stage, another U.S. healthcare company on stage talking about its Bitcoin acquisition strategy. We've seen Reddit, Bitcoin Depot, DeFi Technologies, the list goes on. I guess, is this something that you're looking at, does this become a broader phenomenon, and why do you think that might be?
Well, I think the world is definitely realizing that Bitcoin is something that's here to stay. It is an extraordinary form of money. It's the apex monetary asset. Following MicroStrategy over the past 4 years, we just recognize that this is something that is a phenomenon that's going to take over the world. Clearly, it's happening at a faster pace in the US and perhaps partially Europe. Asia is incredibly conservative, although you will know that Asian crypto traders are incredibly active, perhaps more so than any other place in the world. But we wanted to kind of take a stand. We wanted to be the first company in Asia to adopt a Bitcoin standard and set the playbook in Asia in a place with a lot of regulation, that this is something that can be done.
And were there barriers to that decision? You spoke a little bit about the setup. What were those barriers like, and are those barriers becoming easier? Do you think it will be easier for the next company to adopt?
I think it really depends on the country. Japan is very conservative. I think the stars really aligned for us because we had this public vehicle where we were looking for something new to do with it.
Right.
Because of COVID and hospitality difficulty, the timing was really great to adopt and embrace something else. Always get very inspired when I hear what Michael Saylor talks about, the early days of the decision process that he went through.
Right.
And I think in many cases it was quite similar for us. We were at a sort of a juncture, a split in the road, and we could continue investing in the hotel business at a time when it was very difficult, or look at a different way,
so what does success look like for Metaplanet going forward? Is it acquire more Bitcoin? Is that the goal?
Absolutely. We would like to acquire as much Bitcoin as we possibly can. But it's also things like Bitcoin Magazine. So we're incredibly excited to partner with Bitcoin Magazine. One of our stated objectives, besides owning as much Bitcoin as possible, is to onboard.
An objective many share of the 20,000 attendees here, I'm sure.
No, absolutely. But in Japan in particular, we talked about Satoshi Nakamoto, and Japan was a very important place at the genesis of Bitcoin. A lot of the big players were in Japan at that time. And so I think Japan is a place that's ripe for more Bitcoin adoption. And our objective is to help onboard as many more people as possible. And there isn't a better way to do that than to do that through the lens of Bitcoin Magazine.
And of course, the Bitcoin Magazine experts at the adoption side. Mike, wonder if you could talk a little bit about payments going on at this conference. Obviously, there are vendors from all over the world here, and they're making payments in Bitcoin, in Lightning, for food, drinks, beverage, merch. Maybe you can talk a little bit about the work that goes into that, the importance that Bitcoin Magazine puts on that Bitcoin payments and adoption part.
Yeah, well, if you're going to have a conference on Bitcoin, you better accept Bitcoin. So
often said, seldom done.
Yes, and so sometimes it's very difficult, and obviously we spent the last 2 days running around trying to get make sure everything is set up. We have BTC Pay Server here. Rockstar, whom I'm sure everyone knows, has been running around setting.
I saw him at the merch booth this morning, setting up the terminals.
He was. Last night we were demoing the Donald Trump and Ross Ulbricht cards, BTC Pay Server cards, where obviously when you tap them, it even lights up and gives lightning eyes. And once again, you can buy those in our store right now over there. The exciting thing is all of our vendors, everyone has to accept that. That's something that we kind of make sure we kind of mandate for everyone to want to do.
Right.
you want to get that experience. We're seeing a lot of people for their first time. There's my kids are actually here. My daughter is selling her little Taylor Swift wrist bracelets, and you have to pay her using Lightning. So even the attendees are accepting Bitcoin payments for their little handmade things.
Well, I look forward to buying my Bitcoin Magazine Japan with Bitcoin. Simon, thanks for joining us, and Dylan and Mike as well. We're going to send it back to the Nakamoto stage, of course, here deep in the Industry Day at Bitcoin 2024. We're headed back to the main stage with Caitlin Long from Custodia Bank, Miles Pacini from FV Bank, and Julius Baer from another bank, Bitcoin's role in traditional banks. The subject of the Nakamoto stage when we return here on Industry Day. We'll be right back, streaming on X, YouTube, and Rumble. Stick with us.
US dollars versus other foreign currencies, and that prevented it at least reduced the counterparty credit risk in time and in size, because you could settle trades faster. We need a CLS equivalent for Bitcoin to US dollars, and it's the bank regulators who are, through their own decisions, creating risk in the banking system, and I am now publicly warning the Fed about it, even though I privately warned them about it a couple months ago.
Well, I mean, the Hong Kong, there you go. Yeah. The Hong Kong ETF, of course, with the Bitcoin does create a potential tension there that this could even be spurred on deliberately by someone else.
Sure, absolutely it could. The smart way to allow the ETFs would have been to allow the physical create. And then you would have 24/7, 365 markets. But by that decision to force it through the intermediary of a US dollar transaction, it was crazy. It created risk where there need not be risk.
Mm-hmm. Now, we can talk, I don't want to go too much into US regulatory stuff because it's not just the US, but of course so much is happening. We've got the political side and everything that's going on there, but the Supreme Court, of course, has had some pretty interesting pieces. Chevron, I've been following the Rudkowski versus SEC case from the very beginning because I recognize that. If people don't know, basically you can't, in the American system, the legislative branch and the judiciary have to be separated, and the executive. The idea of the SEC having enforcement internally is what has made the situation where normal lay judges don't understand the law, right? Which is really the Rudkowski logic, is that if a judge can't even understand it, you did something wrong, and
right.
This is the actual issue. So it looks like we do have a mandate to change everything in America depending on what happens next. Is the rest of the world waiting on America? Can Singapore embrace? I mean, because everyone stands in awe of Singapore's capacity for, not just paying their bureaucrats, but actually getting really smart ones. We can't seem to do that. We get Gensler, all right? We get Gensler all the time. You guys get real people, and do they see this change? Is this what the rest of the world is seeing, that America is about to do something one way or the other, but it ain't going to be the same?
I think there's already in action an alternate that was done in Hong Kong, where your BTC is in-kind redemption. That's a flavor to the ETFs already right there. Mm-hmm. And that was done as a challenger, I would say, to the regular ETFs in the US. So I would put it this way that, the world across is figuring out what they can do with Bitcoin and fundamentally how can they integrate it in their ecosystem and based on their intrinsic nature, of currencies. For example, if I pick up the example of Hong Kong as well, right? You look at, it follows the UK model of allowing commercial banks to be able to issue their own currencies, right? Mm-hmm. This is a world that we might go back into after nationalization of currency in a very future world. I don't know whether it's going to arrive now, but you're revisiting that model where banks, like Hal Finney said, right? Banks have a big role to play. It's there, Hal Finney said it, right? And where fundamentally, if Bitcoin has to scale, if a regular person out there, any wealthy individual has to interact, they might interact it via a claim on Bitcoin, or they might directly interact on Bitcoin. It really depends on the profile of the person and the goals that they have and how they want to kind of interact with Bitcoin. So I think the opportunity is there. I'm using the word opportunity for all jurisdictions to look at this as a way to step up their game especially in the banking world. So you look at 1950s or 70s, I think, where banks were struggling across the world, and Citibank came out with the game of Forex pairs. They reinvented the banking system with a new financial model. So I think that's the opportunity that all banks have, and they should. We're at a stage where we're 15 years into this, and ETFs have been approved. We are far more mature into the Bitcoin cycle. It's about structurally looking at the laws, like you said. Do we need to understand and update them? Do we need to look at the processes of the banks as well? I mean, you can switch on the technology. The technology is there today. You can switch on the technology to offer Bitcoin to your customers, irrespective, retail or wholesale. But the processes of the banks, the operators, they have to kind of also upgrade in terms of the training of handling. The customers have to understand that psyche of a deflationary asset. So you're talking about a complete game changeover. And I think the best equivalent analogy that I've heard is the antibiotics analogy of elongating the human life in 1920s with antibiotics. I think Bitcoin will elongate the corporate balance sheet. You wouldn't see the symptoms of fiat that typically we see, where out of 10 companies, 9 die. You will see a lifespan increase for corporate balance sheets when they move to this Bitcoin standard.
Does that future life, because you mentioned the Hong Kong banks, and I've always loved the idea of Hong Kong, it's stable coins, right? It's a US, the Hong Kong dollar is a US stable coin, and the banks themselves mint it, which means they require actual dollars on the balance sheet. They can't fractionally reserve, create their stable coin. That's my understanding, right? They require everything in reserves, and then they can issue their Hong Kong dollar, which is a US dollar proxy, right?
Yep.
I don't know the answer to that.
Yeah, and then the banks actually print the, when you go to Hong Kong, the actual specie is issued from the bank itself, as it once was in America.
Yeah.
That the bank actually has to have the money in order to mint, just like Tether has to have the dollars to mint the stable coin, and USDC has to have it. Now, is that when you think of extending a bank's life, right? American banks do nothing like the Hong Kong institutions. They don't mint money, they forgot all that.
I think something that Kate and I definitely agree on is that if you're in this space and if you're running a digital asset portion of your bank, you better be 100% reserve.
Right.
We have been from inception. It is against all models of every other bank, that exists on the earth, really. And so yeah, I mean, whether you're issuing a stable coin, which is really just a blockchain embodiment of a ledger account, or whether you're just managing a deposit account in an extremely volatile environment, you better be 100% reserve. And I think there's maybe, I don't know, maybe it's Custodia and FB Bank that are 100% reserve in the United States,
and
then no one else is.
And that's it.
But that's a hard pill for people to swallow, to understand. How do we go from this fractional banking system that's existed from the beginning of time to a bank that actually has your money?
Can we not say that there's sort of a psychological frame there? Because, I think of banking in America, and most of what we think of banking is based on the prestige that these institutions held for so long. Their power is directly correlated to the prestige they had. Now, since 2008, bank prestige is, you go around New York City after 2008 and you say you're a banker. It ain't what it was before 2008, right?
Yeah.
We have a generation of the best and brightest going into finance because it was the highest paid job, and there was a lot of prestige that came along with everyone knowing you got paid a lot of money. The best people in the world were in that job. Now, I think we all felt watching all those banks a couple years ago go belly up that were associated with our business 2 years ago. Look how fast the prestige came back in our environment. I don't see anyone here embarrassed about what they're doing, right? No one here is embarrassed about working in this game. I don't think anyone in traditional banking, unless they're so drunk off the fiat money they don't know what's going on in the world, but most of them it's not really there anymore. How much of a benefit is the enthusiasm when it comes to role in traditional banks? Like, I've been to these places. You leave one of those offices with the C-suite, you get a bunch of people saying, "Can I get a job?" Right? That happens every time. Now, what I see is our industry has this enthusiasm and this energy, and I think a lot of the power base is in enthusiasm and energy and what people are interested. Is my assessment accurate? Can you speak to that? Is this a thing that you observe as well?
It is, and a lot of banks want to get into it, it is unethical and probably illegal what the SEC did, but it is a fact that the SEC is giving exemptions from SAB 121, which is the punitive accounting standard, to certain large banks.
I saw that.
This is the Bloomberg article. Not a lot of people know about this. Last night someone was sharing it, and they didn't even know the SEC was giving these exemptions. It is nuts. The SEC did not comply with the Administrative Procedure Act in creating SAB 121 because they didn't put it out for public notice and comment as required by law. And then the brouhaha came, Congress voted to override it, then Biden vetoed it, and Congress couldn't override his veto, and then the SEC leaked to Bloomberg their friends, their certain large banks, are getting exemptions from SAB 121 while the crypto industry still has to comply with it. Okay, so now what does that mean? It means the banks are coming, and we wrote a blog post on Custodia's website about the meaning of that. Banks are coming to the custody business. We were chatting backstage. Banks as legal entities are superior in the United States because they provide an exemption from federal bankruptcy process. Federal bankruptcy definitely creates a preference for the shareholders and stakeholders of the estate over the customers. The bank receivership process favors the customers over the shareholders. Right. Really simple. So you want, as your counterparty for custody, you want a bank as a legal entity. So now the traditional banks are coming, but then we're back to what we were talking about at the beginning of this stage, of this session, which is that the traditional banks don't have the tech stack. Mm-hmm. And you start to see what kind of happened with the evolves of the world, where you're mixing cloud-based services with on-prem services. And initially, the evolve hack, it looked like, to me, they thought that was a hardware problem, which is why they didn't, because so much of their system was on-prem, and they didn't have an understanding that they had been hacked. And obviously, we're living the impact of that.
Speaking from the point of view of a bank, do you worry about, like, is that something that is in your risk assessments when you're talking about what's going on? Because indeed, the minute the Office of the Controller, Brian Book's piece came out in 2020, his letter, I said, this is going to turn all of the custodians into a beauty pageant.
Yes.
And they're going to be able to get whatever they want because you've only got so many suitors and only so many dates. And now, is that something are you ahead on that?
I think it is coming.
Yeah.
Yeah, I think going back to an earlier point, though, is that in relation to Bitcoin, the number one, I don't know if it's the number one, but one of the highest values that banks can do is bridge the on-ramps so that more people get access through not only fiat to Bitcoin channels, but custody. In FV Bank, somebody can acquire Bitcoin and hold it in custody today. I can't do that at Wells Fargo. I've been banking there for 35, 40 years. I can't even send a foreign wire out of there. But I think one of the major roles that we can play that is something we're executing upon today is to give more people access to exposure to Bitcoin in a safe custodial environment. That's probably one of the biggest roles that we can play. And I think that as the regulation becomes more clear, we can adapt more services around things like collateralized loans and other things that will come out of owning Bitcoin.
Well, lots of things can come out of owning Bitcoin, but not more time on this session. Okay. It's lunchtime, everyone. It's lunchtime. Please, a warm round of applause.
Thank you.
Thank you. Well done.
Thank you.
All right. Welcome back to the Bitcoin 2024 conference in Nashville, presented to you by Mara. I'm right now at the 3rd annual Bitcoin Women of Bitcoin brunch, and I'm joined by none other than Emily Bailey. Emily, thank you for joining us. This is now the 3rd year you guys are putting this on. The event has grown massively, not just the conference itself, but the Women of Bitcoin brunch. How excited are you?
We're really excited, really grateful to be able to do this. It started out as a very kind of small side event, and there's just been so much demand, both with the attendees, increasing, but also just having more women coming into the space, either as, wives or daughters or people who are working in the industry. We're seeing a lot of diversity in participation and demand for it. So we're really excited to be able to do it. I'm kind of blown away by what they pulled off.
No, it's incredible. I just heard the event sold out in 10 minutes. Like, that is a testament to the event that you guys are putting on, and I'm sure there's going to be a lot of stuff. I won't, unfortunately, be in there, but looking forward to hearing all about it through the gossip, through the grapevine.
Yeah, absolutely. I mean, we I think did not anticipate the demand for it this year. It was shocking, exciting that it sold out so quickly. So we're definitely planning, to go bigger next year so you can have more people. And it's just, I don't know. When I first got into Bitcoin, I was the only woman at the conference. There were several conferences that I went to in 2014 where I was the only woman, and now I have like a whole robust network of girlfriends that are all really into Bitcoin, and it's just kind of surprising to see that happen. So just happy to be able to do this. And we had some incredible sponsors that made this a priority. We have Mara, of course, who took the title sponsor for the Women of Bitcoin brunch, and I know we have God Bless Bitcoin, who is really involved with this event, and they have their screening of their documentary here. And all of the women representatives from our sponsors are here as well. So it's great to see that leadership and participation at that level.
Amazing. Guys, if you are not already subscribed, be sure to smash that subscribe button down below. There'll be more coming from this conference throughout the next 3 days. Thank you again, Emily.
So what is money and how does it get value? Paper money has value because someone says so. Bitcoin is different. It's like digital gold. It has value for many of the reasons gold does, but that's only the start. It has a limited supply, only 21 million, so no one can decide to just print more. Because no central authority controls it, it can never be shut down. And unlike with banks and credit card companies, you don't need approval to use it. It puts the power back in all our hands. Bitcoin lets you control your finances. Kraken lets you buy Bitcoin. Kraken, see what crypto can be.
You guys just heard from the Woman in Bitcoin brunch. Yo, what's up, everybody? We're Simply Bitcoin. My name is Nico Moran, of course, my legendary co-host, Optimus Fields. And that's right, we'll be taking over the news desk for the next hour. You know what that means? We're about to 10x the energy, baby. Special shout out to Mike Germano, David Bailey, and the whole Bitcoin Magazine team for making this possible. And of course, we're the #1 daily Bitcoin live show on YouTube, Rumble, and X, Monday through Friday, 12:15 p.m. Eastern Standard Time. And of course, we'll be your guide through these tumultuous times, or as we like to call it, we'll be your guide through the separation of money and state. That's exactly what I want to start with, Opti, right? Which is, this is what we're living through these days. There is the separation of church and state. It happened during the Napoleonic era, and now we're living through this pivotal moment in human history where we're living through the separation of money and state. And I think that changes everything, because all of a sudden now, the individual has the ability to save and earn in money that can't be manipulated, confiscated, or controlled by the state. And that just tremendously changes the balance of power, right? And it just completely changes the social dynamic of everything, right? So I'm so excited for these moments. But of course, like every pivotal moment in history, there's some turbulence, to say the least.
Without a doubt, Nico. As we're seeing right now in the popular culture, a lot of people are very dissatisfied with the status quo. And if there's anything we've noticed in the last couple of weeks since politics has landed on our door as Bitcoiners, is that people are waking up to the fact that there's problems going on, that maybe we need new solutions. And as a Bitcoiner, and the title of our channel, Simply Bitcoin, we think Bitcoin is the solution. Fix the money, fix the world. It's a very simple solution. It might even sound too simple to people, but as most people our age, our generation, millennial and younger, we have basically no hope in the fiat system. And this is why you see such a savage response from Bitcoiners, and why we are so committed and obsessed with explaining to everyone, orange pilling the masses to this idea that literally, guys, fix the money, fix the world, everything will follow afterwards. And now, as Bitcoiners, and as we like to talk about on the show all the time, politics is right on our door. And we use the title of separation of money and state for a reason, because we are in a new era as far as I'm concerned. Now we have a money that no one can control, that can't get debased, that literally cannot be stolen from you, and the powers that be are freaking out. And as a Bitcoiner, you just love to see it. We're like,
Absolutely.
Yep, we're just winning so hard that they're freaking out and they're coming on our door.
And they're asking Bitcoiners, hey, what should we do? Or should we be afraid of Bitcoiners? Should we be afraid of this movement? And as we like to talk about constantly, we are a very powerful movement. As a Bitcoiner, as a voting bloc, as a social movement, Bitcoiners are going to take over the world. And we've seen in the last 15 years that Bitcoin is actively taking over the world. As we say all the time, it's going up forever. It's either going to zero or it's going to infinity. And the fact they can print infinite dollars means it's going up forever.
Infinity divided by 21 million, am I right? Anyways, people know that there's something inherently wrong with the system. You see the TikTok videos, you see those very popular videos, people get frustrated. They don't know what's going on. Like they're essentially saying like, look, I'm working 2 jobs, I can't get ahead. What is going on? It's becoming apparently clear that if you're a Zoomer or a millennial, you do not have the opportunities that your parents had. Right? And what is wrong with the system? Well, it's obvious. The money is broken. And it's our job as Bitcoiners really to wake people up and to make them realize that it's not a left or right issue. It's not a red or blue issue. The true battle at hand is the party of green, the party of fiat, central bank, digital currency, slavery, nihilism, war, versus the party of orange, the party of hope, peace, prosperity, opportunity. And of course, that's the party of orange, baby. And that's what we got to fight for. So keep in mind, everybody, don't ask what Bitcoin could do for you. Ask what you can do for Bitcoin. So if you have, if you have that uncle, that crazy uncle at, Thanksgiving, or you have whatever, for whatever reason, they're still, consuming the legacy mainstream media, it's your responsibility to really wake them up and to make them realize that Bitcoin is the solution. Bitcoin is what is going to make the American dream possible in today's era. The American dream isn't dead. You're just using the wrong money. In fact, not only is the American dream not dead, it's been exported all around the world. If you are living on a Bitcoin standard, your life will get progressively cheaper over time. And what does that do? What are the secondary effects of that, my friend? All of a sudden, you have hope for a better future. In this nihilistic world, you're living in an optimistic world.
Hey.
Passing it on to Optimus Fields.
Optimism is a way of life. Actually, I do want to kind of go back a little bit. You were talking about people that watch a television and they watch the news. So at this point, I'm going to do a literally breaking of the fourth wall and call out my mom and dad because I know they're watching right now. Mama, we made it. And you got to unplug the corporate press. You need to not listen to the news right now because as we cover every single day, and I'm sure we're going to get into it with this next Simply Bitcoin Hour takeover, most of the things we're seeing come out from the corporate press, from the institutions that be, it's pure propaganda. Hence why we like to jokingly call ourselves Bitcoin propagandists because we understand the power of narrative trench warfare. And this is what we are all doing here as Bitcoiners. This is what you do on social media. You are in the front lines on the information war, which is being fought out on the internet. And I know a lot of things we talk about, especially coming out the younger generations, a lot of Bitcoiners themselves, we are way outside the Overton window. We're way outside what the normal population thinks is normal to talk about. And we lean into it. Of course, we don't want to leave people behind. We want most people to save in Bitcoin. As we say all the time, Bitcoin is for anyone. If you have a problem, which I would say there's 8 billion people on planet Earth that all have the same problem, we have a really bad money. It is broken money. The systems are corroding. They are falling down. People are losing trust in the institutions. And you're starting to see the social backlash of this. And as a Bitcoiner, as someone that believes in personal sovereignty and personal responsibility, it's important to take back your mind. And this is what Bitcoin allows you to do. Once you understand the institutions are probably lying to you, then you start to ask more questions and wonder, well, who else is lying to you? And as we talk about all the time, as my moniker is Optimus Fields, once you get on the Bitcoin standard, a new, pure, hopeful view of the future pops out, and you start to look at the world brightly. You start to look at the fact that life can be good. No longer are you worried about social issues per se. No longer are you concerned just about survival. You start to realize that just surviving is not a way of life. It's about thriving. It's about living a good life. It's about taking back your mind, taking back your body. As I say every single day on our show, fit body, fit mind, fit soul. This is how we win. People taking back personal sovereignty, personal responsibility, and the rise of the individual is taking place right now, and we battle it every single day on the internet.
Of course.
And it's beautiful.
Because just to add to your point, like, this is information warfare. This is narrative trench warfare on the battlegrounds of the internet. And every tweet, think about it like a metaphorical bullet. Every meme, think about it like a metaphorical artillery shell. This is really a war over the hearts and minds of individuals, trying to get them on the side of orange, right, versus the side of green. I don't even think they're aware they're on the side of green, right? It's like that, you know? But look, I do want to pivot the conversation, and I want to talk about politics and Bitcoin. This is actually something that, for a lot of people in the Bitcoin community, they aren't really fans of it. And of course, you know, it goes from you know, Bitcoin's early days, right? This is kind of like this anarcho-capitalist thing. It's all about the cypherpunks and all that stuff. We have entered into the mainstream political sphere, and the reason for that is our movement is influential, right? Bitcoiners are now becoming a big voting bloc, and of course, politicians want to be voted in. So it creates a situation where, you know, if you're a pro-Bitcoin politician, you know, Bitcoiners are going to vote for you. I personally am a single-issue voter. I truly believe that if you fix the money, you fix the world. So I'm just laser-focused on that, right? And I cannot believe this happened a lot sooner than I anticipated. I was expecting actually 2028 for this to happen, but it happened in 2024. And the reason for that is simple. The current administration has taken a very hostile stance towards the industry. They had a 30% proposed Bitcoin mining tax, of course, just to neuter the industry. Elizabeth Warren, Operation Choke Point 2.0. Caitlin Long's Custodia Bank being denied a federal banking charter. The attack on Bitcoin self-custody. And of course, that created an opportunity for opposing political parties to come in and say, you know what? Actually, we are pro-Bitcoin. We'll protect your right to self-custody. It was so funny seeing Donald Trump, and shout out to Vivek for telling him this, Donald Trump in a campaign speech essentially bring up CBDCs. Hey, if you vote for me, you know, I'll take an anti-CBDC stance. And he was surprised by the crowd's reaction. The reaction was like, yeah! And Donald Trump's like, whoa, you guys like that. Fast forward 2 weeks later, he's like, you know what? I'll free Ross, and I'll protect your right as a Bitcoiner to take self-custody and to mine. And of course, he had a fundraiser in Mar-a-Lago, right? So look, this is the game theory being played out in real hand and real time. And what I gotta say is, like, look, you might not care about politics, but politics sure does care about you. And I'm personally gonna vote for the candidate that, you know, is gonna protect my right to self-custody, right? I'll say it as that. Like, do I believe that
hot take?
Do I believe that Bitcoin needs, you know, a politician to survive and thrive? No, I would say politicians need Bitcoin to survive and thrive. I would say it's not the government that's going to regulate Bitcoin; it's Bitcoin that's going to regulate governments. Opti?
100%. Look, I am just like most Bitcoiners. I am very skeptical of politicians. I was an apolitical person, and that's why I love Bitcoin, because it's apolitical money. But once you understand that Bitcoin is apolitical, you start to understand that that's why it is so political. That's why it's entering into the political scene. And a lot of our Bitcoin friends, they are feeling a little weary. They are a little concerned about politicians. They're just saying, you know, oh, politicians just need votes. Of course they're talking to Bitcoiners. Of course they're saying the things you want to hear. And I totally agree. But as Trump's classic logo or classic motto is, the only way to really make America great again is if the money is good. And as Bitcoiners, we believe if America embraces Bitcoin, allows Bitcoin businesses to thrive, allows Bitcoin individuals to thrive, then everyone else gets better afterwards. This is how it starts. It's because of the money. As Max Kaiser so famously said, and it's one of my favorite quotes ever, he who holds the Bitcoin makes the rules. And we're seeing that now they are bending the knee to our movement. And you just love to see the fact that they understand the game theory playing out. Whether they understand it consciously or subconsciously, they understand that Bitcoiners as a voting bloc, as a movement, is a huge untapped resource. If I remember my numbers correctly, I'm pretty sure there is about 40 million Bitcoin holders or Bitcoin and crypto adjacent holders in America. And if they could sway those Bitcoin votes, it's going to be a landslide. And so, as much as if you guys watch Simply Bitcoin, you know, I'm a Californian by you know, my culture. I was born in California. You guys can throw tomatoes later. So I would say I was a default Democrat growing up. And now I'm starting to realize that, hey, look, we have one side of the aisle that's trying to attack Bitcoin. They want to stop Bitcoin businesses. They want to tax us. They want to arrest us. And the other side, whether they fully mean it or not, are embracing Bitcoin. They're embracing the movement. They're understanding that the way to succeed is by giving power to the individual, whether they know what they're doing or not. I remember the classic meme of Bitcoin is a Trojan horse for freedom. And as much as you may not like politics, as much as we are, I'm going to say, disgusted by politics, we understand that many politicians are corrupt. We think, as I said like 5 times already, fix the money, fix the world. Bitcoin will have a way of making politicians honest. As we always say, Nico, it's not a coincidence that the last 100 years is the bloodiest era ever, and it's backed by the money printer.
100%.
Most of the problems, if not all of the problems of the world, are backed by the money printer. They can print unlimited money to back things that the population doesn't agree with. They don't even have to agree with us. As we've seen in the last couple of weeks, the elites in power do not care about what the average person thinks because they don't have to actually do what you want them to do.
Yeah, the incentives are misaligned. And you buried the lead there, then I kind of want to hit that topic, right, in regards to the Democratic Party, right? Kamala Harris had an opportunity to come to the Bitcoin conference. In fact, we have a current administration that, belongs to Joe Biden, who's part of the Democratic Party. He has the opportunity to one-up Trump and free Ross right now. He has the power to do that. Kamala, who is going to be the Democratic presidential nominee, she had the opportunity to come to the Bitcoin conference, but they refused. And what that tells me is that currently the Democratic Party is representing the party of green. I don't think they're properly representing their constituents. I don't think that, if you're a Democrat and you're holding Bitcoin, I don't think that the current Democratic Party stance on Bitcoin properly represents your interests, which of course creates an opportunity for, RFK Jr. and of course Donald Trump to capitalize on that. But of course, this is Bitcoin's game theory playing out in real time. Anyways, I do want to pivot the conversation to this idea of America has been held hostage since the establishment of the Federal Reserve in 1913. And I think you said a really, really famous quote. I think originally it came from Ron Paul, which was, it's not a coincidence that the bloodiest century in human history is the century of central banking. And why is that? Well, it's pretty simple. If you have a money printer, it's a wealth redistribution mechanism from the lower middle classes that do not have the means to save in assets back to the very wealthy that do have the means to save in assets and back to the government. And it allows the government to endlessly print money to keep paying for endless wars. And this is why you're seeing the endless wars. And also, it has a very detrimental effect for people that earn and save in fiat, which is the vast majority of society. This is why you have people living paycheck to paycheck. I do not believe that you can have a free society if a central bank exists. And I'll say this. If you are against Bitcoin, by default, you are pro central banking, right? And this is something that people have to realize. They have to understand that it is Bitcoin or slavery. There is no middle ground. Most countries on planet Earth are moving full steam ahead in developing a central bank digital currency. And that is fiat times 100. Think about the Canadian truckers protests, right? The government didn't like certain political beliefs and certain political protests, and you know what they did? They shut off the money. Imagine what they'll be able to do with the central bank digital currency. It's scary what they're doing in China. It's called soft power. So essentially what they do is that they incentivize you for certain behavior. If you talk ill about the government, they punish you a little bit. So what do people do? It's not like a direct force, right? It's not a direct forcing function, but it's almost like they incentivize you to behave a certain way. And what is that but not slavery? And it might not be the slavery that we all imagine with chains, but there is a chain. It might not be, you might not be able to see it physically, but if the government is incentivizing you to react a certain way, to behave a certain way, what is that but not slavery, right? And now what is the alternative? The alternative is freedom money, a money that no one can control, no one can create for free, right? So the message is simple. I refuse to work for money that another man can create for free. And I think the world would be a much better place if no one had that godlike power. Opti?
100%. I couldn't agree more. I mean, we say it every single day. Central banks are, for the most part, the sole arbiter of what happens in the world. They can print money from nothing. And if you're an amateur Austrian economist like we are, you understand the Cantillon effect. Those that are close to the money spigot, they get the power. And let's not forget what money is. It's simply power. It's power personified. And now we're seeing that as that power gets taken away, the powers that be are scrambling. They're terrified. You're backing them into a corner by literally just stacking sats, taking it into cold storage, and you're seeing the response. It's a reactionary response from the powers that be, not liking the Bitcoin industry, being afraid of the individual because, hey, there's more of us than there are of them, though most people still believe in the legitimacy of the institutions, but we're seeing in real time that it is crumbling. And I do want to go back to the idea of the central bank being the last 100 years. Let's not forget that the Federal Reserve was created overnight at a secret meeting on Jekyll Island in 1913. They literally took the country by surprise. They had a private meeting, and here we are 100 years later. Everything is starting to crumble. We're starting to see the cracks in the system. And I really believe that only Bitcoiners, only the real diehard Bitcoiners, yes, we may be dramatic, yes, we might be hyperbolic, but...
Are we, though?
I don't think so.
Are we?
I don't think so. But we are breaking the Overton window.
Like, the statement of Bitcoiner slavery, it might be very intense, right? But is it hyperbolic? I would say it's true. I don't think there is an in-between.
No, I mean, we say it all the time. Why does the average person have to become an investor just to survive? Whatever happens.
Why should we be forced via legal tender laws to earn in a money that it constantly loses purchasing power? Why does money have to lose purchasing power in order to exist? Like, that's the psyop.
Ask Paul Krugman. He will give you the answer. It's so that we can have the velocity of money, guys. We need to make sure that our money loses purchasing power to ensure that the wheels don't fall off. And I think that is flawed thinking, but that is the status quo. That is the normal thought process of people, that you need to lose purchasing power to continue this economy to move forward. And as a Bitcoiner, as someone that believes in a hard money standard, if you've done basic history lessons, you understand that once countries go on a gold standard, they are more productive. They have golden ages. And I don't know about you guys, but we're all looking around the world right now, especially as younger generation, and we're all disgruntled. Most people are tuning out. Most people are nihilistic. They don't want to participate in anything going on in the world because they are hopeless. And as someone that has been stacking sats, that has changed my operating system, as CK always says, life is great. Life is wonderful. I do not lose purchasing power. In fact, all of my savings goes up over time. And once you can take back your mind, once you're off the survival level of the hierarchy, you start to put your efforts and your mind and your creativity towards things that will better the world.
It's crazy what happens when you start saving in a money that increases in purchasing power over time.
So interesting.
Right? All of a sudden you have hope for the future, right? Versus this nihilistic survival of, basically surviving on a money that's constantly losing purchasing power. And of course, that makes you default nihilistic about the future, right? And I think most of the world has this, nihilistic view of the world. And what I see in Bitcoin, it's hope, it's inspiration, it's, oh my God, I actually have an opportunity to get ahead. It's not, will I be able to afford this? Will I be able to afford to live? It's more so, how much do I need to stack and how long do I need to hold, right? That becomes the question, right? So it becomes a much better situation. Anyways, I do want to pivot the conversation to something that we talk about a lot on the show, a central theme of the show, which I call the Great Disintermediation. But before we get into that, guys, you're listening to the Simply Bitcoin News Desk live at Bitcoin 2024 Industry Day. Anyway, smash that like button. Consider subscribing to the Bitcoin Magazine YouTube channel. Anyways, so I do want to talk about the Great Disintermediation. So what is that? The internet changed everything. What did it change? It gave the ability for people, mass-scale, peer-to-peer communication. So there's no longer a handful of legacy media institutions. Now you have people directly communicating with each other. That's why Twitter, right now, currently, the X app, is the most popular news app. It broke the news of Joe Biden basically announcing that he wasn't running for president much quicker than the legacy institutions. Not to mention, it's free and open discussion. Right? This is why they didn't react very positively to Twitter. This is why they don't like Twitter, right? So now you have mass-scale peer-to-peer communication. That causes a great awakening. It causes people to do their own research, to get their information. it's not a coincidence that the most popular broadcasters in the world are independent media. Of course, I'm talking about Tucker Carlson and Joe Rogan. They're not connected with the legacy institutions anymore. And I think what we saw over the last 5 years, Opti, is that the legacy institutions, man, like, supposedly these are professional journalists, and, like, what I came to realize is a very strong word, but it's almost a little bit like propaganda in a way. Almost, right? I'm saying that gently. Anyways, I do want to quote an article from Bitcoin Magazine. It's called "Don't Drink the Elite's Kool-Aid," and it was written by Nayib Bukele. And the reason I'm quoting this article is so that you guys don't think we're crazy when we're saying this type of stuff.
Yeah, it's not coming from us.
So anyways, this is to quote Nayib Bukele. "The most vocal detractors, the ones who are afraid and pressuring us to reverse our decision." Of course, he's talking about the Bitcoin law in El Salvador, "are the world's most powerful elites and the people who work for or benefit from them. They used to own everything, and in a way they still do. The media, the banks, the NGOs, the international organizations, and almost all the governments and the corporations in the world. And with that, of course, they also own the armies, the loans, the money supply, the credit ratings, the narrative, the propaganda, the factories, the food supply. They control international trade and international law." And here's the punchline. "But their most important, but their most powerful weapon is their control of," quote, "the truth." Right? And this is why the great disintermediation in terms of information is so important. People have the ability to consume the information they choose to. It's not being force-fed into them. Anyways, the other thing that's beginning to happen is the great disintermediation of money. People have the ability to choose the money they want to use. And of course, Bitcoin has found a sly roundabout way to exist without being able to shut down. So governments, by default, they're going to be forced to compete with Bitcoin. And of course, Bitcoin's always going to win because it's censorship resistant and it's deflationary versus fiat, which is censored sometimes and inflationary by design. Anyways, Opti?
Only sometimes censored. Yeah, look, first and foremost, some context. I am a public school student. So, you know, I understand the fact that I've probably been drinking the Kool-Aid my whole life. I would say I was brainwashed by the government schools that I went to, and only after college.
Hold on, but
brainwash is a strong word.
In what sense? Like, what sense?
In the sense that you aren't taught to think critically. You're taught to essentially just believe what they say. Do not question the narrative.
You think that's by design?
I 100% believe it's by design.
Why?
Do I really have to quote a very famous article from the early 19th or 20th century? I don't know if I can say that on this channel here, or I'm going to get canceled on it.
So don't.
But one of the tenets of a very popular collectivist movement is literally to indoctrinate's a hard word, but to take over the power of the education and the school system. So this is where we are right now. And the power of the internet, the power of the fact that people are waking up to the lies coming out of the corporate press. We like to use the corporate press because they don't abide by the truth. They're not really journalists. They have a narrative and they want to spin a certain narrative.
Not all of them.
Not all of them. I would say the big ones. The big ones. The main 5 or 6 that we consider to be the arbiter of truth, they have a narrative. They are not being bound by the truth like all of us are on Twitter, like all of us are that are creating content as Bitcoiners. The reason Bitcoin is so powerful, the reason Bitcoin memes are so powerful is because they have truth behind them. There's some semblance of truth in it and people resonate with that. And now we're waking up to our power as individuals. Remember, what is the most terrifying thing to people in power? It is a well-informed population. And now this is what we're doing every single day. You guys doing your research on the internet, you guys critically thinking, you guys that survived a very big lockdown and didn't believe the narratives coming out of the government for your own health, for your own critical thinking. We are the frontline soldiers. What do we say all the time on our show, Nico? Tweets are the bullets and memes are the artillery. We are in a narrative trench warfare on the battlegrounds of the internet. Every single one of us has a role to play. You don't need to make content. You don't necessarily need to be, on the stage at Bitcoin Magazine to have an impact. This starts from the ground level. This is a grassroots movement. The more you conversate with your friends and family about what you believe is the truth, obviously have some decorum and don't be just the crazy person saying all the crazy things. We like to try to stay within the Overton window. We like to try to stay within what the population believes at the moment, because this is how we change things. And kind of rolling back a little bit, Nico, we've been talking about the new trend of politics in Bitcoin. And again, I mentioned a lot of Bitcoiners are very turned off by politics, but I think it's very important for Bitcoiners, hardened Bitcoiners in general, to get involved with their community. It doesn't necessarily need to be in politics, but get involved with your neighborhood. We need to bring things back to the local level, where you know who your neighbor is, where you guys have these discussions, where you don't rely on the institutions, where you don't rely on the blob in Washington, D.C. to tell you how to live. You have a brain, use it, and think critically, do some research. Understand that everything isn't exactly how it's perceived to be. I love quoting movies, Nico, and I'm sure everyone has seen The Truman Show. And we are living in The Truman Show in real time, and people are waking up to it. And this is what we're seeing happen right now in society. This is why you see so many people disgruntled on the left and right. This is why you're seeing these populist movements, again, from the left and right. We all are seeing a very similar problem. The only difference is our solutions. I fundamentally believe that the history of humanity has one fundamental theme. What is the best way to organize society? And now it's happening in real time. And instead of falling for the left side or the right side, there's a third option, and it's called Bitcoin.
Yep.
This is not left versus right. This is orange versus green. This is about freedom, individuals versus the state. And I think we would say we were winning. But considering community notes, Elon freeing the bird, there's a lot of conversation happening on the internet right now that would never happen on the corporate press.
Yes, absolutely, and we're definitely the Overton window is definitely shifting. We're definitely heading in the right direction. But what I would say is that we still have a lot of work to do. There's still a tremendous amount of convincing. There's still a tremendous amount of hearts and minds that we need to win over. So our work is not done. Right, and what I got to say also in regards to what you were saying, it almost sounds like it's like this revolution. It's like this movement, and I got to say, like, guys, this is a peaceful movement. This is like the beauty. This is the beautiful part about the separation of money, say, in the peaceful Bitcoin revolution. If you want to partake, even if you're not aware, right, even if you're completely like unaware of what you're doing, the only thing you have to do to partake is taking Bitcoin into self-custody. In fact, if enough of us do it, we win by default, and there's absolutely nothing they can do, right? So this is an election year, and it is important to vote. But I got to remind everyone, the most important vote you can make is the vote with your wallet. And the vote with your wallet is simple. You buy Bitcoin, you earn Bitcoin, you mine Bitcoin, and you take that said Bitcoin into self-custody, and that's it. And you're defunding the system in the process. You're earning dollars, and you're selling those dollars for Bitcoin. Something that there's a cap supply, there's 21 million, you can't create more of it, right? Everyone's equal in the Bitcoin system. It's a system of aligned incentives. It's not a coincidence that the first country that made Bitcoin legal tender has the most popular president in the Americas. Why is that the case? Well, it's pretty simple, right? If you separate money from state, the only way the state is able to raise revenue is via direct taxation. Meaning they have to convince the populace that their ideas are good. The system that we have today is a very kind of insidious system, right? In 2023, the U.S. government spent $1.7 trillion more than it collected in tax revenue. How is it able to do that? They printed the difference. They stole, essentially, right? Every time they debase the currency, I see it as theft. So if you separate money from state, all of a sudden, politicians, instead of trying to protect their moat, protect the moat of the money printer, all of a sudden they're incentivized to do good by their constituents. And I think we're starting to see that. I think we're starting to see inklings of that all around the world. And that makes me extremely optimistic about the future. I mean, the fact that we have a potential future president, ex-president, speaking at a Bitcoin conference is absolutely historic. And shout out to the Bitcoin Magazine team for making that happen, because that is incredible. That is a testament to the power of our movement. It has that much influence. We have that much momentum behind us. that, you know, a popular politician felt like he had the necessity to go to a Bitcoin conference and essentially ask for people to vote for him. Like, that's incredible. And this is just beginning. And that makes me so, so excited about the future. So remember, everybody, to participate in this revolution, all you got to do is take self-custody. Learn how to do it. Learn how to use a hardware wallet. Put your Bitcoin in cold storage. Don't touch it. Don't sell it. That's all you got to do. You do that for a cycle, you're going to realize it's a good idea. You do it for 2 cycles, you're going to be significantly wealthier compared to when you started.
Wait, Nico, playing a little devil's advocate here, it almost sounds too simple to just change the world by saving in Bitcoin. What would you say to the skeptics out there?
I would say it's so simple, it's difficult.
Yes.
Because, like, literally, like, if you guys are new to this and you guys are like, how do I do this? It's pretty simple. Like, literally, just why
if you can send an email, you can save in Bitcoin and take it into self-custody.
We call our channel Simply Bitcoin for a reason, right? But it's pretty straightforward. All you got to do, like, literally, if you were to do one thing, all you got to do is just make sure that you have more Bitcoin than the day before. That's it. Everything else is noise. Don't try to trade it. Don't buy altcoins. Just buy Bitcoin. Sit, hold. I promise your life will get progressively better over time because now you're on a Bitcoin standard, right? And remember, most of the world is not on a Bitcoin standard, right? And something that you got to fundamentally understand is you don't change Bitcoin, Bitcoin changes you, right? So there's another component to it, and I think it's deeper. And people have to understand how important the role of money plays in the human condition, right? Like, half of every transaction is money. What happens if that money is fundamentally corrupted? It's fundamentally broken. Well, it affects many facets of society, right? I would say it affects all of society, right? What happens if all of that all of a sudden that money is sound? All of that money is fixed. Well, I know what adopting a Bitcoin standard has done for me. I know what it's done for Opti. I know what it's done for my company. I know what it's done for Michael Saylor and MicroStrategy. I know what it's done for El Salvador and Nayib Bukele. You're telling me all of those things are coincidences? People and countries and public companies that have adopted Bitcoin standard? It's almost like as if it's a cheat code. What do you think, Opti?
It's a life hack. I find it absolutely hilarious that it's a novel idea to simply save money. It's absolutely ridiculous that we've gotten to this point where economics is so complicated that the average person has to basically go to a professional, trust an expert, because it is too complicated for you out there. You are not smart enough to handle your own money. You need to become an investor. And us Bitcoiners are like, look, bro, all you got to do is save in Bitcoin and life gets better. Number goes up afterwards because it's a hard cap money. It's absolutely insane that saving money seems like the wrong thing to do. If a government if an individual handled their balances like a government did, we would all be broke and bankrupt. But hey, let's not look behind the veil. Let's not talk about the fact that the United States government has been bankrupt for a long, long time. I would say since 1971.
Where's the gold? Where's the gold in Fort Knox?
What happened in 1971?
Where's the gold? That's what I gotta say. Where's the gold? Like, and again, like, these are, and I understand, you know, some of you guys listening to the stream, I encourage you, don't trust verify, do your own research, but you just look back in American history. The 6102 order, FDR made it illegal for American citizens to own gold. He put all that gold in Fort Knox. There hasn't been a picture of the gold in Fort Knox taken since the 1970s, right? And the reason I'm bringing this up is because El Salvador just made their reserves public. They posted their Bitcoin wallet address. You can literally don't trust verify. You can check their reserves. And what happens when you do that is it's a forcing function for politicians to become honest, because it's a lot harder to take a little bit off the top to pay for a war if everyone has, you know, the visual, if everyone could see the balance for themselves, right? So again, if there's any criticisms of El Salvador, what I got to remind that specific government and that specific politician is make your reserves public. Make your gold reserves public. I don't think you could do that. It's not very easy, right? This is the power of Bitcoin, right?
Well, Nico, you said honest politicians. That's like saying jumbo shrimp here.
No, but I would say no. Hold on a second. That's not fair.
I know. I'm trolling.
I would say that the system is currently designed in a way where they're not incentivized to do good by their constituents, they're really just incentivized to get as close as humanly possible to the money printer, versus under a Bitcoin standard, a sound money standard, right? They're incentivized to do good by their constituents because that's the only way they'll remain in power, and that's the only way they'll be able to raise revenue.
Well, also, you know, governments would need to be productive. And as I say, again, this might be an extremist take here, but it's not my quote. What's the scariest sentence to ever hear? I am from the government and I'm here to protect you. Well, now we can literally take our money out of the system and they have to actually work for you. Again, what a novel idea to have politicians and senators work for you in a representative republic. This is how it should have been. If the founding fathers had Bitcoin, they would be Bitcoiners because they understand the power of money. Again, guys, it's all about the money. It will always be about the money. He who has the power to print money has the ultimate power. And now we have taken away that power because of Bitcoin, because only Satoshi, and you could argue that this is why you don't like Bitcoin in the first place, was able to create Bitcoin, and then he stepped away because he understood the power of a figurehead. Now that he stepped away, now that no one controls the network, now that you guys, the individual out there running a node, has a say in the network that runs the rules, that ensures the rules of Bitcoin are as we say they are no longer able to steal from you silently, which we would call inflation. All the things we're seeing right now is the mismanagement of money and the fact that the money is coming from a centralized authority that can print money, that can do whatever they want with money. They can expand the money supply. They can make you poorer literally every month when 12 people meet in a meeting behind closed doors telling you how the economy should work, which is absolutely ludicrous considering the fact that no one is smart enough, and not even 12 people are smart enough to understand all the intricacies of the economy. And yet, this is the status quo. Remember what is written in the Bitcoin white paper. Money on the internet is relying on trusted third parties. Remember, trusted third parties are security holes. Take back your life, take back your money. You don't need a middleman in your money to tell you how to use your money. You don't need a middleman in the middle of the monetary network to tell you what needs to be done for the prosperity of the world. Now, as a Bitcoiner, we know what our monetary policy is going to be for the next 100, if not thousands of years, if Bitcoin is able to last that long.
If it stays decentralized and secure.
If it stays decentralized and secure, which means if you guys are running nodes, if you guys are staying vigilant, if you are not leaving your coins on exchanges like AKA honeypots, this is how we ensure that Bitcoin wins. The individual taking back their money. Again, the most powerful vote you can make is with your pocketbook and your feet. Well, I don't want to leave America, so I vote with my feet, or rather, I vote with my money. I save in Bitcoin. I don't leave Bitcoin on an exchange. And you're seeing, as we're going to see tomorrow when Trump comes on the stage, they are starting to realize the movement, the impact of Bitcoin, and this just shows how far we have come as Bitcoiners. Bitcoin's been around for 15 years. You know, gold's been around for thousands of years, and this is the only thing people can say about Bitcoin. Oh, it's too early, it's too young, it doesn't have the track record. Well, now we are entering the mainstream. We are breaking the echo chamber, and I really do believe tomorrow, if we get an incredible speech coming out from Donald Trump with some semblance of Bitcoin ethos in it, if he is actually trying to win the Bitcoin vote, I think we're going to hear some big news coming out tomorrow, and it should make the mainstream media. And as we're seeing what is said about Bitcoin and the Bitcoin conference in Nashville on the mainstream media, it's going to expose those incentives. So I'm very interested to see if we see negative press come out from the Bitcoin conference and Donald Trump speaking at the Bitcoin conference, or if we see some positive things come out of this conference. Either way, it's all good for Bitcoin. Everyone's going to say something. I'd be worried if they said nothing. And everyone is going to be talking about what's happening here in Nashville this week. And man, it feels amazing being here. Absolutely. I was telling Nico this the other day, you know, we've been to many conferences. The 2021 Miami conference seemed like it was going to be the biggest Bitcoin conference.
It was. I mean, that was the conference where Nayib Bukele announced to the world that Bitcoin is legal tender. That's the conference where Jack Mahler's made this historic speech. That's the conference where Max Kaiser interviewed Michael Saylor. That's when around the time where Michael Saylor and MicroStrategy were starting the Bitcoin strategy. So it was a historic conference. I truly believe, and just to kind of add to Opti's take, I think we're on the verge or very close to Bitcoin becoming mainstream. Basically breaking the Bitcoin echo chamber. And the reason I'm saying that is just, take a look at the speakers at this conference, right? You have Donald Trump. You could say that he's one of the, I know some people find him divisive, but I could confidently say he's one of the most popular people on the face of the planet. Maybe Elon Musk is above that, but Donald Trump is definitely extremely popular, right? And he's speaking at a Bitcoin conference, right? And of course, you have RFK, you have Cathie Wood, you have Michael Saylor, you have mainstream content creators.
Russell Brand.
Exactly. You have mainstream content creators that aren't necessarily, they don't make Bitcoin content every day like we do. You have Russell Brand making an appearance. Of course, you have Edward Snowden. You have Vivek Ramaswamy. Why are these very famous people, very influential people, why do they feel the need and the urge to make an appearance at a Bitcoin conference? Because we're winning. Our movement is winning. Our movement is on the ascendance, right?
Well, it's also the biggest organization of freedom-minded individuals. And if that's who you're trying to reach, then you need to be at the Bitcoin conference. And not only are we going to break the echo chamber via the fact that everything we're saying, all the Bitcoin signals started to get exported to the corporate press, but we haven't even seen the Bitcoin price start to pump.
Yeah, and let's talk about
that.
Once
it starts to go and the retail FOMO's into Bitcoin, it's really going to be game on. And, we always say we don't really like to speculate because as much as everyone loves the price of Bitcoin, as much as that's what most people talk about, we got to be honest with ourselves. People get involved, people get excited, people start to pay attention about Bitcoin when the price starts going. It's a positive feedback loop. As the price goes up, more people start to wake up to the fact that, hey, I can make some money here. Or as we like to say, you come for the money and you stay for the revolution. Once you really understand what Bitcoin is about, you start to wake up, you start to unplug, and you realize, oh, wait, I can get wealthy while I also make the world a better place. It's absolutely the best incentives ever created. Shouts out to Satoshi. Thank you, Satoshi, for creating the best money ever. And I would say rewriting the course of history. We have jumped a new timeline since 2009 onto what I would argue a more prosperous, hopeful future. And that's what I want to be a part of. I was taught with a very simple idea, which probably most of you were as well if you're around my age, leave the world better than you got it. Whatever happened to that? Now we are seeing that as the fiat empire starts to crumble, they're trying to rob the coffers as quickly as possible before people wake up to the fact that everything is gone and the emperor has no clothes. This is where we are in the story right now. I fundamentally believe I was born to be a Bitcoiner. I was born to be here at this moment in time, as well as every single one of you guys out there watching this live stream. We were meant for this moment.
Yeah. Yeah, and again, like the question is like, what future do you want your children to live in? What future do you want your children's children to live in? What future do you want the future generations to live in? Do you want them to live in a future of nihilism, poverty, despair, endless wars? That is the future of fiat. Or do you want them to live in a future of hope, peace, opportunity? And all you got to do, again, to partake in this peaceful revolution is buy Bitcoin, earn Bitcoin, mine Bitcoin, take that Bitcoin into self-custody. And like I said, if enough of us do it, we win by default. Anyways, I do want to kind of double back to one of the things that you were talking about, Opti, which was, these ETFs came in. We had this crazy run. Now we are we're currently experiencing the biggest Bitcoin conference ever, in my opinion.
It's definitely huge.
Yeah.
It's huge. You should have been here. It's huge.
This is huge, to say the least, right? So, what's going on with the price? We've been going sideways for, a couple weeks now, man. Like, what's going on?
Are you asking me seriously?
What I'm asking you is Bitcoin dead?
It's so over. There's been, 300 obituaries of Bitcoin. It's so over. It was a good run, boys. Pack it up. We had a great time here. No, seriously. Maybe I shouldn't put my tinfoil hat on, Nico. Am I allowed to put my tinfoil hat on? Okay. Well, I fundamentally believe there are some powers here that want to keep the price low. I think it's very obvious that people want to pack their bags. We all want cheaper Bitcoin. We're all playing the same game. The name of the game is accumulation. We are playing Hungry Hippo on try to acquire as much Bitcoin. We're playing Pac-Man with Bitcoin, and everyone is waking up to this power. Even if you are a part of the fiat system, you realize that there's a problem with the money. There's nowhere to store your value without it having the risk of going poof. Literally, this is where we are. Remember the 2008 financial crisis?
And again, I want to emphasize, and sorry to interrupt you, Opti, but like, we have to understand that if you live in the developed world, you have the financial privilege of having a relatively stable fiat currency.
Yes.
The vast majority of the world does not have that same privilege. They live in a country where the inflation rate is 10, 15, 20, 30, 40%. So Bitcoin for them is not, it's not an option. It's basically one of the only ways to live. If you're living through a hyperinflationary period in your country, it's impossible to do business. Like, how are you going to put food on the table? How do salaries keep up? How do you do transactions? You have to bring wads and wads of cash just to pay for the same
wheelbarrows,
thing, right? So only the U.S., right, and Europe, and there's certain countries that have relatively stable fiat currencies. I love the way that Jeff Booth puts it, where the inflation rate isn't high enough for people to realize they're being stolen from. So that's something to keep in mind, right? As Americans, we have this very, very special privilege, right? Most of the world doesn't have that privilege. And another thing that I'll say, too, is the awesome part about Bitcoin is that Bitcoin doesn't care what your skin color is, what your religion is, what your beliefs are. Anyone has the ability to download a Bitcoin wallet, and all of a sudden you have the ability to interact with the global economy. Before Bitcoin, what were you going to do? Like, people have to understand that if you happen to be born in a certain country, you can't open a bank account. Do you understand how unfair that is? Do you have a choice in that? Is that your fault? All of a sudden, you're excluded from the monetary network, the monetary system, because you happen to be born in a certain country? Do you realize how unfair that is? All us Bitcoiners are saying is everyone should have the ability to earn in the money and interact with the money and transact in the money that doesn't debase and it isn't censored. That's all we're fighting for. That's literally all we're advocating for.
So
and
simple.
It's crazy, how much it exposes incentives, because people that are against Bitcoin, what they're essentially saying is, I don't want people to have that ability. I don't want people to have the ability to save in a money that we can't control and we can't debase. That is so insidious. That is so nasty. Like, if you break it down like that, why else would you be against Bitcoin? Why else would you have an anti-Bitcoin stance? It's like, Bitcoin, you can't convince me that me holding my private keys is somehow dangerous to society. You can't convince me that me earning in a money that you can't debase is somehow dangerous. You can't convince me of that. So, anyways, I do want to pivot back to pivot the conversation and to this idea of where we're heading, right? I really believe that we're heading into, here on my notes, I have bright orange future, a future of optimism, a future of peace, a future of hope. And I think it's very difficult to envision that future from where we are today, just because of all the things that happened, right? The 2008 financial crisis, the economic situation of the younger generations, of the millennials and Zoomers. And what I want to tell everybody watching the stream right now is there is hope. And that hope is adopting a Bitcoin standard. And I promise you that will make your life better. Over time, the more you save, the more you're disciplined in your hodl, you will see opportunities you didn't see before. It's not your fault. The current situation around the economic situation, it's not your fault that you can't afford a house. It's not your fault that you can't afford to have children. That's not your fault. But just because it isn't your fault doesn't mean that you can't do something about it. If you want to participate in this, if you want to effectuate change, like I said, all you got to do, buy Bitcoin, earn Bitcoin, mine Bitcoin, put that Bitcoin into self-custody. And again, enough of us do it, we will effectuate change. And that's what makes me hopeful, man, that change. that bright orange future that we're heading into?
Well, I could really only speak for myself, and ever since I've gotten on a Bitcoin standard, I've gotten healthier. I am more hopeful. My mind feels clear.
Why have you gotten healthier?
Well, I mean, again,
I think we have to explain it for people that don't quite understand.
I would argue that the reason I've gotten healthier is two-part. One, now I'm not stressing about just making money, just survival, but I'm also doing a lot of research into what I think is the best way to eat, the best way to do exercise, understanding one simple thing. If Bitcoin is going up forever, Laura, then I have to be healthy to usher in these sats. I have to be healthy to hold on to this Bitcoin as long as possible. Yes, it seems easy to hold Bitcoin. HODL is easy. It's an easy meme. But the mental stress that it puts you through sometimes in these bear markets are not the easiest thing to go through. Maybe not everyone is built for it, but that's why we're here. And this is why we constantly are talking about getting your mind right, getting your body right, ensuring that you're as tip-top shape in every asset and facet of your life so that you can actually be a good example of what it means to be a Bitcoiner, a good example of what it means to have the best money. And as Bitcoiners start to prosper, people will look to us and wonder, how is he so happy? How is he so wealthy? I want to be like him. For better or worse, people look at their peers and wonder, how do I live a better life? I am convinced most people just want to live a good life, but they don't know how to do that. And it's very simple. Just save in some Bitcoin, go outside, touch some grass, maybe get some exercise in, hang out with your family, create things that you enjoy, and your life will improve. It's not easy. If it was easy, everyone would be doing it. And here we are. This is how I know we're early to Bitcoin, Nico. I walk around and I still talk to the normies out there. It's not derogatory, but just normal people. And
normal people is defined as someone who is not like a no corner.
I would say normal to me would be a no corner, someone that doesn't believe in what we think as Bitcoiners. And when I walk around in public and I talk to people, I still talk to people that aren't just Bitcoiners, I know, shocking. They don't understand what we understand. And if you go out and you do the same experiment, you go out and eat food, whatever you want, you start to realize that most people have no clue what's going on in the world. And Bitcoiners have the signal. It's on us to continue to spread that Bitcoin signal. So I hope you enjoyed the Bitcoin cult talk we just had.
I wouldn't say it's Bitcoin cult
talk.
No,
I'm trolling the chat. I'm trolling the chat.
So
I see you guys in the chat.
What I got to say, everybody, is your life will improve if you buy Bitcoin, you earn Bitcoin, you mine Bitcoin, and you put that Bitcoin into self-custody. It's really as simple as that. It's really not that complicated. Don't trust me, try it yourself. And of course, this is the Simply Bitcoin News Desk takeover at Bitcoin 2024 Industry Day. And again, big shout out to Mike Germano, David Bailey, and of course the whole Bitcoin Magazine team for making this happen. My name is Nico Moran. This is Optimus Fields. Subscribe to Simply Bitcoin. Like I said, we're live Monday through Friday, 12:15 p.m. Eastern Standard Time. Signing out.
Why?
What's the second best? There is no second best.
We will ensure that the future of crypto and the future of Bitcoin will be made in America.
So yeah, today we're going to be talking about runes.
We're talking about runes.
But first,
this is Mara, taking Bitcoin mining to the cutting edge of energy solutions. We're monetizing excess hydro energy in Paraguay, turning waste into value by reducing landfill emissions, and recycling data center heat to warm communities in Finland. With Mara, we're building the base layer of a sustainable future. To learn more, visit mara.com.
Welcome back to the Mara News Desk at Bitcoin 2024, powered by Bitcoin Magazine. I'm your host again, Pete Rizzo, editor of Bitcoin Magazine. New round of special guests here as we come live from Industry Day in Nashville, Tennessee. Guests right now include Frank Corva, lead business reporter at Bitcoin Magazine, Alex B., lead L2 reporter at Bitcoin Magazine, and Q Gahimi. You've seen him roving around the event, interviewing the guests as they're pouring in to what will surely be the world's largest Bitcoin conference, culminating on Saturday in the speech from Donald J. Trump that is highly awaited. Appreciate everybody hanging out in the chat. Obviously, you send your questions on YouTube and Rumble. We're watching along on X. Want to dig now into the subject of the most recent Bitcoin Magazine issue. Of course, you can find these at bitcoinmagazine.com. Subscribe to get your issues shipped globally. The privacy issue, privacy obviously concern hovering over this conference. The samurai lawsuits, a subject we brought up earlier, core to the magazine issue. Founders and CEOs of a mixing service were arrested and charged with money laundering in April. We're talking about William Hill and Keone Rodriguez, who are about to be tried in court in New York. Frank has been covering this. Frank, why was this a subject that Bitcoin Magazine decided to highlight in its most recent issue?
I think this case is super important. It's not just about charges being pressed against any two random developers. I think that there's a legal precedent that will be set here as to whether or not people can sort of transfer value freely on the internet. It was decided in the 90s that code is speech. The people behind, as you mentioned, Hill and Rodriguez, the people behind Samurai Wallet never actually touched any customers' funds, yet they're being charged with operating a money service business or conspiracy to operate a money service business illegally, as well as to launder money. So these two things, they did not do that. They did not break any technical regulations, but the DOJ is claiming that they did, and there will be serious consequences one way or another depending on how this case plays out.
So let's stick with you. What's at stake here? What are they facing? You mentioned a few of the charges, but how much time behind bars are they looking at merely for allowing people to transact?
I don't think that's 100% been determined. There's been talk of potentially decades, and
really?
I know that, yeah, Hill I know is a bit older, so I'm sure that, I mean, both of them, of course, don't want that, but
right.
the charges are fairly serious. I think it really depends right now. We're still in the process. I was in the courtroom with Hill when he appeared about 2 weeks or 3 weeks ago, and they're still, the prosecution is still in the process of going through the devices that they've seized from Hill and from Rodriguez, and they will be producing the discovery in the next weeks or so. I think the next hearing is September 10th, so we'll know more then.
I'll be following along on Bitcoin Magazine. Of course, follow us on Twitter. Alex B., maybe you could speak to the technical side of this. How does Samurai work? Maybe you can take people at home. How did it offer privacy to the average Bitcoin user? What were people using it for, and how did it work?
Good question. It's actually a bit of a tricky one because it comes down to the matter that's at core of this this process is really Samurai essentially was serving solely as a coordinator between users. Think of it as a message passing coordinator, allowing users to coordinate into creating Bitcoin transactions that would be used effectively to obfuscate the trace that is normally present on the blockchain, because we got to remember that we're talking about a public blockchain here, although it's been there's been stories told about how Bitcoin would be an anonymous currency. It really is not. We're talking about something that's pseudonymous, where addresses and balances can be tracked on chain, and so outside observers are able to follow the trails of money. Using something like CoinJoin allows people to coordinate into making transactions that might obfuscate that trail and therefore preserve their privacy in financial dealings.
Q, maybe we can back up, talk a little bit about the FUD that's gone around the industry in Bitcoin, where, you know, as it sounds like in this case, there's a lot of misinformation that leads to accusations, that leads to lawsuits, and people going to jail. What are the lawmakers or the, law enforcers getting wrong here?
I mean, it's no surprise that the lawmakers and those in charge of, you know, making these types of decisions are continuing to prosecute and press charges against people that they frankly don't understand how this technology works or what they're doing or saying. It would be, based on the way Alex described it, and you would be able to speak to it better than I could, it would be the equivalent of saying, oh, GitHub is responsible for some sort of developer uploading their open source software and then saying, oh, you know what, GitHub, you're responsible. We just saw this for the last couple of years with big tech being held liable for what their users are posting on these platforms. And even a couple of years ago, both P and I, while we were with Bitcoin Magazine, talking about the Ethereum mixer, and a lot of Bitcoiners were celebrating this, and both of us cautioned that, hey, this is a playbook that the governments are going to use. It may not be in America yet, but they're going to watch how this lawsuit plays out with a different mixer on a different platform, and then they will bring that play here to America, and they will bring it to Bitcoin. So overall, you're just seeing people who don't understand the technology try to push forward legislation on things that they frankly have no right to based on our Constitution, based on the laws that are in place, as well as ultimately impeding on our free speech.
Of course, you're talking about Tornado Cash. Alexei Pertsev, who was sentenced to more than 5 years behind bars simply for publishing code. Frank, can you take us into the reaction from the industry here, right? Obviously, Samurai, one company focused on privacy. How does this affect all Bitcoin companies in your opinion?
Well, there's been a chilling effect on developers worldwide. Yeah, people who are developing similar technology, something like Wasabi Wallet, who did something similar, not exactly the same. I think the technical, the term for what was used to sort of mix the transactions with Samurai Wallet was Whirlpool, whereas I think Wasabi did something slightly different. But there has been a chilling effect, and this I think the technology. I think what's actually there's. The business people in the business are a little bit nervous, but I would say people who use these technologies are even more nervous. People who work with the Human Rights Foundation, people who need to have these privacy-preserving technologies not only exist but continue to advance. They're not perfect technologies; they're constantly advancing, and to have a chilling effect, to have developers feel like they can't do something like this when there's no actual laws broken, it just makes people feel like, well, I know that I'm not technically breaking a law, but I'm not going to push forward with this thing if it means I'm risking spending some time behind bars.
And you can find more information at p2prights.org. This is from the Bitcoin Policy Institute, raising funds for the Samurai lawsuit, for the Samurai case. Alex, I want to go back to you talking about the innovation side. Obviously, Bitcoin not anonymous, as you said, a public ledger. Has this galvanized developers to come back to the privacy issue and to start thinking about how to move Bitcoin privacy forward again?
There's certainly been a lot of efforts that way. This is something that I discussed in the magazine, namely something like eCash or different Bitcoin layers that will allow people to move funds to different layers and allow them to have very, very strong privacy preserving techniques. And from the perspective of the user or really anyone participating in the system, it's completely optional. So obviously, it's unlikely that we get something perfectly private in terms of transaction feature on Bitcoin itself, but people are looking at different layers and how we're able to allow people to move them to systems like this. Something like eCash is extremely interesting. Obviously, it always comes with different trade-offs.
Can we talk about eCash for a second? The subject we're just addressing on the live stream the first time today, and people who are coming for the first time. We've talked about CBDCs. We've talked about Bitcoin. Where does eCash play, and what's the difference between Bitcoin, eCash, CBDCs?
Well, we got to rewind quite several years, actually. eCash is kind of like an old technology developed by David Chaum. Initially developed in the context of the fiat economy, where you would have this system using something called Chaumian eCash, which would allow deposits into a bank who would exchange your deposits for tokens. Those tokens would allow users to exchange in between each other outside of the purview or kind of like censorship of the banker operator. So the bank operator is completely blind. He uses blind cryptography techniques that will allow users to really transact privately. It's a system that now is being introduced into Bitcoin. One of the main trade-off here is obviously that it introduced a custodial setting where the bank operators holds the funds, the deposit of the users, but obviously the upside here is that users are able to transact perfectly privately. there's some interesting interaction and interoperability with Lightning here that would allow users to move from one eCash operator to another, making it so that you're looking at a system that allow for market innovation to come up and different sort of permissionless setting for new operators to come in and make the likelihood of fraud in between operators much less likely, because there's a competitive advantage to provide great services and preserve users' privacy.
Interesting. So we've got eCash, we've got CBDCs, we've got Bitcoin. Q, I want to take it to a little bit of a larger level, the CBDC and the fear. Maybe you can speak to the concern that maybe people are having in the Bitcoin industry about just government getting more involved, and why eCash might be an interesting way to go forward.
I mean, look, we're already slowly seeing it. We saw it in Europe, how they're slowly going to a cashless society. You're already seeing it here in America as well. People and businesses are opting out of accepting cash payments because for some reason now paying with cash is considered dirty, wrong, or they don't want to do that. But ultimately, what this really leads to is the government being able to surveil and know every single transaction that is happening with their own currency at all times. The dangerous precedent that this could set, and while we are not there yet, we are just a few clicks on a keyboard away from the government being able to say, actually, you know what, Rizzo? I don't like what you just tweeted about. We're locking you out of your bank account. Hey, Visa, you cannot allow Frank to go and buy anything using his credit card for the next week because we want to put him in timeout. It's a very, very slippery slope, and we are reaching a point where you're just a few keyboard clicks away from the government to be able to do this, and that is the concern that you're seeing overall from the Bitcoin industry as to why we frankly don't want to see a central bank digital currency, and even we don't want to move further into a cashless society. Let me further remind everyone who's watching at home, when you hear that rhetoric of, oh, Bitcoin is used by criminals, I'm sorry. The last time I saw any sort of police officer drug bust and, oh, look at what we, confiscated with the drugs and all the money that we took, I'm not seeing hardware wallets. I'm not seeing Bitcoin. I'm seeing stacks and stacks of cash. Heck, when we see the pictures of all of the gold that gets taken by the government when they mess with the cartel, it's gold, it's cash, it's not Bitcoin. Yeah. We saw the rhetoric around, I want to be very careful so YouTube doesn't take the channel down, on October 7th, it was, oh, cryptocurrency funded these attacks. And then if you, do your own research, as we like to say in Bitcoin, actually no, the group that perpetrated these attacks back in April of that year said, please do not send us cryptocurrency because it is too easily traced back to us. We don't want to accept this. You are going to be in trouble and they are going to find you. We would much rather receive cash, U.S. dollar bills. That is the preferred method of payment by criminals.
Well, of course, the preferred payment here, Bitcoin payments, alive and well in Nashville. Behind us is the world's largest Bitcoin conference, gearing up on Industry Day here for the culmination on Saturday, and of course the great speakers ahead. I want to go back to what we were talking about, an aspect of this that we haven't touched on yet is self-custody, just how important it is. Of course, not really the same as privacy, but another thing that the industry is really fighting for because the government is suppressing it. Frank, maybe you can tell us how are Bitcoin companies moving self-custody forward? What is self-custody and why is it important?
Yeah, I think self-custody, it's super important, and I think it's hard to grasp for people who are new to Bitcoin. Usually when we see a digital balance, maybe it's in our bank account or our 401k or something like that, we see it on a screen and we just say, okay, that's my thing. But technically we don't necessarily own that thing because we don't have direct access to that. We have to get permission from whatever bank to take that money out of the account or to do whatever we're going to do with whatever financial institution is managing our assets. With Bitcoin, there's a private key structure. It's part of the design of Bitcoin, where when you hold those private keys, you can transact with this asset freely. Because everything else in the system, I think the equivalent to that I could say is holding your Bitcoin private keys is kind of like holding cash in your pocket. That would be the best, I think the easiest sort of analog equivalent. So the government obviously, trying not to speak in too biased a way, the government, I think, wants to have a little bit more surveillance over what you're doing. So I think, generally speaking, the powers that be would like to see what's going on with people's transactions more, whereas when you hold your Bitcoin in self-custody, though it's not completely private, you do have freedom to transact permissionlessly. There are ways to preserve your privacy a bit more, but that freedom to transact is what Bitcoin was built for. If you look at the Bitcoin white paper, it's called a peer-to-peer electronic cash. So holding those private keys allows you to transact, me transacting directly with Alex with no third-party intermediary.
Of course, privacy, self-custody, core values. We'll be talking about those more going forward. We're going to hear a word from our sponsors now. We'll be right back at the Bitcoin Magazine live desk here at Bitcoin 2024.
dollar will dramatically lose its purchasing power. The more they print, the more it gets diluted. Who it's good for is the people at the tippy top.
Because in order to keep the system going, they have to keep printing money.
And Bitcoin is that tool that allows us to beat the money printer.
Bitcoin is powerful in a way that is money that does not discriminate.
Bitcoin is built by the people for the people.
We're back at the Mara News Desk at Bitcoin 2024, powered by Bitcoin Magazine. I'm your host, Pete Rizzo, editor of Bitcoin Magazine. Again, welcome again, Frank Corva, lead business reporter at Bitcoin Magazine, Alex B., lead L2 reporter at Bitcoin Magazine, and our new guest, Michelle Weegley, director of product development at Byte Federal. Before the break, we were talking about self-custody, the importance of this unique aspect of Bitcoin as a monetary technology. I want to read a few quotes because obviously we're all preparing for the big statement on Friday for Donald Trump to unveil his Bitcoin policy, proposed policy. And his words, he will support our right to self-custody. Why are we fighting for this right at all? Michelle, maybe you can take us into the conversation.
Sure. So the current administration has really launched an aggressive assault on the industry. And I think banning self-custody is very likely in their crosshairs if they're not stopped. So Bitcoin that's not in self-custody is not really Bitcoin. It's an IOU, right? So it's something that we have to defend.
Alex, maybe you can talk about the context here. Obviously, there's regulations that are attacking this, but for the most part, we have the right to self-custody Bitcoin today, correct?
Correct, absolutely. I think it's the nature of the system that allows you to not having to trust a third party with either your funds or, as Frank mentioned, your right to transact. So a lot of efforts has been made over the years in terms of improving the user experience for self-custody. It's a thorny problem. It introduces concepts such as private key, as mentioned by Frank. That is not something that's familiar to the average person, but a lot of innovation that we're going to be seeing here today. I think I'm expecting, a big announcement for from CASA in terms of improving the self-custodial experience. People have been developing different systems such as multi-signature, which allows you to distribute the risk perhaps and remove some of the thorny aspect of creating backups, for example.
Let's dive in there for a second for the people at home just tuning in who have bank accounts, curious about Bitcoin, they're looking forward to Trump, RFK, want to get involved. What's the difference between a bank account and something like a multi-sig Bitcoin wallet? What is the difference there? Frank, Alex?
Sure. Yeah, so a bank account, we have an institution that you give your funds to, whether you're physically or you're depositing a check in a bank, they're holding onto these funds for you, and you technically need their permission to withdraw those funds. We don't necessarily think about that when we go to an ATM and take cash out, if you're going to take cash out, or if you use your debit card, but technically if the bank said that you couldn't do that, you wouldn't be allowed to do that anymore. I think what's difficult for some people is that the interface for something like a Bitcoin wallet, if you're using something like Ledger or Trezor, it looks very similar to sort of a bank account. You get your balance and all of that kind of stuff. But to speak a little bit more to the term you just used and a term that Alex used, a multi-signature account, this is an account you would need multiple keys for. So it's an account to keep it extra secure, where you wouldn't just need one of these keys to sign off on a transaction or permit for yourself to allow that transaction to happen. You need two different keys. And there's a lot of reasons why you would want that. Maybe one of keys, without getting too technical, is compromised, and having two keys would make it a little bit safer. But what I am seeing is that some of this sort of these ways to do multi-signature wallets, we have a wallet like Lava, a friend, someone that we know from the industry, where they're making it much easier to hold these two keys, where you'll still look at your app and say, okay, here's my Bitcoin balance. It feels much like my banking app, but there's this technology behind it that's allowing you to self-custody those assets with relative ease compared to what things have been like for the last 15 years in Bitcoin. It has taken a bit of a sort of, you have to take a little bit of a technical deep dive to sort of get comfortable custodying your own Bitcoin.
Well, obviously this is new, it's innovative. You can't quite do this with dollars. Michelle, I want to go back to you. What's motivating politicians to be against this? Why is there even this idea that we are fighting for self-custody right now?
Sure. I think it's all about control. Ultimately, it goes back to the rules and regulations that are a result of the BSA, the Bank Secrecy Act. And due to the BSA, we're subject globally to all of these KYC and AML restrictions. It's why you have to show your ID at the bank. It's why you have to, give your name and information. If you go to withdraw a large amount of money from the bank, they are subject to asking you questions. It's really kind of absurd. And they're trying to apply those rules, regulations, and restrictions to the Bitcoin industry because they don't want to lose the control that they have.
But for many people, this has become normal. Maybe you can talk about the normalization here, Alex, of just how this has become so normal over the years.
How exactly what has gotten
just
so
the surveillance that we've dealt with from the government institutions.
Well, I think it's a matter of complacency. People have gotten, I think, used in this internet era of having absolutely no privacy at all. I think it's a matter of people falling for the cheap tricks of, you know, user experience, convenience, and whatnot. And with, you know, we know that there's a history of underappreciation for security in the era of the internet. And I can't quite explain the motivation of each individual, but I think there's certainly a lot of room for improvement there.
Well, of course, all this takes place as we're getting ready to go back to the main stage. The next talk, From Strategy to Innovation, BlackRock's Bitcoin Journey. We'll be hearing from Robert Mitchnick of BlackRock talking about how they're approaching Bitcoin in the industry, and obviously an interesting backdrop for the discussion we're having about self-custody, privacy. BlackRock launched its IBIT ETF in March. Now holds over 300,000 Bitcoins. Obviously, there's a lot of concern in the Bitcoin industry, excitement, and people are celebrating that the institutions are here. What is the view of Bitcoin, of BlackRock, and the ETFs coming to the industry? Frank, maybe you can give us the reaction.
I'll try to be as objective as possible here. I think it's great that people can get price exposure to Bitcoin very easily if that's what they're looking for. So what I mean by that is you can buy shares of BlackRock through your Fidelity account or whatever your traditional brokerage is, and you get dollar exposure to that. But what you're not getting when you use something like IBIT as a vehicle to get price exposure is the ability to actually use Bitcoin.
Right.
And
no
again,
self-custody.
Self-custody, which we were just talking about, and that is really essential. It's peer-to-peer electronic cash. When you own IBIT, again, you have exposure to price. You do not have the ability to freely transact with other people. So if that's what you're looking for, that's totally fine. If you're looking for the Bitcoin experience of actually owning your own money, taking responsibility for holding these private keys, transacting permissionlessly, I don't think IBIT is the vehicle for you.
So Alex, a longtime innovator in the space, you're seeing BlackRock now 300,000 Bitcoin on the balance sheet. What's your reaction when you see those headlines?
I tend to be a little less concerned than people usually are. I think it's a positive sign, and it creates a different funnel of adoption for Bitcoin. Obviously, we need to make an effort and a collective effort as those types of instruments are being introduced to, again, make a case for self-custodial Bitcoin, to create new tools that allow people to become easily onboarded to a self-custodial experience. And I think, again, there's a lot of different interesting technologies that are being developed. I think we've sort of like taken an attitude in the past of being kind of like very rigorous in how we would mandate the experience of self-custodial users. I think there's a little bit of a gap there in between what the industry perhaps has been offering and what the average person is comfortable with. So there's room for improvement there. But overall, I think, it was inevitable. And whether or not it should be discouraged, that's for everyone's. I think there's certainly cases to be made where people are never going to be comfortable with self-custody. Some people are not comfortable with credit cards still to this day, and so it's going to be a matter of it's traditional technology arc adoption. Some people are going to be laggards, but we still have to be very cautious about obviously those centralized entities that are accumulating Bitcoin. But 300,000 Bitcoin seems like a lot. It is a lot, but in the grand scheme of things of 21 million, we're kind of still far from that being a real cause for concern, in my opinion.
Michelle, Alex, and Frank here are apparently being very generous and speaking about the concerns of the industry. Maybe, like in terms of the fears, aren't there real fears here about what is happening?
I think there's fears of capture. It's good for adoption, it's good for awareness, but it really does push us pretty far into the digital gold concept, and the further we get into digital gold, Bitcoin as digital gold, the further away we're getting from Bitcoin as a mode of transaction. Exactly. Yep. So we've got to be really careful about that being fully captured and cemented by.
Are you saying that Larry Fink does not support us self-custodying our Bitcoin and multi-sigs?
I don't think he does.
Okay, this isn't something that he wants.
No, not at all. I don't think are fans of that.
Yeah.
So there's pros and cons, of course, but I think we need to be very, very careful about letting them take the narrative and run with it. We've got to fight back.
You mentioned digital gold, right? And people are familiar. They see Bitcoin as a digital gold. Maybe Alex, you can talk about some of the frictions around that narrative that we're seeing. Obviously, earlier we heard from Alex Thorne, Margot Paez, talking about Bitcoin and crypto, those lines dividing. Where does the ETF, where does Larry Fink fit into that?
I think the narrative of digital gold is something that we created on our own. I think it's something that we've made the analogy to gold in the past. There are a lot of reasons to believe that Bitcoin, although it shares some qualities with gold, is also quite different. And one of the things that's unique about Bitcoin is that the larger the amount of Bitcoins that you own, it does not make it much more difficult or even expensive for you to self-custody. Whereas if you take the analogy of gold, obviously once you start stacking up piles of this metal, then this is where historically this has concentrated the holdings of gold into banks, into central banks, and has made it quite difficult for their rightful owner to lay claims to the gold. Yeah. Whereas with Bitcoin, I imagine this is likely to play out in a very different way. And this is why I generally expect that although the ETF are a cause for concern, Bitcoin is a global asset, and there are a lot of people outside of the United States that are not going to be so trustworthy with trusting their capital or their wealth to someone like BlackRock or Larry Fink, and therefore are likely to be incentivized to either take self-custody or to, obviously there might be other instruments down there in whatever that be the global souths or outside of the United States. So I imagine, we need to keep in the context that yes, the U.S. is probably the largest economy in the world, but as far as Bitcoin is concerned, we're talking about a global asset, and so there should probably remain some sort of balance of power there where Larry Fink is a very powerful person, but there's also a lot of very powerful person outside of the United States, and I feel confident that this is going to play out in a way that...
Well, of course, we're going to be hearing about BlackRock's Bitcoin journey. We'll have Robert Mitchnick on stage with James Seyffart from Bloomberg. Maybe a little bit of speculation before we go. How does BlackRock's Bitcoin journey proceed from here? Can they interact with the industry? If you were talking to Larry Fink, how would you approach him, Frank?
Ooh, Larry Fink. I guess
He's
what
right
I would,
there.
yeah, there he is. Hey, Larry, what's going on? I think what I would say to him is, he's going to benefit immensely from what he's doing. Even if he's charging a small fee, there's plenty of people using IBIT. It's the most popular ETF launch in the history of ETFs, not Bitcoin ETFs, not whatever ETFs in general. He's doing fine. What I would ask him, person to person, is just say, don't be involved or don't be behind the scenes sort of pushing for everything to be under the umbrella of BlackRock or in the custody of BlackRock. Allow people to self-custody. I'm not saying you have to go out there and start promoting hardware wallets or something like that, but you would, but allow
side business perhaps.
Yeah, but I would also tell him that I don't think, even if he wants to push the digital gold store of value narrative, I don't think you have a store of value narrative without a medium of exchange narrative. Part of what Bitcoin benefits from is network effects, right? So if people aren't actually using Bitcoin, is it really a store of value if we just sit it there sort of like a pet rock? I don't know, but I think medium of exchange adds to that, so it's to his benefit that Bitcoin is actually circulating and being used by people.
Alex, your message to Larry Fink.
My message to Larry Fink, that's a good one. I would say, again, there needs to be consciousness that Bitcoin is a global asset, and therefore, I think there needs to be some... I'm not sure what I would say to Larry Fink, to be honest.
Michelle, you want to take a swing at that?
I would tell Larry Fink we are not going to rehypothecate Bitcoin.
Wow, okay.
That's a good one.
Strong words. We're going to be sending it back to the Nakamoto stage, but before you do, BitcoinMagazine.com, the latest issue of Bitcoin Magazine, the privacy issue, on sale now. Of course, you can pick them up if you're at the conference. There's still time to come to Nashville, Tennessee. The world's largest Bitcoin conference is ongoing behind us. Day one, 2 days ahead. We'll be sending it now to the Nakamoto stage. From strategy to innovation, BlackRock's Bitcoin journey. We'll be right back after this.
To continue follow up on our ETF session here, I'm excited to present From Strategy to Innovation, BlackRock's Bitcoin journey. Robert Mitchnick of BlackRock is joining us, as well as James Seyffart from Bloomberg. Come on stage, guys. Give them a big round of applause, please.
All right, guys. My name is James Seyffart. I write research about the asset management industry. In the last couple of years, I've spent a lot of time writing about digital assets and digital assets ETFs. Robbie here is famously known as the guy that orange-pilled Larry Fink to some people, so we're going to get into that a little bit. But to break the ice, I guess, can you tell me how much Bitcoin do you hold? Or Larry, how big are Larry's personal bags?
Well, believe it or not, I've never asked him that question.
Let's dive in here a little bit. Like, let's get a background on you. Like, how did you get involved in the digital assets, Bitcoin space? What was your journey like? Personally?
Well, I started in this space in 2017, frankly, by pretty fortuitous circumstances that ultimately led me to BlackRock in August of 2018, where there was an opportunity to come in and help them figure out this whole blockchain and digital assets world. And the rest is kind of history. It's been 6 years now. It's been a pretty fun journey. Obviously, you know, as a firm, we've come a long way and built a number of solutions, not just, you know, IBIT most famously, but across crypto, stablecoins, tokenization, you know, what we've done in this space, all kind of in the name of bringing greater access for our clients.
Yeah, I noticed you left off the part where you actually worked at Ripple for a little bit. For this audience, you're a reformed shitcoiner, I guess we could say. Can you talk about? So you joined in 2018. In my mind, I go back to like Larry Fink, CEO of BlackRock. He famously called Bitcoin an index of money laundering. He was famously against the whole space, but he hired you to do digital assets. So like, what was that process like from 2018? Where even in 2021, he was saying relatively negative things about the space, to being one of the most full-throated endorsers, biggest names, believing in Bitcoin and digital assets more broadly. Can you just, were you really the guy that orange-pilled Larry Fink, or was it more a general, larger process?
Well, I think Larry deserves a lot of credit for the time that he spent studying this space, being curious and open-minded, which he absolutely was, right? And you know, when you think about Bitcoin, there's very few people who the first time they ever hear about it, they immediately say, "That's the thing," right? There's some exceptions, but for most people, it takes some time and study. And I think, you know, if you look at Larry's case, I've often said that if you are a student of financial history and geopolitics, or you are a technologist, Bitcoin tends to come more easily. And Larry is very much both those things, right? So that, I think, partly explains, you know, how he's become a really, really insightful kind of thought leader in the space.
Yeah, I would say I'm actually one of those people. My first experience was a college roommate in 2011 put mining software on my computer, and then it broke my computer, I'm convinced. So I didn't start taking it more seriously. It took me 5-6 years after that before I started thinking it actually had real potential. But I guess, like, can you talk a little bit about what the conversations were like internally? Like, was there a group of you internally that were bullish on the space, wanted BlackRock to enter the space? And obviously, from my own personal experience, there's like this divide within even Bloomberg in my company. There's people that are full-throated believers. There are people that are kind of neutral. And there are people that are vehemently anti. So I guess, like, what was that conversation like, and what were Larry's reservations, and what were BlackRock's reservations before you guys really started getting into the space?
Yeah, I think in early days, the greatest opportunity lay in thinking about how we use this technology, right? How could this technology make our business, make our financial ecosystem more efficient? How could it serve clients, and how could we play a role in providing clients solutions and products in the space? And then over time, a number of critical factors kind of came together to support the major moves that we ultimately made. One was you had generally increasing, not obviously full-blown clarity from a reg standpoint, but from a regulatory standpoint, around the world and in the US, it became increasingly clear that there was a view this was an asset class and a technology that was here to stay, right? And that was an important shift. Second, you had a great build-out of infrastructure, of institutional-grade infrastructure, particularly starting in 2020, that ultimately was necessary for players like us to get comfortable participating and building products that we felt would be of a BlackRock or an iShares quality standard. And the third piece was our clients continued to be more and more interested. And we're very, very client-led firm. And so that signal of client demand was kind of the final piece that helped push us over the top.
Yeah, I will say this obviously has been a huge success for you. IBIT, I mean, the Bitcoin ETFs in general were the biggest ETF launch in history. IBIT is arguably, as an individual fund, the most successful launch we've ever seen in history. They are, it's a big part of BlackRock as a firm, not just like, I think it's over 25% of your flows this year have come from this ETF. It's the second most successful fund so far in 2024, behind the S&P 500 ETF, and not that far behind. I think you're about $20 billion in inflows or $17 billion in inflows. I guess, what is that like internally? Like, I assume, like I said, there's probably some people that aren't huge believers in Bitcoin, and they're seeing this like drive a lot of the narrative. You're getting a lot of media coverage. Can you just talk about like what this product has meant for BlackRock as a whole?
Yeah, I think obviously it's exciting when you launch something and it meets and even exceeds the very high demand expectations that we had for it. I think the interesting thing, though, James, it's very early. That's what a lot of people don't realize is if you think about our iShares business and the three main channels that we ultimately have as sort of client segments, the first is end investors direct. And that spans everything from small dollar retail to even high net worth, ultra high net worth, investing on their own accord. Then you have wealth advisory, and then you have institutional. And of those three, the first being an investors direct came storming out of the gates. January 11th. They showed up. The demand was immense. It has continued in many respects for the last 6 months with pretty robust flows. But when we talk about wealth advisory and institutional, those are much longer journeys, and we're still only partway down that track. So when it's institutional, there's a major education, diligence, research type effort that happens when you have a new asset class emerge like this. They're going through that process. We're playing a role in supporting them on that journey, but I would say it's early days. There's a few big institutions who've allocated, but they're the minority so far, for sure. And then wealth advisory, one way to think about wealth advisory, you can be fully restricted, and there's a couple platforms where these ETFs are still fully restricted, not many, but a few. Then where a lot of them are is called unsolicited. And unsolicited means that a client can specifically request, I want to own that ETF, and the platform will make them sign some disclosures that they know what they're doing, and they'll place the trade. But where most of the wealth advisory space in the broader TradFi landscape is what we call solicited. And solicited means that the advisor is actually directing what assets are held. And effectively, none of the large wealth advisory platforms today have yet gotten to that point of offering IBIT or the other Bitcoin ETFs on a solicited basis. That's a journey that many of them are on. Typically, that takes multiple years for a new ETF to get to that solicited status. Many of the largest platforms are accelerating their efforts to do so, but we still actually haven't had the first major platform get there.
So there's another wave coming, is what you're saying. I mean, if I had a Satoshi for every time I saw an article or a tweet or a rumor that Morgan Stanley was about to approve these things for a solicited basis, I'd have a lot of money. So like you're saying a couple years, but you think they're accelerating. Like, give us a rough timeline. And the firms, to be clear, the firms we're talking about here are the Morgan Stanleys of the world, the UBSs, the Merrill Lynches, these big wirehouse wealth platforms that are only working on an unsolicited basis. But like, do you think fourth quarter is on the table for some of these? Are you thinking more into 2025? Like, where do you think a timeline, if you had to throw a dart at a board and guess, when do you think the earliest that it could happen for one of these big wirehouses?
I won't get into specific names and timelines, obviously, but certainly this year is likely.
Okay. And then, so these wealth advisors, you do have some wealth advisors, specifically the smaller, more independent type wealth advisors have already allocated. They don't have to go through this long process. They don't have hundreds of billions of dollars that they're worried about allocating to the wrong thing. The ones that you do have access to, how much insight do you have to what they're doing? And if you do have any insight, like how are they pitching it to their clients? What type of allocation are they doing? Are they doing 10% allocations? Is it more like 5%, 2%? Like, what are you guys seeing in your conversations? And you guys are having thousands of meetings a year with these types of advisors. So if anyone would know, it'd be you.
Yeah, I think, and that's right. We are, particularly that RIA channel, registered independent advisors. Lots and lots of conversations in the last 6 months around this. And, there's no kind of clear number that a particular firm or advisor is using, but I would say in that advisory space, the most common allocation of those who are allocating is probably in the 2 to 3% range.
All right, makes sense. Let's get into BlackRock's view, or maybe even just your own personal view on Bitcoin, the asset. I mean, like, I tend to say it acts a lot like a risk-on asset. It's an aspiring store of value asset. It's aspiring to be a risk-off asset, and at times it has shown to be risk-off. But like, what is the house view? And two, how are your salespeople, how are you guys pitching it to advisors? Like, is it a diversifier? Is it an alternative?
Right.
Let's get into that a little bit.
Yeah. Well, I actually think that this is probably one of the most muddled conversations in this space. And in some ways, it's a massive own goal that the Bitcoin, sort of punditry commentary community has scored on itself in defining Bitcoin, or allowing Bitcoin to be defined in some circles as a, quote, risk asset. And the reason I say that, one, I think it's fundamentally inaccurate, and two, it's massively unhelpful, which we can get into in a second. But first, the thesis on it. So if you look at Bitcoin's trading history, what you'll see is that, and this is on a fundamental basis as well, there's one macro risk factor where Bitcoin is highly exposed and highly correlated to so-called risk assets. And that is that Bitcoin is massively short real interest rates, right? If you think about that, that makes sense. In the same way that gold is short real interest rates, same way that emerging market currencies are short US dollar real interest rates, and also in the same way that technology type long-dated investments, which their payoff is in part envisioning a future state where growth happens, are short real interest rates, right? But outside of that, there's actually very little fundamentally that Bitcoin has been correlated on. And that's why when you look at it over a longer horizon, over its history, that long-term average correlation is a lot closer to zero, right? When we think about other fundamental drivers of risk and return, they're very different from equities or fixed income or other traditional assets. This is a non-sovereign, scarce, decentralized asset. And to the extent it has risks, of course it has risks, it is itself a risky asset on a standalone basis, right? But those risks are about uncertainty over future adoption, regulation, the development of a still early ecosystem, right? They're very different from banking crises or geopolitical disorder or inflation, deficits, debt, currency debasement, all those types of fears and risk factors that exist out there in TradFi world. So in fact, when you think about Bitcoin as an asset that has no counterparty, isn't dependent on any one country's fortunes, and is ultimately a scarce asset. That's why you've started to see this shift where people look at Bitcoin as a potential flight to safety asset in some of these other dynamics. So when people use this risk on, risk off framework, all that nuance gets lost. And I think that nuance is really important.
You heard it here first. It's not a risk asset, according to Robbie Mitchnick. I guess one of the other things I often hear, and I tend to believe, and when I talk to advisors, which I do a decent amount, is this volatility is actually more of a feature than a bug, particularly for people that are rebalancing. So if you have a target allocation, like you said, that 2 to 3% range, if it goes up 100%, they're going to sell some of it. But if it dips a lot, they're going to buy, and that can smooth out returns for a portfolio over the longer term. I guess, like, are you seeing that rebalance? We've seen some volatile days. We saw a lot of people said that these ETF holders were going to run at the first sign of of bearishness. That we had Bitcoin go down 25%, and not only did they not run, they poured in. They bought the dip. So, I guess, are you talking to advisors that are like trying to figure out when they should be buying and selling these things? How much of that's going on?
Well, I guess to the first part, before we'll come back to volatility, it's been quite remarkable the degree to which these ETF holders so far have been of a very long-term buy and hold nature, right? If you think about since January, there have been some pretty big pullbacks in Bitcoin. IBIT has had 1 day of negative flows in 6.5 months, right? And in fact, on a lot of the down days, we've seen net buying, where our investor base is so-called buying the dip. Of course, that'll change over time. I'm sure we'll see in the second half, or in the years to come, we'll see lots more negative flow days. That's just natural, right? But pretty striking how consistent and long-term the investor base has been. On the volatility point, I would take the other side of that. I think, obviously, there are traders and hedge funds who love the volatility in this space. But for your typical institutions, for your wealth advisors, for lots of regular everyday investors, that is definitely not a feature. But thankfully, for those types, what we've seen over the long term is that Bitcoin's had a pretty steady downward trajectory in its volatility. Today, it is absolutely still a volatile asset. But it's actually, some people don't realize, you have a lot of major tech names that people hold a lot of in their portfolio, even just by holding index funds, that are more volatile on a standalone basis than Bitcoin is today. I think what people look at more closely, and this goes back to the risk on, risk off point, and why I think it's so important that people understand, the ways that Bitcoin does not fit that paradigm. I was speaking recently to a friend who's in charge of strategic asset allocation for a large institutional allocator. And he said, the only thing I'm looking at is correlation. I see that correlation go back down towards 0 and stay there. It's a slam dunk investment case for us. But when it's elevated, it's a much higher hurdle.
So let's shift gears a little bit here to something that a lot of people in this room won't really care about, but it's relevant. You guys just launched an Ethereum ETF 2 days ago. This is its 3rd day of trading. Can you talk about what the interest you've seen from clients? Obviously, we've seen the flow data. Yesterday was mostly flat. There was 100 million in net flows that came in the first day. There's a lot of trading. Can you talk about the interest that you're seeing for ETH when it's relative to Bitcoin? I guess, how is that interplaying?
Sure. Well, I would say that our client base today, their interest overwhelmingly is in Bitcoin first. And then somewhat in ETH. There's definitely interest in ETH too. And there's very little interest today beyond those two, right? And so that you can map that to the approach we've taken, and I think it makes sense. What we've stressed with them is we don't view Bitcoin and ETH really as competitors. What Bitcoin is trying to be as a global monetary alternative, as a potential global payment system, ETH isn't really trying to be that, right? The whole store of value use case within crypto, I think, is pretty definitively territory that Bitcoin owns. ETH is trying to do a bunch of different applications that, for the most part, Bitcoin is not trying to do. So really, they're more complements than they are competitors or substitutes. I think our clients are seeing that.
Okay, and then I guess like who is investing in ETH, I guess, or like how are they investing? Do you think people are gonna, if they have a 5% allocation or a 3% allocation, is that solely to Bitcoin? Are they gonna sell some of their Bitcoin to buy the ETH ETFs, or do you think if they're buying the ETH ETF, it's more as an add-on? Like, is it gonna take away from the Bitcoin ETFs or not?
It's still early days. I think early indications are it's probably more likely to be an add-on, that people will recognize that these are complements, not substitutes. You know, we saw the last couple of days, even with ETH launching, even with Bitcoin, price action down on one of the 2 days, we saw net creations into IBIT, not any outflows. So I think ultimately it's actually healthy for the ecosystem. I don't think we're going to see a long list of crypto ETFs. If you think of Bitcoin today, 54, 55% of the market cap, ETH at 18, the next, plausible investable assets like 3%. So it's just nothing close to being at that threshold of track record and maturity, liquidity, et cetera, that Bitcoin and to a lesser extent ETH have.
So our estimates are like, we think around 20%. We think the ETH longer term could do in relation to Bitcoin. What do you guys think is roughly the same, or what are your guys' expectations?
Well, I think most people's estimates kind of come out in that 20 to 25% range. I think when you look at lots of data points across the world, Canada, Europe, other product types, that ratio keeps sort of popping up. So, I think that's a pretty good guess for where that might land.
Let's go back in time to before the ETF a little bit. There was a news story basically about BlackRock's Aladdin partnering with Coinbase the summer before you even filed for the ETF. And it kind of went under the radar, aside from some real Bitcoin maxis that were like, this means BlackRock's going to go in full bore. And I was like, oh, maybe, but Aladdin is like a portfolio platform. Can you just talk about like the relationship you have with Coinbase, how that came about, and like how that relates to what you're doing now with IBIT and ETH and what have you?
Sure. Well, those were important early foundational steps that ultimately put us in a position to do the Bitcoin ETF. We started working with Coinbase in 2021 to integrate, at first, Bitcoin trading and custody functionality from Coinbase Prime into our Aladdin investment management system. And our Aladdin system is what not only BlackRock runs its asset management operations on, but also many of the other largest buy-side firms in the world. And we developed that functionality such that in the future, any BlackRock portfolio manager or fund or any Aladdin client fund would be able to trade, settle, custody Bitcoin within their existing operational and risk construct, which is super, super important for institutions. The other thing we did that summer of 22 was we launched a Bitcoin private trust, which ultimately was a precursor to what became IBIT. So we had built the technological capabilities, we had built the asset management capabilities around this over a period of multiple years that ultimately set the stage for us to build the iShares Bitcoin Trust in a way that would adhere to a BlackRock and an iShares quality standard.
Yeah, I think Scaramucci famously said when you launch that trust that this means they're going to launch an ETF. And we always kind of thought
he was right. It was a good call.
We always thought like it made sense. We thought BlackRock would ultimately launch a Bitcoin ETF, but we didn't expect you to be in the first wave. So you guys caught us off guard with that. We had 1% odds of approval in 2023 when you guys filed, and quickly upped it to 50% essentially as soon as you guys filed.
I know, so. we blew up your vacation, if I remember.
You did blow up both of them. I was on vacation, yeah. Can you talk about Aladdin and how you're fully integrated to buy and sell these assets directly? Like, how, if you have advisors or institutions, like what is that conversation like? Should I just buy IBIT, the ETF? Or should I go through Aladdin and buy the assets directly? Like what is the trade-offs that you're making between those two things?
So I think the Aladdin clients who want to implement a very extensive trading program, they're more likely to use the Aladdin access solution directly. And those who are in more of a sort of buy and hold type approach, the ETF makes perfect sense for them.
And then, so everything you're doing right now is with Coinbase. Your stuff is on the Coinbase platform. You obviously have a strong partnership with them. One of the things that I hear all the time is like people are worried about this concentration risk in custodians. One, is that something you guys are thinking about or are worried about, or are you just completely comfortable with the way things are currently operating?
Well, I think we're always navigating an evolving risk landscape in what we do, not just in the Bitcoin space. Obviously, we have a lot of faith in Coinbase. There was a pretty extensive diligence process, as you can imagine, that led to us selecting them as our first provider in this space. But we certainly think that over time, you will see more institutional grade custodians entering the space, and that's very healthy for the long-term growth of this ecosystem.
All right, so like what's next? Obviously, you guys have a Bitcoin ETF, you have an Ethereum ETF. You said nothing else really kind of makes sense. Are you looking at like getting more involved in the infrastructure play, doing things with mining? Like, is there anything else you guys are doing or you have coming down the pike that you're thinking about? Like, what's next for BlackRock? What are they most bullish on going forward? Aside from these massive platforms we talked about, allowing these things to be sold on a solicited basis.
Yeah, well, I think when we think about the digital asset space, we think about it across crypto, stablecoins, and tokenization as those kind of the three pillars of it. And there's a lot that we're excited about in the stablecoin space. We think that has the potential to transform many elements of our global payment systems, even thinking about how stablecoins can make value settlement more efficient in capital markets, in traditional capital markets. In the tokenization space, obviously we launched a tokenized fund earlier in the year. Is now the largest tokenized fund in the world. There's a lot there that's also exciting in terms of enabling greater access, democratizing the reach of investor types that can invest in more types of investment funds, as well as making the whole system more efficient and cost effective.
Yeah, I often say, like, you guys, including VanEck and Bitwise, a bunch of these other issuers that are not just launching ETFs, they're trying to do other things in the space. It's like, I view it as like you're kind of building bridges in both directions, right? You're kind of wrapping in, with your BIDL fund, you're wrapping a TradFi money market treasury type fund in a DeFi wrapper. And you're doing the exact opposite with the Bitcoin ETF and the Ethereum ETF. You're taking a TradFi wrapper and wrapping something that's fully decentralized. So like you have the BIDL fund, like I assume that has been what are the asset levels in the BIDL fund right now?
Not as much as I bet, but no, but you're exactly right, because some people say, well, you're doing these two things, you're doing this over here, you're doing that over here, they're complete opposite. How does that make any sense? That's contradictory. And actually it makes total sense, because it speaks to the fact that our client base is very diverse in terms of where they're at in their journey and being comfortable with digital asset rails and digital asset infrastructure. And so for some of our clients who aren't there yet, the ability to access Bitcoin through a brokerage account in a traditional finance way in a super accessible, convenient format, that's very compelling. We have other clients who have made this migration, or maybe they're crypto native. They're already in the digital asset space. And for them, that's the wrapper they want. They want to hold tokens. But they want access now to more varied traditional finance type investment underliers. So we're serving both.
All right, guys, we're out of time, but you heard it here first. BlackRock, Bitcoin is not a risk-on asset, and they view Ethereum as a complementary, not competitive asset to Ethereum. So that's all we have time for. Thanks, everyone. Thank you, Robbie.
Thank you, James.
We're back at the Mara News Desk at Bitcoin 2024, powered by Bitcoin Magazine. Once again, I'm your host, Pete Rizzo, editor of Bitcoin Magazine. You just saw From Strategy to Innovation, BlackRock's Bitcoin journey. My next guest to discuss, unpack everything we saw, Nolan Bowerly, host of the Breakup television show, and Greg Carson, managing partner at Humla Ventures. I want to dig into some of the things we heard on stage, talking about the Bitcoin ETF, the arrival of crypto ETFs and ETF demands. One data point we were talking about, data shows about 80% of ETF buyers so far are retail. So where is this institutional wave that we were promised when BlackRock went live? Greg, your take.
Well, I think the ETF is generally it's generally a retail product, but also, you know, it's not going to be, if there's institutional buying into the ETFs, it's not really going to be so visible as for us, because they're basically it's basically there's wealth managers, and they're basically allocating either like multifamily offices or single family offices. So I don't think that we're going to see it as much in that way. I think the institutional wave that we're seeing is the ETFs managing, to put a positive light on how I would see it, is that you have Van Neck, you have BlackRock, you have all these institutions now representing and bringing their flows to the market. Because
the flows are massive, right? We're seeing these headlines, tweets, billions daily. How is that not impacting the Bitcoin price that people are seeing at home on their screens?
Maybe it is. I don't know. It feels like it. I mean, I know we've had a drawback, but I mean, it's up pretty much since the beginning of the year.
And you don't want to hit too much on the meme that prices and everything, but in this case, you kind of have to, because what we're actually getting from the BlackRock thing is all of that intelligence, all of those wealth managers, all of those educators. More or less, if you're a good teacher and you want to make money and you also had some facility in financial literacy, you didn't go into the public school system. You went to BlackRock and you were part of their infrastructure that educated their clients. They're a type of university for rich people on finance. So suddenly you get the best of the best when it comes to education. I know I've been in this game educating about Bitcoin for years.
Yeah.
These guys are a step up, and you see it right away. It's a different level of, a different level of person. So although it's not there from a retail point of view in the price, what you're actually seeing is a level up of the intelligence of the people interacting with these products. And that's why the retail energy came to the ETF really at the detriment of the normal spot providers, right? We saw people like Swan bet on people wanting to buy the real thing. Now, that's true. I'm not saying people don't want to buy real Bitcoin. Of course, that's always going to be there. But this group of people that they just sort of scalped off of the market, they came from those people that required that relationship. That's why Swan put that money into education, right? They thought they could close that loop there, and it's a good bet. But indeed, what you see is that it just went in that retail environment. So not big, but the IQ upgrade has been big.
Well, there has been some impact. JP Morgan CEO Jamie Dimon, Donald Trump on his behalf, coming out and saying that he's softening on Bitcoin. Do we believe him, Greg?
Well, I think Trump is he's gonna, he's basically taking the free money on the table he sees that there's a huge constituency that's pro Bitcoin. He sees that there's dollars for campaigns that is pro Bitcoin. I think what is the big benefit that we're getting with Trump is that he's getting educated because of this opportunity. So he may or may not be super pro Bitcoin and super pro bringing digital assets and crypto back to the United States, but he's realizing that it's been a problem and he didn't know before.
Well, we're talking about Jamie Dimon. This has been the big bad bear in the room, the enemy of the industry. He's at the World Economic Forum. He's saying Bitcoin is bullshit, that you shouldn't buy it. What is the change of heart there?
But look, Bitcoiners are media literate in the sense that we understood, look at their actions, not their words, right? You heard that a lot. Now, we were in New York City at CoinDesk for years. Our office was next to the JP Morgan office over there and the BlackRock office. Part of what I did there was to go talk to these people in those offices. And I remember the questions that came out of both the BlackRock offices back in 2017, 2018. These were not idiots. They were not asking stupid questions. And I knew the stuff that they were getting from us, the questions they were asking, was already informing their C-suite. So I think what we saw with Trump talking about Jamie Dimon is really just someone actually being honest with who Jamie Dimon is. No one's willing to do that, right? These guys are actual kings in Wall Street. So when you go and talk to one of these guys, when Jamie Dimon stands up at a table, 10 people stand up immediately, right? Because of the way this thing works. They're kings, right? They're modern day kings in that crazy world they come from. And when you see them do this kind of stuff, they can get a bunch of people not telling you what they really believe. They won't want to look at it. Yeah. I think all Trump did was say he had a conversation with Jamie Dimon. He didn't put a filter on. He didn't put the typical Jamie Dimon spin. Jamie Dimon is a market mover. He's a market manipulator. He's a very smart person. Yeah. He's not operating at it's not a low IQ issue. It's not, doesn't have those problems, you know?
Well, of course, it remains to be seen. The man must speak for himself. Of course, he won't be here for the next 3 days. We're in Nashville for Bitcoin 2024. We're going to send it back to the main stage now to make Bitcoin in America great again. Fitting, given the subject. Stay with us. We'll be here all afternoon.
As long as it stays true to its ethos. And if you look at Bitcoin, you look at the early adopters, you look at the people who kind of spearheaded it, it was Ron Paul. It was the anarchists. It was the free staters. It was individuals that think independently outside of the state. And I think those ethos need to stay within this community and be reminded that this is truly what Bitcoin is about.
Nice. Yeah. I am Ben Askren. I wrestled. I went to the Olympics. I fought a bunch of people. People like that, I guess. And then I got into Bitcoin in 2017. And along the same lines, none of us disagree, but I think one of the most important things about Bitcoin is self-sovereignty, right? The ability to take care of yourself. And I told my wife earlier, when I come to one of these Bitcoin conferences, it's just, people are just a little different. I meet people who are a lot more like-minded to myself than maybe general people walking on the street. And when we talk about self-sovereignty and American history, sometimes when things are tough, I think back to like how easy we actually have it. And you know, I tell people about Bitcoin, you have this treasure and you keep your money yourself. And like, oh my God, it's so scary. I have no third party to take care of myself. And it's like, but wait, at some point in American history, people packed all their shit up in a wagon and they took a couple horses across America and they relied on no one but themselves. There was no one to bail them out. And when I meet Bitcoiners, it's like they want to have some of their own land. They want to make some of their own food. They want some chickens, go get the eggs. They want to raise their own families and instill values in their kids that they want to have in their kids. They don't want the state raising their kids. And so when I think about Bitcoin and I think about the American foundation, it's self-sovereignty, taking responsibility for yourself, and that's what Bitcoin's all about.
Nice. So Ben, you were a world-class athlete. I have a friend who's a trainer, and he said that almost everybody who trains, their politics gets affected. Do you see some kind of similarity between like people who take care of themselves and fitness and this sort of theme of Bitcoin and self-sufficiency that you mentioned?
Yeah, 100%. I think there's a few mixed martial artists on the panel, I think either tomorrow or Saturday. And I think specifically in the mixed martial artist community, we are a little bit anti-authoritarian, very individualistic, and so there's more mixed martial artists that come to Bitcoin and understand it right away than I think other fields. And it's just because we are okay with that self-sovereignty and we are okay with taking responsibility for ourselves and our actions, and we don't like people telling us what to do, right? we love the freedom, and so, yeah, I think that kind of lends itself a little bit easier.
Nice. Yes. So speaking of rebels, Luke, when we were backstage, we were talking, we knew each other long before Bitcoin. You've been an activist in liberty circles for a long, long time. You mentioned Free State Project. Can you talk a little bit more about, you know, kind of these core values and what this space was really all about back in those days and how it fits and why your liberty leanings brought you into this industry?
Yeah, it was a natural kind of progression, especially being friends with a lot of people in this kind of industry that were on the forefront of it. A lot of people saw this as a major kind of disruption. A lot of people saw this as an answer to the Federal Reserve that is literally printing people into poverty. We were warning about the problems of the larger financial banking system before it was cool. Now it's cool. Now everyone's complaining about inflation. We were complaining about inflation even back then. And then to see kind of a potential to have an alternative to the fiat Federal Reserve banking system that was set up by these secret families, everyone was kind of interested. Everyone was kind of curious. People were still kind of maybe looking at it as maybe potentially a PSYOP within a PSYOP, but it's pretty clear that the kind of innovation, the kind of people that it has propped up, the amount of prosperity that it has brought individuals and people, as well as solutions to help individuals, it clearly was something that the state didn't like. It doesn't like it anymore. It's going after a lot of the developers. It's stopping a lot of the innovation. It's standing in the way from allowing it to really be what it should automatically be, for what people envisioned it to be. And I think those larger ethos is something that a lot of people came to understanding now more than ever, and they kind of came to us. We didn't change. We never shifted our values. We always believed that there was a larger financial problem looming, and a lot of people saw Bitcoin as a solution to that.
Nice. Jimmy, you mentioned the administrative state. How do you see the, what do you think of the, how do you define the administrative state, and how does it fit with the fiat system and the Bitcoin system?
Yeah, the administrative state is just all the people that are rent-seeking. And rent-seeking is this idea that you get in the middle of a bilateral transaction and take some cut without adding any value. And there's plenty of that in this economy. I would estimate something like 50+%. You ask any management consultant about any large company, and you can easily cut 50%. And Elon Musk proved this with X, where he fired 90% of their people, and the site ran fine, right? Like maybe they had a couple of hiccups, but being able to cut out 90% and not having anything happen tells you that these were people that weren't adding any value. They didn't have anything that they needed to do. But you know, this human instinct for rent-seeking, for trying to get something for nothing, essentially, like doing minimal amount of work, it is there. It's part of our laziness, and it sort of like corrupts the soul. And unfortunately, that is still prevalent today, not just in you know, the normal economy, but even here, right? Like the last three panels, just to go back, they talked about Web3, about Ethereum, and about, you know, the new ETFs and all that stuff. This is rent-seeking, people, right? Like they wanted fractional reserve bank and stuff like that. This is rent-seeking. This is the administrative state. This is what's trying to take over and sort of corrupt Bitcoin. Thankfully, we have all of you, right? You guys understand the values of Bitcoin. And, and we're going to have to fight for it, guys. It's not going to come for free. Right? Like, if you want something good, you have to fight. You have to be willing to stand up to these people that want to change Bitcoin and put it on a course that they don't want. And you know, I love this panel's you know, title, "Make Bitcoin in America Great Again," because really the entire like Trumpian MAGA movement, and believe me, I have many problems with Trump, and maybe we can get into that later. The entire MAGA thing was about, okay, the values have sort of drifted away from what we actually believe. And you know, he was sort of like the representative of that, saying, okay, we need to bring things back to when America was better. Now, like I said, I have many problems with that, but at least the marketing of it and the message of that is pretty solid, right? There's a sound basis for that. There is sort of like an administrative state, rent seekers, people that are sucking at the teat, and it's all because of fiat money. When you have a money printer that is able to create value out of nothing and make it look like a market process because they're paying for it, even though it's really stolen from everybody else, and especially being able to do that outside of America and stealing from the poorest and most vulnerable people all over the world in the developing countries, the orphan in North Africa, the Nigerian business owner, like this is what happens, right? Like, and you get a rent-seeking administrative class, many of which I think, honestly, have been on this stage the last few hours. You know, those are the people taking it, and those are the people that we need to make sure aren't taking over with Bitcoin.
Interesting. Luke, how do we fight back against this? What Jimmy's talking about? I think we've all seen it, particularly people who've been in the space a while. We've seen a radical transformation. I mean, Jimmy's right. You know, you know, if at a meeting like this 10 years ago, it would have been 99% libertarians and ANCAPs, and now we have, not necessarily here, but other places in the industry, even more focus on KYC and some of the panels and stuff that Jimmy's talking about, inordinate amount of focus on compliance and these kind of things. How do you shake people out of that? You've done a lot of communication on this kind of thing. How do you get people to reverse that course? And what would you say to the newer Bitcoiners here who maybe think that it's all about paperwork and compliance and bringing the so-called adults in the room?
They're the bad autists. We need the good autists that support independence, that support freedom, that support causes like Free Ross. And I think rallying behind larger causes like that speak to the kind of larger ethos of everything. And Donald Trump coming to the Libertarian National Convention and conceding that he is going to be freeing Ross is a major move in the right direction. That is a step that needed to happen a long time ago. It's happening with Donald Trump. He's speaking up for it, and I think that representation, that policy, is something that truly is shifting the tide. Now, you're going to have the do-gooders. You're going to have the people who are going to want to do everything correctly. But it's important for individuals to understand the true power that they have within themselves to do little things like support your local black market, support your local farm, support individuals and talk to them about Bitcoin and ways to transact and ways to, of course, get into this kind of industry from a real grassroots effort that truly does prioritize the individual over the BlackRocks, over the Federal Reserves, over the big banking systems that have hijacked our way of life and are routinely destroying it. So you got to be vocal. You got to keep speaking out about it. You got to keep pressing the ideas, and you got to represent those ideas yourself as best as you can as an individual.
Nice. Ben, what do you think about the current political environment? And I mean, this is obviously a very political focused event now with Trump coming here and everything. What do you think about that? And how do you think that relates to sort of America's history and when we've been the greatest that we've been?
Yeah, so I think it's, I'm going to go on a little bit of a tangent if that's okay with you.
You got it.
All right. You know, I think it is, there's this saying that you don't change Bitcoin, Bitcoin changes you. And I think we're watching that with everyone in politics coming to Bitcoin. But, you know, and obviously Jimmy's informed my thought process a little bit. He's got a great book called Fiat Ruins Everything. You guys read it or no? Oh, man, we need more claps for that. Buy that damn book, people. But anyways, one of the things that I really think about with this Make Bitcoin America Great Again is, you know, 100 years ago in America, we were leading the world in production, innovation, all this stuff. And now the best and brightest minds in America are going into financial services. It's really sad to me. You know, I coach wrestling. They go to college, and then, you know, a couple years later, I say, hey, what are you going to do when you grow up? And so many of them say, well, I'm going to do financial services. I'm like, it's such a grift. You're not producing or providing anything. And so if we can get the best and brightest minds in America to go back into real innovation and real production, I think that's where it's at. And I think that's a really, really important concept for us.
Mm. And it's important to understand that a lot of that is due to the presence of fiat money. And Richard Cantillon wrote about this in like 1723, that when you have the money printer, manufacturing leaves because labor is cheaper elsewhere. What's happened since 1971? Every major manufacturer has left the United States for the cheaper shores of offshore stuff. This is why, you know, when you're the world reserve currency, you hollow out your industrial base. And this is one of the things that the politicians are rightfully focused on, but they don't know the solution. The solution is getting rid of the dollar reserve currency. And, you know, unfortunately, politically, that's not really popular because they can't spend, you know, whatever they want. But this is a power that the market's going to take away from them eventually, or they're going to have to figure out some other way to do it, or they're going to just sort of have to suffer the consequences. Unfortunately, we have this 4-year political cycle where every president or every party that comes into power is incentivized to suck it dry of whatever value that they can, and then just sort of like leave the problems for the next administration. The can has been kicked down the road for so long. You know, we keep running deficits. The numbers just look more and more unreal, and unfortunately, this you know, none of the parties that are running right now like has any plan for figuring this out, right? Like, but really, it comes down to the Federal Reserve. It comes down to just doing what you do in your own household, right? Balancing your budget and making sure that you're not spending more than you take in and things like that. They're doing none of this, right? It's very disappointing.
Yeah, no, it's right. I like the work that you've done and people like Seyffart have done talking about how fiat breaks everything. I mean, even in Seyffart's book, there's even talks about food, even obesity. It's all related to fiat. And I definitely encourage people to read your book. What do you think the financial services world would look like if we weren't in such a fiat-dominated world?
Oh, man.
Oh, yeah. I mean, I think it would be gutted, right? Like, because the thing about financial services and the reason why they're all having an orgasm over like an Ethereum ETF or whatever is because they get to manage your money, right? Like, and there's this myth that you need diversification or whatever. Under the gold standard, people just kept their money in gold. That was it. Like, it was so simple. But instead, now you have entire industries of people that are telling you what to do with your money. And of course, if they get to grab your money, they can like charge a fee here, charge a fee there, and that ends up being incredibly lucrative. This is what the entire financial services system is built on, is because fiat is not a very good store of value, so you have to put it into all this other stuff. And, of course, real estate has some risk, and stocks have some risk, and, art has some risk or whatever. So they're like, okay, well, we need to spread the risk over all of these things. Yeah. That is not the normal state of things, right? If you have a good store of value, then that's what you just put it in. That's it. Unfortunately, we have this entire industry of banking and financial services that has just sort of like grown up like cancer in our civilization today, and they take up a significant part of the economy. And this is what's essentially hollowed out the industrial base. It's hollowed out the invention, the progress, and stuff like that. It's we've progressed so little since the 50s and 60s. Think about it. Like we had nuclear-powered submarines in the 50s and 60s. This is a vehicle that does not refuel for 18 months, okay, because of nuclear power. Where is that technology? Why do I have to fill up my car with gas every week, right? Why are airplanes so big and their fuselages so big and things like that? You should be able to fly around the world, right, with that much power. Instead, all of that progress stops because the incumbents come into power and they get to do whatever they want. So, of course, the incumbents put up all sorts of regulation to make it impossible, and they survive through the financial services and debt and money printing, and you get no progress, right? Like just look at what they thought the future would be from like 1950, right? They thought we would have flying cars and we'd be able to go from, we'd have colonies on Mars and stuff like that. Where's that progress? None of that has happened because fiat slows everything down. It makes everything static. It preserves the status quo at the expense of invention and creativity and entrepreneurship.
Can I add to that, Jimmy?
Yeah.
I think, and I think that the American people, when I talk to my friends, so brainwashed into thinking we have to invest. It's almost like a second job. Like you go to work and then you come home and you study what are you going to invest in. Are you going to buy stocks? Are you going to buy real estate? And the reason we feel that way is because our money's dog shit, right? Mm-hmm. If you're for real, if your money held value, you wouldn't have to invest, and that's what Bitcoin can be. When that money's inflating at 8 to 12% per year, if all you do is save money, you're going to lose. And so everyone feels, oh, we have to invest, we have to invest. But we don't have to invest because America's got a gigantic money printer, and they just keep pushing it out there. If we just had a really solid money, then we wouldn't have to do that, and that's what Bitcoin is. And Bitcoin is a lot of things to a lot of people, and for me, what I think it is, Bitcoin is the best money human beings have ever been able to invent. That's what it is.
Luke, to Jimmy's point about, before we had this fiat system, people would measure their wealth in gold. And, it's interesting, you look back at these old TV shows about the English lords and stuff. They say, oh, Lord so-and-so has 5,000 pounds. They would measure their wealth. And the entrepreneurs of the day, they'd take actual gold coins, they put it in their safe behind, like when you see the Uncle Scrooge, Christmas special. That's how people measure their wealth, which is a lot the way Bitcoiners do it. They keep stacking and they're not playing these games. How do you think the world will look on a, is that the way we should go? And will Bitcoin help us go that way? Would that be a healthier form of investing? And what would the world look like if we win?
I think if we win, we're going to make all the systems that are in play right now obsolete. They're going to become useless because they are useless, and they only exist because we keep playing into them. And once we seek other alternatives, and once we understand that the true power lies within us and communities and the people we build and grow and network with, then the game's over. To answer the question that you kind of asked me beforehand, I think the establishment kind of Bitcoin crowd needs to understand that the banks are absolutely ruthless and evil. It's a con. It is a game against you. You are not a part of that game. You are there to be a pawn. You are there to lose. You are there to, of course, be useful to them. But once you figure out a way to be useful to yourself, once you become useful to your family, to your neighborhoods, to your communities, everything changes. So this is the power of these kind of events, these types of conversations, for people to understand the game's rigged, and it's not rigged in your favor. But you could rig it in your favor by waking up to all these alternatives, waking up to all these exciting people doing all these really fun projects, all these really cool things. And I think this is really where the kind of synergy, the energy is that we really need to kind of propel forward more than ever now than before.
Nice. Well, we're almost out of time. I'll give I'd like to get each person to close, quickly with 45 seconds or so on, what you would like to see over the next 5 and 10 years of where you want to see America and Bitcoin. Go ahead, Jimmy.
Well, so first of all, let me say that I am very disappointed in Trump for criticizing Bukele for cleaning up his streets. I'm also disappointed in Trump for releasing an NFT where he made $1 million. Also disappointed in Trump for taking money from shitcoiners and basically saying, we'll give you what you want. I say this because I expected more from him. I thought he would actually investigate this further, but unfortunately he's playing the game that every politician plays, which is to widen your base. Let's invite everybody into the tent, and he's inviting a lot of rats into the nest. I'm sorry, but that's basically what he's doing. I would like to see in 5 to 10 years a United States that is more on a Bitcoin standard, that has a lot of people that are saving, that are creating and being entrepreneurs, starting businesses and things like that. Unfortunately, the deep state, the administrative state, the rent seekers are not going to go away quietly. And I believe that there's going to be some sort of fight. It may play out in the political arena. It may not. It may play out on the streets. Who knows? We might have civil war. I don't know. But there is a fight that needs to be had, and it's not going to be quiet.
I understand some of your criticism, but I think this also provides us a unique opportunity to at least have that conversation that we wouldn't have under any other type of administration. And I thank Donald Trump for at least opening up that conversation, listening to us, and being able to, of course, promote things like free Ross, promote deregulation, promote anti-war values, anti-tax values, which aren't perfect. You could always criticize them, and I think we need to criticize them, so I thank you for doing that. But at the same time, we also have to incentivize those larger conversations, be there for him, and in a perfect world 5 years from now, the government isn't in my life, isn't in your life, and we are the true masters of our own existence.
Yeah. Well, that's kind of what I was going to say. Stole my answer, damn it, Luke. Yeah, I mean, where I started was self-sovereignty. America got founded on people who were willing to take responsibility and get on a boat and come across the ocean or go across America on a wagon train and take responsibility for themselves. And I think that's one of the biggest values that Bitcoin provides. So hopefully we can do that. And then, something maybe we can't control unless we all go into Bitcoin is hopefully the government gets a little smaller. They get out of our lives more. They stop printing the dollars into infinity. And we can all live a happy, peaceful existence.
Well, this nation was founded by a bunch of people who looked at a tyrannical system and said, no more. And this industry was founded the same way, and it's a real pleasure to be on the stage with these folks that have been at the forefront of doing that, and to be here with all of you in the audience who've also, in your own way, worked for this freedom. And I think the alignment between Bitcoin and America is something significant and something that we're all going to change the world together. So thank you very much, and it's been a real pleasure, gentlemen.
Thank you.
Money, and how does it get value? Paper money has value because someone says so. Bitcoin is different. It's like digital gold. It has value for many of the reasons gold does, but that's only the start. It has a limited supply, only 21 million, so no one can decide to just print more. Because no central authority controls it, it can never be shut down. And unlike with banks and credit card companies, you don't need approval to use it. It puts the power back in all our hands. Bitcoin lets you control your finances. Kraken lets you buy Bitcoin. Kraken. See what crypto can do.
What's the second best? There is no second best.
We will ensure that the future of crypto and the future of Bitcoin will be made in America.
So yeah, today we're going to be talking about runes.
We're talking about runes.
But first.
Welcome back to the Mara News Desk at Bitcoin 2024, powered by Bitcoin Magazine. I'm your host, Pete Rizzo, editor of Bitcoin Magazine. You just saw Make Bitcoin in America Great Again, a talk about a more sovereign future with Bitcoin. But of course, there's a lot happening here in Nashville, Tennessee, a lot of local flavor, and there's still time to get here to join the 20,000 plus people of Bitcoin 2024. My next guest comes to us from Nashville native Shane Mack, CEO of Ephemera, maker of the XMTP messaging protocol. Welcome, Shane.
Hey, it's great to be here, Pete. Thanks for having me.
So, Shane, why don't you tell us, as a local, a person from Nashville, building your business here, what does it mean for the Bitcoin conference to be in Nashville, Tennessee?
Honestly, it's unbelievable. And, you know, I've been coming here for over a decade. And to see something this big that takes over the entire convention center, all of downtown. I mean, I was having dinner on Monday night, and someone I've been playing pickleball with for 3 years is like, what's crypto? Is that a real thing? Is that, is it really happening? And then to just watch him actually see at that dinner who was at the dinner, who's coming to town, who's speaking at this event. He's like, you have the entire convention center? Like the one downtown that takes over the whole street? And just to feel how big it is. I mean, this place is massive. And, there's a place called Bitcoin Park here now.
There's a giant dome behind us, as sure as you can see.
Exactly. And there's a place called Bitcoin Park here now. And crypto's starting to have a moment. So for me, it really just feels like it's happening. And it's cool to see it happening here in Nashville.
Is this making Bitcoin feel more real to people? Do you talk to business owners? Are they interested? What kind of questions are you getting from people in Nashville? I can't imagine there's too many tech conferences here.
Yeah. Bitcoin's actually probably the one that everyone here is asking about. It was funny moving from San Francisco. I moved here, and Bitcoin was already here. But now when you see things like this event coming, it feels like culturally we're crossing from what is it to like, I want to be in it. And I really feel like we're going from the curiosity to the I need to be involved.
Well, obviously, it helps to have a couple of presidential candidates. We have Robert F. Kennedy Jr. will be speaking tomorrow, Donald J. Trump on Saturday. Is there a buzz, a sense that this is a political conference in Nashville? I guess what is the average person in Nashville saying about the political element of the conference?
I don't really hear that at all. I hear people just can't believe that this crypto has become this big and that everyone at a political level, society level, now cares about it, and it's become a political issue. So I actually feel like it's a moment where it just shows how important Bitcoin and crypto is, and to have them come to Nashville just shows how important it is.
Interesting. And I know obviously you have a business here. Maybe you could speak a little bit about, there are obviously Bitcoin and crypto businesses in Nashville. What's the attraction of having a business here that makes it better than maybe some of the other cities that you've been in?
Yeah, for me, I mean, I built a company in San Francisco. I had an office in New York City, and I had spent all of my time flying between New York and SF. And now, actually, I spend my time here, and they fly from there to here. I call it the switchboard city. I can be anywhere in the U.S. by 10 a.m. It's also a great place to live, great place to have a family. The state is actually very pro-crypto. And so I feel like it's the place where, as a switchboard city, I can get anywhere, but people actually want to come here. It's amazing. I love music. I love culture. And it's not just this single-track monocultural city. It has all these other things and entertainment, and people want to come here. And so I think that's the best part about it.
A lot of people, of course, having fun on Broadway. You said your first Bitcoin conference. What are you excited about to see over the next few days?
I'm just excited to learn more about all of the consumer applications happening. Crypto's biggest problem is crypto's so hard to use, and it really still is. But that's changing. And when I see consumer apps and games and developers and the whole community starting to do things that actually impact people's lives, that's where crypto needs to go, not in this like, hey, can I just make money in crypto? And for me, seeing us go from what are these tokens and what are these prices to I'm actually using a communication device, or I'm using a game that I like to play, or I'm able to do things that actually make my life better, going from the money game to actually the utility game and watching the L2 community of Bitcoin and all of this other developer innovation happen, to me it's looking, I always follow the developers, and it looks like the developer innovation is really starting to happen on top of Bitcoin and crypto.
We're about to go to a sponsor from a message from our sponsors. Real quick, message for people who are coming to Nashville, tips for the tourists?
I mean, don't eat too much hot chicken. That's really the answer. And then go see some great live music. And then get out and see the hills too. The Nashville, Tennessee hills are great.
Beautiful place. We'll be here for the next 3 days at Bitcoin 2024. A word from our sponsors, and we'll be back at the Mara News Desk. Thanks.
change, and the third one was smart contracts, so programmable money. And this is what we went to market with, and this is what we experimented with until.
News desk. Again, we've got a special segment coming up. This is the Genesis book by Erin Van Wertum, who's joining us for another segment of Bitcoin Basics. He's here to explain to the folks at home who are new to Bitcoin all the intricacies. We're going to talk right now about why open source. Bitcoin is a software. There are different types of software. Open source is an important freedom-preserving method of software. Erin, why don't you take us into the details?
Yeah, so why is Bitcoin open source? For this one, I'm going to start with a short history lesson. In the 60s, when computers were just new at MIT, a group of students got very excited about this new technology. They congregated around this machine. At first, it was just one machine, and they started to teach themselves to code. Now, because there was only one machine, this was a very collaborative effort. They were writing code, and then others would help them, and they were contributing to each other's code. It was like a shared resource, and it was a community project in that sense. To point this out, source code is something that humans can write and read, and that's converted into binaries. Binaries are ones and zeros. Computers can run ones and zeros. That's how computers read code. That's how computers work. Humans cannot read ones and zeros. A little bit later, in the 80s, proprietary software or commercial software became more popular. There was a big difference with the MIT type of software developer. With commercial software, you would buy the software itself. You would buy the binaries. Now, this meant that if you run that software, you don't really know what it's doing because you can't read the ones and zeros. Now, of course, you can watch the screen, you can look at the screen, so you have some idea of what the software is doing. But the software might be doing other things that you're not aware of. It might be analyzing your behavior. It might be spying on you. It might do things you don't want that software to do. Now, one of the hackers at MIT, Richard Stallman, he didn't like this idea at all because he thought this represents a power dynamic between developers and users. Users just have to trust developers that the software does what it does. But the developers could, of course, lie about that. They could include backdoors, for example. So, Richard Stallman, I'm told I'm looking at the wrong camera. Is that the one? The right one, Rizzo?
You got the red one over there.
The red one, got it. Where was I? Richard Stallman didn't like it. Richard Stallman, therefore, introduced the concept of free software. With free software, the source code is published. So anyone can check what the software does, how it works. There can be no backdoors in it. With the introduction of free software, this also reintroduced the more collaborative spirit of coding. Programmers could take the free software, copy it, improve it, contribute to it, and that's how the free software got better and better. It was a quality improvement. Because of that, there was also a rebrand attempt. At some point, people started calling it open source software to sort of emphasize the more pragmatic side of free software rather than the ideological side. Now, Richard Stallman didn't really like that. Some people nowadays call it free and open source software, but open source software also definitely caught on. Bitcoin is indeed free and open source software. And for Bitcoin, it is crucial that it is free and open source software because this Bitcoin software needs to do what you need to be able to check what it does. Everyone needs to be able to check that there are really only 21 million Bitcoins. Everyone needs to be able to check that your coins can't be stolen by developers. So for Bitcoin to be truly trustless, for Bitcoin to be a trustless system, it's fundamental that it's free and open source software. Also, Bitcoin is high quality code because of this. So when Satoshi first released the software in 2009, quickly other developers started to look at it and help it, improve it, fix bugs. This is still going on today. So now the main software of Bitcoin, Bitcoin Core, there's 2 new releases every year, and it gets better and better because of this. So it's crucial that Bitcoin is free software because you can check what it does, it's trustless, and it's high quality. That's why Bitcoin is open source.
And you can hear more about the history of open source as it relates to Bitcoin in the very great Genesis book, The Story of the People and Projects that Inspired Bitcoin at bitcoinmagazine.com. find more Bitcoin Magazine books. We'll be sending it back to the main stage here. Stay with us. It's Industry Day at Bitcoin 2024.
The United States with a strong contingent of leaders basically being incredibly bullish about the future of Bitcoin and their country. What kind of dynamics do we expect to materialize from an America that is, forward-facing, bullish on Bitcoin? Do we expect competition among countries? And if so, is that competition zero-sum or positive-sum? So, Brian, let's kick it off to you and go down the same order of panelists.
Well, I think that Bitcoin is doing for money what the internet did for information. And it's going to be critically important if the U.S. wants to maintain its leadership globally to be forward-looking on this. And we're in a moment where that makes the most sense because we've seen excessive money printing and we've seen a lot of inflation recently. And so I think Bitcoin's value proposition is rising rapidly in that conversation. And if the U.S., as sort of the home of global capital, does take a pro-Bitcoin position and really starts to see the value and integrate it more into its economy, then that sort of, I guess it fires the starter's pistol in sort of a new space race, but for this monetary commodity. And I think that there will be tremendous downside risk if other countries don't awaken and start competing, and I think some are already. But that and downside risk, there have been psychological studies that show that loss aversion is an even more powerful motivator than upside potential. And so I do think if the U.S. Takes that position and sort of seizes a first mover advantage, that other countries won't have a choice but to jump into the deep end of the pool with us, which would be great for Bitcoin, for the value of Bitcoin and the utility of the network, and really would show the world that things are changing in a positive way and that they need to get on board lest they be left behind. One example that my friend and colleague Sam Lyman wrote about just in the last day or so was thinking back to like the 1800s. A lot of countries were very focused on gold. China and India kind of veered off into more of a silver standard. They kind of got left behind for decades and had to play catch up. There's probably no perfect analogy to Bitcoin, but that's probably a pretty decent one. So I do think if the U.S. moves, others will have to as well.
And Dr. Marwan, from your perspective, how do you interpret senior U.S. officials and leading politicians embracing Bitcoin? What does it mean for the UAE?
For us in the UAE, especially in Dubai, we don't do politics. So we focus on the value take from the technology. We always are technology focused. We are not focused on what people perceive about the technology. We actually go to market with it. We try it. We tried regulating it and see what comes from it. And for example, with crypto, when we started regulating crypto and specifically Bitcoin, we realized that there's a lot of learning that has to be happening with the regulators. So we had this continuous feedback loop coming from roundtables, from other engagements with the industry, from opinion papers, regulation kind of ideation with the industry. And from there, we started attracting the biggest exchanges with the biggest VASPs, virtual asset service providers, and literally trying to give them and walk this fine line between regulation, not self-regulation, but an actual regulation that underlines what can be done that protects the customer interests, whether they're retail or institutionals, and as well as make businesses thrive. And Dubai has this mentality of the success of its businesses is what makes it successful. So that way, we are focusing on the success of the business, at the same time preserving the rights and protecting the consumer at the same time. So that way, we get away from all the issues to do with politics. We actually work with countries that embrace blockchain technology and Bitcoin and other cryptocurrencies, and we are not an island. We always work with other countries and and regions that are favoring this kind of technology and embarking and making a bet on this kind of technology. And we're already, after creating the world's first made-for-purpose regulator, we actually started talking to the other crypto-friendly regions to see how we can work together on these initiatives, and what we can learn from them and what we can actually export to them as well.
That makes sense. And Brian, so does your comment earlier about the Bitcoin network doing for value or money what the internet did for information. And in sort of trying to project or think through what geopolitical competition might look like for the Bitcoin network, I think it's useful to sort of compare it to the internet, right? You have this sort of open protocol that anybody can access and participate in. And in that sense, adoption is non-rivalrous, right? Like the more the merrier. So too with Bitcoin. But there was intense competition in terms of those service providers, right? Some of the largest companies in the world are early internet businesses that, for a series of reasons, chose to domicile and grow their operations in the United States. And to anyone who's sort of looked at American equity markets in the last 30 years, it's clear that we've benefited tremendously from creating regulatory conditions, among other things, that are sort of conducive to the running and domiciling of those companies. So Matt, my question for you is, how can we expect competition vis-a-vis Bitcoin to play out on the international stage? And what sort of form will that competition take?
Yeah, I think you're seeing rising competition across all sorts of domains. So I would characterize as sort of great power network competition. Principally represented not just in Bitcoin and digital assets, but across sort of whole swaths of these emerging, fundamentally digital networks upon which our modern technological civilization relies. And so there is fights over where we lay subsea cables for telecommunications between sort of Western companies, U.S. companies, Chinese companies. What sorts of 5G telecommunication systems get installed in which countries? What sorts of AI cloud service providers and other kind of big data solutions are provided in which countries? Sort of whether sort of Western aligned or China aligned. Companies, what sorts of central bank digital currency networks people are going to opt into or collaborate with in terms of those projects. And so Bitcoin, as it emerges and becomes increasingly geopolitical, is going to be a part of that larger great power network competition, right? Which is a competition not just over strategic influence, right? You're trying to compete over critical nodes in the digital network. You get a lot of power having dominance in a network, right? The U.S. having the dominance in the legacy financial system gave the U.S. immense power by two key parts of network power are essentially surveillance power and choke point power. If you can see all the traffic in a global network, and for example, in financial transactions, you get a lot of useful intelligence out of that, right? So that's essentially FinCEN and sort of the insights we get through SWIFT. And then you can have choke point power via vis-a-vis sanctions through OFAC to block and sort of exclude actors from a global network that you dominate. And I think as you see sort of an increasing shift to a more multipolar system and this great power network competition playing out, there's a recognition by all sorts of actors that there's advantages to be gained by positioning yourself as key nodes in these emerging networks, and both mitigating the ability for you to be constrained by another stakeholder or in the global system that has lots of power, but also gives you lots of strategic autonomy. And so I think Bitcoin will be a part of that dynamic and will be looked to as a way for lots of countries to sort of preserve some of that strategic autonomy. And in particular, from the perspective of the United States, there are, this isn't just raw power dynamics. There are sort of, implicit value systems embedded in all technology. And so there are certain visions of emerging technological governance which are fundamentally kind of digital authoritarian based, right? This is about increasing control and surveillance of populations using these tools and, essentially governing them vis-a-vis their interaction with digital systems that the government and the ruling systems control and can sort of suppress dissent, can sort of lead to potentially bad outcomes for human rights. And so there is a competition playing out at that level too, and to the extent that Bitcoin is sort of a fundamentally open, organic, bottom-up adopted digital system that is fundamentally premised on giving individuals access to and control over their own property and the ability to engage peer-to-peer, in speech and exchange, that represents a kind of a global technology that can support essentially digital liberalism and potentially a counterbalancing force against what would otherwise be maybe a powerful convergence towards digital authoritarianism. So to the extent that the United States and sort of like-minded countries are interested in kind of fostering innovation, economic development, and sort of liberal human rights, like the Bitcoin's adoption, as well as other related technologies, I think will be aligned with our national interests.
So, Dr. Marwan, as the United States tries to position itself as a critical node in this great power network competition that Matthew describes, you talked to me backstage about policy decisions that you were involved in many years ago. What, if any, lessons do you think American policymakers could learn from Dubai's regulatory treatment of Bitcoin?
I think approaching any kind of new asset class with a blank sheet of paper, trying to see and understand. I think first thing is education. You really need to understand what is the underlying underlying asset, what is the technology that enables it, how does it work under the hood, and from there try to design something that not only tries to cater for this technology, but how it can make it actually thrive, and how can you, as a region or as a catalyst, make that technology work for the best. What is the value take from that technology? Identify that, play around with it, have a really fast feedback loop with the industry, as well as all the participants, from retail to institutionals and others, just to make sure that when you are actually moving within the space, you are actually the fastest mover, you are breaking things, and that's okay, actually, totally okay, and you're not polarizing anybody in that space.
Yeah.
You want to play and encourage the good players, and you want to really make it extremely hard for the bad players to flourish.
That makes sense. So, Brian, from your perspective, and we are closing up on time here, what would your elevator pitch be to American policymakers? What are the most critical changes needed for America to come out on top in this great power network competition?
So some of what Dr. Marwan said, I really appreciated. Approaching this from a tech-neutral perspective, helping businesses thrive, not trying to shoehorn new things into old frameworks. I jokingly said if he's interested in running for office in Texas, we'd love to talk to him about that, because that's the sort of pro-business, pro-human thriving, pro-innovation attitude I think I'd like to see from our policymakers. And there are different attitudes from different government entities in the U.S., and I kind of joke about this when people ask what's the biggest difference between, we have a lot of operations in Texas, we also deal with federal regulation. When I come to Washington, the question is usually, why should we let you do this? And then I go to Texas and it's, how can we help, right? So I think the U.S. needs to be leaning more in that latter direction, rather than having regulators sort of struggling to get their piece of the territory, which often can happen. I do think, when I was at Treasury, where we worked on the concept of regulatory sandboxes and allowing new ideas to thrive, and not always just assuming the worst or looking first at risks, but you also have to look at the benefits. So sort of an attitude shift, and then there are downstream policies from that. We've seen a lot of hostility from the SEC here in the U.S. We had litigation against the Energy Department. Banking regulators have been a little bit difficult for the industry. So I think that attitude shift, broadly based across government entities, would be very helpful for positioning the U.S. to win this competition going forward.
That makes sense. So let's go to closing thoughts, starting with you, Dr. Marwan.
So I encourage everyone here to actually take that leap of faith and really come to Dubai and experience Dubai firsthand, and experience how the crypto industry is doing there, how Bitcoin mining is done there, how everything to do with this space, with technology in general. And the best place to come to Dubai is actually in October. We have the world's biggest tech conference called GITEX, Gulf Information Technology Exhibition. as well as future blockchain summit, where we do not talk about how crypto is right now, but how do we perceive crypto in the next 10 years. So you owe it to yourself to come to Dubai, you owe it to yourself to come in October this year and experience this firsthand, not through hearsay, but through you experiencing it and really coming to the where thought leaders within this tech space, not only with crypto, but crypto intersection with AI, intersection with big tech, come together to talk and really rub shoulders against thought leaders within the space.
All right, Brian?
Sure. We've made tremendous progress in recent years. It wasn't long ago that President Trump and other policymakers were calling Bitcoin a scam and saying mean things about it. And now all of a sudden, you know, we've done a lot of work. The industry has matured quite a bit, and we've done a lot of work, and you and Matthew, of course, included, in educating policymakers on the potential of Bitcoin and the Bitcoin network. So things are getting better every single day, and I think they will continue to do that. And the fact that we're even having this conversation in this beautiful conference about a potential strategic reserve is a signal that we've come a long way. We still have a long way to go, but we're making tremendous progress.
All right, Matt, you've got a few minutes for some closing thoughts here.
Yeah, I would say, you know, Americans, we tend to look inwards and we tend to think that basically the rest of the world doesn't matter and that our political disputes will basically dominate, you know, the rest of the world. And to the extent, because we are the global hegemon, it does matter, our political debates. But, you know, to the extent that Bitcoin becomes politicized in the frame of US politics, like, that's not relevant to the rest of the world. And Bitcoin is a fundamentally global phenomenon. And so, as Dr. Marwan was saying, like, they don't think about Bitcoin as a political thing. They don't think about it as, you know, aligned or coded as being a Republican or a right-wing or a liberal thing. It's just a thing that has certain attributes and gives them certain advantages. And so, from the, you know, if you really want to contextualize Bitcoin's role in the next few years, I think you have to really step out of the sort of narrow frame of US politics and think about how folks in Beijing, how folks in Riyadh, in Abu Dhabi, in Dubai, and other capitals around the world that are, you know, not necessarily bound by the same sorts of debates and constraints that we have inside this country. And, you know, Bitcoin is a global phenomenon, and it will evolve in ways that, you know, no single power can fully steer. And so, to the extent that we, you know, turn inwards and forget about these other global actors, we may give up, you know, what could be a strong advantage for us. And so it behooves policymakers, you know, on both sides of the aisle to actually, you know, step out of any particular tribal affiliation and think about the global landscape, how it might change, and how it could change pretty radically, and the agency that other key stakeholders and power centers around the world have to leverage Bitcoin in ways that could, you know, get the jump on the United States. And so I think, you know, we see positive signs of this, you know, more recently, but it, you know, has to carry momentum. It has to actually be executed.
All right. Well, Brian, Dr. Marwan, Matt, thank you all for your time. And Dr. Marwan, I look forward to seeing you in October.
100%.
All right. Thank you all.
Here to talk about today is the latest report that he just put out titled Understanding Bitcoin Adoption in the United States, Politics, Demographics, and Sentiment. It was a very, very interesting report. Some very interesting findings. Troy, how are we doing today?
I'm doing great. Yeah, thanks for talking to me. Yeah, I'm a fellow at the Bitcoin Policy Institute, and then this organization is the Nakamoto Project, which I co-founded with Colin Brown. And this report is through the Nakamoto Project. I also have a report with Margot Paez at the Bitcoin Policy Institute that also just came out called The Locust and the Dung Beetle. If you want to look that one up as well. But yeah, I want to talk about the Nakamoto Project.
Yeah, very interesting report that you had here, doing essentially at a very high level, trying to figure out where do Bitcoiners lean on the political spectrum, especially given a lot of the attention that's been received in the media by the political candidates that are talking about embracing Bitcoin and that kind of thing. But tell me about the sample size here. Tell me about some of the findings that you found in this report.
Yeah, we actually wanted to look at a broader question, which is like, why survey of.
Welcome back to the Mara News Desk at Bitcoin 2024, powered by Bitcoin Magazine. Once again, I'm your host, Pete Rizzo, editor of Bitcoin Magazine. Our new round of special guests, Frank Corva, lead business editor at Bitcoin Magazine, and James Seyffart, analyst at Bloomberg Intelligence, specializing in exchange-traded funds. So I want to go to the wires here. Obviously, we're at the largest Bitcoin conference in the world, but news still happening out there online. Minutes ago on X, on Bitcoin Magazine, Jersey City in the process of allocating its pension fund to buy Bitcoin ETFs, according to the mayor of Jersey City. This on the heels of Wisconsin's pension fund becoming the first state-level institution to publicly invest in Bitcoin ETFs earlier this year. We've got the experts now to dive in. Stick with us. Why is Bitcoin considered a stable enough asset for retirement funds, James?
Yeah, I mean, I just interviewed Robbie Mitchnick on stage, and he basically made the pitch, which I've never heard BlackRock say publicly. I tend to say, right now, Bitcoin is it's trying to become a store of value asset, it's trying to become a risk-off asset, but it often acts like a risk asset. And Robbie at BlackRock basically said BlackRock has the viewpoint that even saying that and talking about that is detrimental to Bitcoin. He views it as just asset with its own risk, but it is not a risk asset. He thinks it is a basically emerging store of value, and he thinks that's the way it should be pitched, as a diversifier to a portfolio that has different risks. It doesn't have counterparty risks. And so, yeah, I guess if that pitch, if Robbie gave that pitch to Jersey City Pension Fund, or somebody from BlackRock kind of gave the same pitch, I could understand. I mean, it's a strong diversifier for a portfolio.
Well, of course, this is a pension funds. This is supposed to be the safest of the safe. These are retirement accounts, often for teachers, firefighters, the people who power our society. Frank, your reaction to this news? Do you expect more of this? If so, why?
Yeah, I'd be curious to know actually what the percentage is. You know, how much this is going to, you know, of their portfolio, how much this will, what percentage this will take up. I wouldn't say it's a store of value the way that maybe buying some gold and holding that in a pension fund would be, but allocating a few percent, upwards of 5% even, you know, depending on risk tolerance or. Yeah, just what things look like in a portfolio. I think it's a great thing to do. I think in years to come, you know, 10 years from now, they'll look back and be happy they did it. And at that point, it'll probably be a larger percentage of the portfolio.
Then it could be business as usual. Of course, data shows 80% of Bitcoin ETF buyers have been retail. Obviously, some big 13F filings that we've seen for some big names. But it sounds like majority of demand isn't from pension funds. James, you want to take us in? What do the market flows look like from your point of view?
Yeah, I mean, let's be very frank here. I mean, these ETFs were the most successful ETF launch in history. Nothing else is really even close. And like trying to figure out exactly who bought this isn't super easy. Like the only way we have it is those 13 Fs you mentioned, and that's reported quarterly on a 45-day delay, and it's basically only who held it on the end of like March 31st in the case of the data that we currently have. So we'll get more data in mid-August about who else might have bought these things. There has been billions have flown in since we got the reported data for March 31st. But again, that data is just the point in time. So like if anyone bought it afterwards or only held it there and sold it, like they're not going to show up in there. What we do know is, like you said, it's mostly retail. It's a lot of people that came storming out of the gates and bought this initially. Institutions, a much smaller account. A lot of the institutions that are in there are hedge funds. And a lot of people are like, oh, hedge funds are buying this. Millennium's a massive hedge fund manager. Renaissance Technology. But really, they were doing it as a trade. They're not necessarily Bitcoin believers or Bitcoin bulls. Likely what we think they're doing is they're probably doing that basis trade. So they're going long the ETF and then selling short the futures, and they're earning like a 1% maybe return on that, 10% annualized, and they're just doing that monthly, and that's a lot of the exposure. But the real big players, we have seen some of them. You mentioned the Wisconsin Pension Fund. We're now seeing Jersey City. We've seen some institutions step in. Huge advisor networks, the ones that really are the biggest holders of these ETFs, they haven't yet approved these things on a solicited basis. So the way these platforms work is usually there's three different levels. Either they're completely restricted, which a lot of platforms are there. Most of the platforms, based on what I can gather, are in this middle range where like the only way that an advisor can buy it for their client is if I went to my advisor and was like, I want Bitcoin in my portfolio. But if you're an advisor, you can't go to your client and say, like, I think you should have this Bitcoin ETF as a 2% allocation, 5% allocation, what have you. That's because it's not available on a solicited basis. So a lot of these platforms are still getting to a point where they're going to allow that to become on a solicited basis. And I think you got to realize these institutions you mentioned, they think on a really long time frame. So they also take a really long time to do due diligence. I think there is an acceleration. Sometimes it could take years before they get to that final level. There seems to be an acceleration from these platforms to be able to do this. There's trillions of dollars in those platforms. So we'll see. But the smaller IRAs, the people that only have like a couple $100 million, maybe a few billion, they can be more nimble. And we've seen some of those buy in as some sort of allocation.
Of course, the final stage here, we want these institutions to be buying and holding Bitcoin, of course. Frank, is that the case?
We'll see. I think as James just mentioned, I would imagine there's going to be some sort of active management. If Bitcoin's price doubles in the next few months or something along those lines, I would imagine they're going to diversify into assets that are a little bit less volatile. And I think that we talked about this a little bit earlier today. Traditional markets, this level of risk or this level of potential upside, they're not necessarily used to that. There's not a lot of instruments where you're going to get this level of potential upside in such a short amount of time. So I would imagine these things will be actively managed, which is totally fine. Maybe the idea is sort of we're going to make it 3% of the portfolio now. We'll allow it to grow to maybe 5 or 6%, and we'll just we'll take some chips off the table, maybe move it into something safer like gold or something along those lines, or something that produces some sort of a return for them. But to me, that's okay. It's fine as long as they're adopting it and sort of doing it at a pace that feels comfortable for them. I think that's beneficial still for this space. James?
Yeah, I mean, I think I agree with everything you just said. If you're gonna, I talked about the percentage allocations. Robbie just said on stage, what they're seeing mostly is people are going in that like 3% range. So, like you said, you let it run up a little bit, maybe you take some chips off the table. But the flip side of that is also if we get another 80% drawdown, which we've gotten every single cycle, they're going to be buying on the bottom. So like a lot of things that these Bitcoin ETFs, I got so many people telling me that the ETF holders are going to be weak hands, and I tried telling everyone like that is not how ETF holders. They tend to be buy and hold long-term type investments, and they said they're going to run at the first sign of risk, the first sign of a drop. And the exact opposite happened, right? We saw Bitcoin drop 20-25%. We've seen a couple 20% drawdowns, and each time we've seen that since these Bitcoin ETFs launched, we didn't see people run. We saw the exact opposite. We saw billions pour in. We saw people buying the dip, and now we're at an all-time high for net flows on these Bitcoin ETFs, and I think that is the trend that's going to go forward. Now, that's not to say there aren't going to be periods where we're going to see serious outflows, but we're not there yet. People are still allocating.
Some big sellers of late. There's been, the rumored Mt. Gox distributions happening now. Kraken announcing a few days ago that they're midway through distributions of these assets. Germany, the country, the nation, coming out and liquidated 50,000 Bitcoin. The market seems like it's absorbing this. James, what's your read on the market situation?
Yeah, I mean, that's been the huge narrative, right? It's Germany selling. The one thing that's been overhanging forever is like these Mt. Gox coins. They've also moved, and I kind of think like basically since I got into Bitcoin, which I'm great at. I was mining Bitcoin technically in 2011, crashed my computer. I didn't really know what it was at the time. I just had a friend put it on my system.
Gotta find that computer.
It's gone. Believe me, I looked once I got back in 2017. I looked for that computer. But yeah, college roommate was like, "Oh, we can buy things on the internet," and so he was like, "Can I just use yours to like mine Bitcoin? It's this free internet money." But I forget what was the question.
Falling knife here. Mt. Gox coins distributed. Germany selling the FUD circus.
I've basically since 2016 when I first started covering this, 2017. The whole, I've heard about these Mt. Gox coins that are eventually going to get unlocked. And it's funny, you look at the Mt. Gox, they're referring to these people getting the coins now as, early. And it's like, guys, it's been a decade.
Mt. Gox did lose 750,000 Bitcoin. That's not the number maybe that's being distributed. Frank, do you know the actual size of these flows or anything about the distributions? Do we know?
I don't. It's a really good question. One of the things that I was thinking as you were asking this question, though, is sort of who has already sold their claims to these coins. So did people buy claims to these coins and are now they just going to receive these coins? So I'm not thinking too much about how many of these coins are coming back to the market. I'm thinking about whether or not the people are going to be active sellers the minute they get their hands back on them. Obviously, Mt. Gox 10 years ago, they paid for these coins much less than what they're worth now. We know that, but again, we don't know how patient people were. We don't know whether they sold these claims to these coins, and I think that's a huge factor.
We've seen on social media people attesting they've gotten maybe 20% of the assets that they held in Mt. Gox. So some data coming in on this as we'll get a picture. But do you think this is over? Is the storm over? Is the knife fallen?
I think the narrative around Germany was a really big one. The Mt. Gox narrative, as James mentioned, has been present for a long time. Those coins have been coming to market forever. Germany selling 50,000 Bitcoin, that's heavy. I mean, that's a lot of Bitcoin coming back to market. It seems that right when that news was over, everybody was posting, their pictures of here's the German bank account, have fun staying poor, right? Or their Bitcoin account, it's at zero. You own more Bitcoin than Germany, or something along those lines. It seemed like right as that narrative ended, the price started going back up. I mean, this in some ways is a narrative-driven market. Was that really what caused it? We don't know.
I think the question I had about the narratives is this permeating to institutions, right? Are they really looking at what the German government is doing, and are they making trades decisions about that, James?
I don't think so. I mean, honestly, if you're somebody who's been doing your due diligence on Bitcoin itself or some of these ETFs, you're probably looking for pullbacks. You probably I mean, we saw it. The ETFs, like I said, they took in billions of dollars. We saw them rocket off the, I think, what did it get down to, 55-ish, somewhere around there, and it rocketed back up off that rather quickly.
64,000 right now currently.
Yeah, so I think there's people that are concerned about it, but I think a lot of people are probably looking this as dip buying opportunities. That's at least what I'm hearing from people that I'm talking to, but who knows, right? Who actually knows?
And of course, all of this is coming on years of negative press in the headlines, really aimed at institutions. I hate to defame the dead, but we'll bring up Charlie Munger, the late Charlie Munger, and Warren Buffett, famously calling Bitcoin rat poison, noxious poison that is immoral. James, is this narrative fading that we were left with from these tycoons of an earlier age?
In my experience, there's plenty of people that still believe that. I feel like I talked to some people even internally at Bloomberg and elsewhere. They just kind of view this in the same way that they viewed it in 2016, 2017. And it's tulips. It's an index of money laundering, as Larry Fink once said, and has completely flipped its tune. I think most people that look at it initially, they kind of, I mean, I'm one of those people. I'm sure most people, you look at it and you don't really take it seriously, and then you flip it around. That said, there's obviously more and more people coming around. I mean, you look at this conference, we have Donald Trump coming here, the Republican nominee, to come speak to it. RFK is a huge presence. There's how many senators are going to be here? How many people from Congress? Can count. Yeah, I think it might be double digits. So, I mean, there's like this overwhelming groundswell, I guess you would say. I don't know how much of it is there's definitely some of these senators that are in congressmen and women who are full-time believers, and there's definitely some people that just see the money and the money that this industry, not just Bitcoin, but digital assets as a whole, but largely Bitcoin, is throwing at the political scene, and they're starting to take it more seriously. And I think it's going to force other people who have viewed this as a joke, as tulips, as something they don't have to worry about, and it's going to force them to take a second look.
And we've got a quick word from our sponsors now. Of course, we're talking with Frank Corva. James Seyffart will be back on the desk after this at Industry Day at Bitcoin 2024. A word from our sponsors.
This is Mara, taking Bitcoin mining to the cutting edge of energy solutions. We're monetizing excess hydro energy in Paraguay, turning waste into value by reducing landfill emissions, and recycling data center heat to warm communities in Finland. With Mara, we're building the base layer of a sustainable future. To learn more, visit mara.com.
Welcome back to the Mara News Desk at Bitcoin 2024, powered by Bitcoin Magazine. I'm your host, Pete Rizzo, editor of Bitcoin Magazine. We're here in Nashville, Tennessee, for the world's largest Bitcoin conference, and our guests, Mr. Frank Corva, James Seyffart, who were just with us a moment ago, and of course our newest guest, all the way to the left, Caitlin Long, founder and CEO of Custodia Bank.
Howdy, guys.
Welcome, Caitlin.
Good to be here.
So catching you up in the conversation, the topic was breaking news. Jersey City in the process of allocating its pension fund to buy Bitcoin ETFs. We'll get the nice pump there. So subject has been really ETFs, ETF flows, attitudes on Wall Street, how they're changing. Know that this is something that you know a lot about in your line of work. Your reaction to the idea another pension fund is buying Bitcoin?
They're all coming eventually, and you know, it's tough in the pension world, which is my Wall Street background, especially with the laws like ERISA, which have personal liability for fiduciaries. A state or local government pension doesn't have that for the asset allocators, but the corporates do. It's a high bar, and so that's why it's taken time. And I'm not surprised to see, you know, the state of Wisconsin and some of the city pension funds make the first move.
Well, I want to dive into the pension funds. Of course, there is a bit of a specter here. 15 state and local pension funds were invested in FTX, right? So there is a bit of a last contagion. Did affect some pension funds. Maybe let's talk about the narrative amongst pension funds. Are they afraid of Bitcoin or crypto because of these FTX losses? We'll stay with you, Caitlin.
Yeah, sure. In the certainly some took Ontario Teachers, I believe, was the one that took the big hit. You know, this is part of the reason why, to tie in the news that came with the SEC granting certain large banks exemptions from SAB 121. There's a reason why banks have been the custodians in the securities world, and it's because they cannot be dragged into federal bankruptcy court. Banks have a special exemption, and this is where the SEC was going, that they don't want non-banks to be custodians. And just like in the securities industry where all the custodians ended up being banks, very rare for a trust company to be a bank or to be a custodian, that's how the Bitcoin custody business is going to go. So the more banks as legal entities, I'm not talking about, you know, incumbent banks, I'm talking about the crypto companies being able to get bank charters and being able to offer custody customers the protection against these clawbacks and preferences that can bite you in federal bankruptcy. We're seeing that with the Prime Trust bankruptcy. We're seeing that with the Celsius bankruptcy. And the fact that the bank regulators have been blocking crypto companies from getting bank charters has been a problem because we can't bring our custody customers that benefit. But it's coming, though, Pete. It's definitely coming.
Let's dive into SAB 121. This was a staff accounting bulletin from the SEC. It provided guidance to companies that held crypto assets regarding their related reporting and disclosure requirements. It would have allowed banks to hold crypto on the balance sheet. James, we're talking about the ETF narrative around such institutions. Are they paying attention to kind of this level of detail in the regulatory environment?
100%. I mean, if you look at the normal custodians of most ETFs outside of the Bitcoin ETF, so all the custodians of the Bitcoin ETFs, you have Coinbase, Gemini, BitGo, and Fidelity is using their own digital assets platform. But you have normally the most common custodians in the ETF space when you're holding typical securities and bonds. It's BNY Mellon, it's State Street Bank, it's these other banks, and they a lot of them put a lot of money in to be able to offer custody services of digital assets and Bitcoin specifically. And SAB 121 stopped it. And there's been a push from these banks. I would have expected it to be louder. It's getting louder and louder. But specifically BNY Mellon is basically against what SAB 121 is doing to their business. It doesn't make it illegal for them to hold these digital assets, but it makes it functionally illegal because of the capital charge they would have to take on their balance sheet. So theoretically, if they wanted to, they could have a custody business, but essentially they need to have capital to offset that. It basically puts it on their balance sheet, which is not how like custody of any other asset works. It's just the rule that the SEC put out. And there was no congressional hearing. There was no talk about other oversight committees about whether or not this should happen. The SEC just kind of did it. And I mean, why does the SEC have power over what like accounting rules? So there's a lot of concerns here, and Congress is stirring this up. We know that the House voted to repeal it. The Senate voted to repeal it. And Joe Biden vetoed it, and then it went back to the states, and they didn't have overriding votes. But yeah, for the most part, if you talk to anyone in the industry, even people that are outside the industry, this rule just doesn't make sense. And the banks are pushing back. They want to be able to custody assets. And honestly, from my point of view, which I guess some people, the Bitcoin maxi crowd, the libertarian crowd, they don't want banks anywhere near it. But also, if you're the government and you want this stuff to be secure, you don't want people to get ripped off, why not allow your most trusted institutions with the most regulated institutions that are going to make sure things aren't messed up? Why not allow them to do this and provide the safest avenue? Instead, I mean, it's a win for, in my view, Coinbase, Gemini, BitGo, those names I said. But eventually, I think SAB 121 will be repealed.
Frank, your take on the industry view. Obviously, you're covering startups, people working on this side of the problem. How do they look at what happened with SAB 121?
I think there was just a tremendous amount of disappointment, especially the fact that you had, people, you had the veto happen, essentially. You had the government bodies essentially say, no, this is okay, we're going to allow this to happen, and Joe Biden saying no, which does make you really think about some of what's gone on behind the scenes with the people that the Elizabeth Warrens of the world have put onto Biden's cabinet and who's in his ear. Caitlin could probably speak to this better than I can, but yeah, I think there was a tremendous amount of disappointment, especially when you see something like in a democracy. Okay, you have these people say we have Congress, we have the Senate say no, we're gonna override this, and Joe Biden saying no, I'm vetoing it anyway. It seems very senseless. It seems much like a lot of the SEC actions, very arbitrary, sort of like, okay, we're just going to throw this out the window now, and there was disappointment. Yeah.
Caitlin, how do we move forward from SAB 21's video?
Well, the SEC is giving exceptions to their friends at the big banks, okay? So, I mean, this is outrageous. The SEC, to James's point, did not go through a proper notice and comment period when it put SAB 121 out in the first place. So there is almost certainly a lawsuit coming, and almost certainly there's going to be a temporary restraining order preventing the SEC from enforcing this. But the SEC is not wrong to say that banks do legally provide, as legal entities, provide better protection to custody customers. And what the Bloomberg article that broke the story that said that the SEC was granting special exemptions to several large banks said is that the banks have to prove that they can keep the custody assets out of the estate in the event the bank fails. Banks are the only type of financial institution, not trust companies or money transmitters, that has a special exemption from bankruptcy. So by definition, banks can do it. Now the question is, why didn't the SEC say this in the first place? They were clearly after, when they released SAB 121, they were trying to kill the industry. So now they're giving special exceptions to the banks. That looks very corporatist. These are supposedly progressives. And this is the most corporatist thing that they could do.
Well, let's go back to that veto. Obviously, now we know that there will be an end to the Biden administration at the end of this year, potentially a new administration, maybe under Kamala Harris. We, of course, saw the rumors swirling that she was potentially coming to this conference. How optimistic are we that a new Democratic administration would roll back some of these overreaches that we've seen? James, Caitlin, Frank, your take.
I mean, there's a lot of rumors out there that there's been like a kind of rift between the Harris party and the Warrenites, if you will, the Elizabeth Warren disciples. I mean, this is an open secret now. It's not. Basically, Warren dropped out, and Biden promised to let her basically run the financial agencies, the SEC, FDIC, some of the bank regulators. So she got to put her people there. So she had control over the financial side domestically in Biden's administration. It seems like even if Harris wins and the Dems win, I think the worst case scenario in my view is it's neutral to what the status quo has been. I think it's more likely to be slightly positive, maybe not as positive as a Republican Donald Trump would be for the industry, but based on like all the rumors I'm hearing and people I'm talking to, it sounds like it should be, like I said, it should be at least neutral, probably slightly positive. I don't know if these guys have any other view.
Caitlin, you're Kamala Harris. You're coming to the Bitcoin conference. What do you say? Is there something that can be said?
Well, I thought Meta Law Man, James Murphy's list was great. She could, announce she's firing Gensler and the other Warrenites like Michael Barr at the Fed, and she could immediately repeal SAB 121. She could drop all the lawsuits against all the various firms, and she could grant Custodia Bank a master account. That was the list, basically, had 5 things, and that was a pretty damn good list. But I think she would have been booed, I think. That was my fear, is that she would have been terribly booed just getting on the stage, even if she were going to make an announcement like that when she was on the stage, because she's tried to kill this industry, and she's part of the Biden administration that has tried to kill this industry. It's not her. I did put out about a month ago a question on Twitter, a legitimate question. Does anyone know what she believes? Because she hasn't said anything. There was one person who came forward with something that she had said while she was a California senator, that essentially was that all users of cryptos are criminals.
Right.
Of it was several years ago. Obviously, the world has evolved a lot.
The thinking has evolved
since then.
I mean, Larry Fink was saying that at the same time, and now he's one of the biggest bulls in the space.
We'll be talking about this on the main stage now. Bitcoin on the balance sheet of the subject. We've got a packed panel with representatives from MicroStrategy, Metaplanet, and Semler Scientific, some of the businesses that are putting Bitcoin on the balance sheet. We'll be back here in Nashville, Tennessee after this panel. Stay tuned. The Bitcoin 2024 for Live Desk.
The announcement traded 20 times the 1 year previous average. So I guess just how do you think about that in terms of being an operator, being CEO, and then also how do you think about the Bitcoin notoriously volatile? How do you think about the future of what Bitcoin's volatility profile looks like, how to manage that, and how do you use that to your advantage as well? You want to chime in, Eric?
Sure. Yeah. For us, it's been a huge bonus and benefit so far. We'd like to be able to capitalize on that. I think that what we've seen is an incredible embrace from the Bitcoin community. So I don't know who all those shares are trading hands with, but I have been kind of blown away by the amount of enthusiasm and people reaching out to say, I bought your stock, I own your stock, and there's just, it's a completely different shareholder base than what we had before. And the heavy volume creates opportunities. More anecdotal, when we speak to companies now that we're interested in purchasing, private companies, for instance, they'll say to us, you know, I wouldn't have done this, but now that your stock is so liquid, you know, we can cash out easily if we need to. I think a lot of people worry about, you know, selling in stock, you know, us issuing stock to a company and them kind of being stuck in it. And that liquidity and that volatility creates opportunities that way. I think that, you know, this is a little more technical, but volatility also enables you to eventually get into the options market, right? And there's no options traded on our stock at this point, but we're hopeful that, you know, we'll be in that kind of world soon, you know, if the volatility, if the volume and activity, trading activity continues to surge. So in a way, it's good, and obviously you want that to be upside driven, not downside driven. And so far, it's been mostly upside driven, and I think that you know, we would love to sustain that.
Love it, Simon. You and I have talked a bunch about the volatility profile of Bitcoin, and you know, the potential or chance for an operating company to not only have a large amount of Bitcoin on their balance sheet, but have, you know, debt and leverage, similar to what MicroStrategy has done. And just maybe if you want to talk a little bit about what the doors that opens up for a corporate, you know, a corporate entity from the financing angle, and just, you know, again, to reinforce the idea that volatility isn't something that's scary and should be avoided at all costs, and it actually is very advantageous. Just some thoughts there.
You're speaking to an equity derivatives trader, so volatility is my middle name. It's something that definitely embrace, and obviously if you understand option theory, the higher the volatility, the higher that option is worth. And so certainly together with volume, as Eric said, is something that's incredibly important. So volume plus volatility means that you're able now to have so many more tools in your tool shed. And so I think we would very much like in the medium term to consider some kind of convert issuance. Japan is a very deep market. The convertible trading market is very active. And so theoretically, we may be able to see a situation where investors pay us to lend us money because they want that embedded call option. So I think MicroStrategy did 7 or 8 year converts with really high volatility that could have 50, 60, 70% option premium. And so the investor is basically getting that free call option and then willing to subsidize or take less on the interest. And so I'm feeling very excited about the potential for that. Other things which I think we can consider, and maybe an idea for your company, is when you do an equity issuance, if you throw in some warrants at the same time, the investor will value those warrants and see that as a discount. And so not only do you get to sell shares, but you have these options that could be exercised down the road. That is sort of a guarantee for more capital if Bitcoin goes to where it should.
Yeah, I'd say, yeah, and one other thing is just, it's interesting because a lot of people say, well, you know, I can just buy the ETFs. Why do I need to buy your stock or my stock? And there's a lot of, there are a lot of fund managers, institutional fund managers, I know this from being one myself, that can't buy ETFs. They can only buy individual stocks. And so they're kind of, a lot of them are starving to have more exposure to Bitcoin, and they can't do it through the ETF. So we're kind of their 3 options, you know, and I think that the trading activity, the high volume, enables institutional funds to also participate more. So that has that added benefit.
Right. Yeah. Indeed. And I was saying that the bond markets are even larger than the equity markets, and they're always looking for something to invest in.
Yeah.
I think MicroStrategy's previous convert was one of the top performing converts in the world. As interest rates rose, every other bond fell in value except yours.
Yeah, is definitely the case. In fact, at the beginning of this year, we had some of our convert investors call us up and say thank you. It was, you know, our converts were some of the best performing, or the best performing asset in their portfolio, given what had occurred between 2022 and the end of 2023. But the idea of volatility certainly is something that benefits the construct of having a Bitcoin strategy. If I think about MicroStrategy, and we talked about trading volume as one component. Prior to our Bitcoin strategy, I think MicroStrategy shares on a good day probably traded 100,000 shares a day. On a bad day, we're trading 1 million shares a day today, and on a good day, we're probably the most traded company, listed company, period. And it's one of those things where I hear this a lot. Everyone has an opinion on Bitcoin, right? And in these financial markets, you either love Bitcoin and you want to be on the boat with us, or you hate Bitcoin and you want to be on the boat against us. Right. And all of those constituents come together and create this market that allows and gives sort of like the flywheel effect to like propel the ability for people to raise capital and improve that and enhance that. And so it's really one of those dynamics where volatility is scary, but volatility is vitality. And really, you're thinking about volatility, for me, translates to trying to find that uncorrelated return, right? And so if you think about MicroStrategy, I think we're trading at about 100 vol. If you look at the S&P 500 or the NASDAQ, that's probably 6 to 10 times the volatility of those indices. And you talked about the ETFs. MicroStrategy is probably trading at double the volatility of a Bitcoin ETF. So there's a lot of opportunities, whether you're betting for or against, and that creates that demand, and it creates a highly liquid ability for us to raise capital.
Mm-hmm. Love it. Yeah, I mean, the MicroStrategy converts, I believe, were a couple 100% above par, which just doesn't really happen in a bond market. So I think that's a really interesting thread to pull on, though, where if we zoom out a bit, we're in this macro situation where debt to GDP and all the G7 nations are potentially at a point of no return, where bonds in nominal terms are going to be repaid, but in real terms, sovereign debt, corporate debt, you're almost guaranteed on long duration paper for a negative real return. That's just the situation. There has to be printing. So Bitcoin has this unique asset, absolute scarcity, perfectly engineered scarcity, presents a really interesting opportunity. But like you said, there's a whole class of investors that can't touch it by mandate, right? Whether you're institutions or you have a bond mandate. So this corporate bond, really the corporate convertible bond for a Bitcoin company, or a company that invests its cash flow or excess cash reserves in Bitcoin, is potentially, well, not potentially, it's actually happening, but at a smaller scale, a massive crack in the matrix, if you will. So I guess just curious on your thoughts on just maybe for Simon, the bond market in Japan, the interest rates are 1% on the long duration stuff. So I guess just thoughts there. I know you have a lot of friends in the fixed income world. They're definitely looking at Bitcoin. I guess just what's the lay of the land, and what's the potential here for a blended Bitcoin instrument?
The Japanese market is starved for yield, absolutely starved for yield. So as you said, it's not easy for an institutional investor to invest in something that has Bitcoin exposure. But the brilliant thing about a convertible structure or buying into a listed company is it may own Bitcoin, it may be a proxy for Bitcoin, but ultimately it is a listed company, and it's a convertible on a listed company. So it kind of fits into a different bucket. I'm often speaking to my former TradFi friends, and this was 3-4 months ago, saying, would you buy a stock like ours? And they said, well, we like what you're thinking, but your liquidity is too low, your market cap is too low. Come speak to us once the size of the company is bigger. And so thanks to the Bitcoin strategy, we are now investable by most of the funds out there looking at Japanese companies. So that's definitely something that is quite exciting. Yeah, we're looking forward to really thinking about what the next structure is for us, and there's so many different tools that are available to us. I think I would say that the important thing for us to consider is what is something that is favorable to minority investors. When you're in Bitcoin, you have people that have a little bit of money, a lot of money. They don't want to feel like you are placing shares to a third party that is getting a benefit that everyone else isn't. So that's sort of weighing in the back of my mind. What is something which can avail of, investors broadly can avail of?
Love it. Andrea, I'm curious on, you joined in 2022. Bitcoin endured a pretty brutal bear market. MicroStrategy being levered beta Bitcoin, suffered even worse temporarily. Has since fully recovered and hit new highs. So, and at the same time, MicroStrategy has hosted multiple Bitcoin for Corporations events. So I guess just behind the scenes, whatever you can share, what has the conversation been like, and how has that evolved for prospective corporations, institutions that are looking to invest in your company, the financing third parties that you work with? Just like, how has the conversation evolved since the start of 2022 to today?
I think it's evolved with sort of the Bitcoin backdrop, which has improved significantly this year. I'd say, in that bear market, things were challenging, and we had some tough conversations. But I can tell you that whether it's a third party or a customer of our software business, vendor risk management focuses those conversations, fully committed to Bitcoin, understood how we manner. I think the experience of that was just being transparent and simple, especially when times are tough, adds value and adds a benefit to perception when you're outside looking in. I'd say today, 2024 in particular, with a lot of the progress we made around the regulatory clarity, the approval of the ETFs, now we've got large financial institutions like BlackRock not only selling an ETF product, but championing the purpose and the validity and the value of Bitcoin. I think those things will continue to shift. I think if we're sitting here a year from now, I think that will continue to improve. I think there will be more companies adopting Bitcoin. There's 3 of us here today. There's probably going to be 6 or 12 next year, so hopefully I'm still invited if there's room on the stage.
Yeah.
But I think those movements, those improvements, the maturity of the ecosystem are all lending itself for people to be more accepting of it. And when you step back and look at the value that's been created for MicroStrategy and that has been created by Semler and others that will continue to show and demonstrate that, I think people will further get it.
Love it. Well, I think when we're thinking about the corporate adoption and going from the idea phase to actual implementation, one of the hurdles that has probably been the most prominent behind closed doors has been the boardroom acceptance, right? And obviously, companies that have concentrated voting rights can move swiftly, but maybe companies that are widely held by institutions that are a bit more rigid, it's a bit of a different story. So maybe Eric, I would love to hear your experience in just how this went from idea phase to actually being rolled out.
Yeah, I think that when you have a board like ours that has a lot of skin in the game and is looking to maximize value, you're willing to consider all types of things that's going to create value. And the board that we had, our board, fortunately, is very flexible and open-minded. And I don't know if you see that as commonly as it is on our board, but our board members were relatively new to Bitcoin. They hadn't spent a ton of time thinking about it. And as a group, I kind of played an educating role. I brought it to the board, and I discussed the pros. We discussed the pros and cons, and we debated it heavily. And I was, just kind of surprised, to be honest with you, that that there was such an alignment, because I expected, you know, it to be a very difficult process to kind of get to the finish line. And credit to them for understanding, you know, that there is this upside in Bitcoin and that it made sense as a treasury reserve strategy. So I think that a lot of what MicroStrategy has been preaching, a lot of what Michael Saylor has saying about zombie companies was very easy for us to relate to. It was a very powerful concept, I think Simon referred to it, that when you listen to that as a board member, when you listen to that story and you see what the value that MicroStrategy created, you have to listen. You have to kind of, you know, take it pretty seriously as an option. And that's why it's so surprising that more companies aren't doing that. But that was a key factor, I think. The MicroStrategy for corporations story really resonated for us and helped a lot.
Love it. Well, Simon, maybe do you want to give a bit of color on kind of what that looked like from a board operational standpoint? And I guess, you know, one last thing, we got a few more minutes here, is maybe this is kind of a given. We're at Bitcoin 2024, but you know, there's 1 million cryptocurrencies, right? But it's a Bitcoin strategy, right? And I think that's, you know, that's something that we kind of take as a given. But you know, what led to the firm Bitcoin decision as well as the board story for you?
Sure. So in the board meeting that we had sort of back in April to do this, there were some naysayers on the board. Naysayers more in the sense that this seems like something terribly risky. That voice is now gone because the public market perception has been very positive. And so my conservative board member constantly says to me, this defies conventional wisdom. But now I'm a believer that adopting a Bitcoin standard, plugging into the apex monetary asset is something that can really transform a company. You asked about other cryptocurrencies. If Michael Saylor was on the stage, he would say there is no second best, and I certainly believe that. I think it took me a long time to read the Bitcoin Standard. I recommend anyone who in the audience hasn't read the book to absolutely read it, because you will not want to buy anything else but Bitcoin.
Love it. Well, I think that's all we got today. Appreciate everyone tuning in. I hope this was a valuable conversation, and I appreciate you guys sharing insights and wisdom.
Thank you, Dylan.
Thank you very much.
Thanks.
Thank you.
Thank you.
Welcome back to the Mara News Desk at Bitcoin 2024, powered by Bitcoin Magazine. I'm your host, Pete Rizzo, editor of Bitcoin Magazine. Got a new round of special guests here. Of course, one needs no introduction, Mr. Michael Saylor, executive chairman of MicroStrategy, and then Mike Germano, president of Bitcoin Magazine. You know him from the stream earlier today. And folks, we've got a special announcement, one of the first from 3 days at Bitcoin 2024. Mike, I'll hand it over to you for the big news.
Yeah, thank you. So back in Vegas when MicroStrategy had MicroStrategy World and Bitcoin for Corporations, we were excited to partner with them to not only stream the content, but work with them on who's speaking and all the connecting a bunch of Bitcoiners to what was going on. It was such a success. We started talking and we said, hey, what's the best way for us to help corporations on board understand Bitcoin? We have such an unbelievable community here at the conference, and these are all people who want to go back and bring that to their businesses. So after some great conversations, we decided that Bitcoin Magazine and MicroStrategy are partnering on Bitcoin for Corporations. So this will be an organization which are going to connect, we'll be able to connect these professionals, we'll be able to give them tools and resources to understand how they can adopt that, what they can do. We have everything from Bitcoin Magazine Pro that provides all the analytics, and more importantly, building a community. The best thing here is there's all these people who are not only just orange pilled, but they're passionate about it. How do we connect them? How do we know what they can do at the companies that they're working at? And these are for publicly listed companies as well. And really, all the success that MicroStrategy has had, what have they learned that we can do? Because we've had 10 years of trying to teach the world about Bitcoin, but MicroStrategy has unbelievable knowledge that they can help us and really bring so many great Bitcoiners together.
Yeah, of course, the playbook has proven hugely successful. MicroStrategy owns over 200,000 Bitcoin. We've seen a wave of companies follow suit: Block, Semler Scientific, Metaplanet, others. Michael, maybe you can just talk about this response you've seen, how we're broadening this with this partnership.
Yeah, I think 2024 is year one of mainstream institutional adoption of Bitcoin. So clearly the momentum's picked up. I get a lot more calls from public company CEOs. I'm invited to talk to boards more often, you know, and quite a few times now. And we think that now's the right time for this partnership because there's a whole lot of work that we've done. We've done a lot of macroeconomic modeling to look out at the macroeconomy over the next decade and come up with Bitcoin models. And then we've done micro modeling to look at any given corporation, and if you plug in the debt and the equity and the cash flows of a company and the market cap, you can calculate the appropriate Bitcoin strategy, and then you can explain it to your board. We've done a lot of work on the accounting. You know, FASB accounting has come, and fair value is just now become something that's elective this year. We've done a lot of work on investor relations. How do you communicate this to your investors, especially if you're a public company? How do you build consensus among the officers and the directors? And then there's you know, a lot of work on the legal nuances, the disclosures, and then finally the execution. People go, well, how do I buy it? How do I custody it? You know, and how do I do risk management on it? So these are things that we spent 4 years working on, but every company has the same exact questions. And so we think it would be a shame not to share that playbook with 50,000 public companies, and of course there's 50 million decent-sized private companies out there. They all have the same exact problem, and they need the same set of tools.
So is it safe to say the dream here is a MicroStrategy in every country around the world, even bigger than that, Mike?
Well, I think the dream is every company find a way to recapitalize on Bitcoin for the benefit of their shareholders, their customers, their employees, so they can make better products and services.
Excellent. And we've obviously seen a warming of attitudes. Obviously, we talked about on this desk earlier. The Warren Buffett's a little bit less quiet in the room these days. Jamie Dimon, we've even heard changing their tune. Maybe let's talk about these headwinds, this just positive sentiment. Obviously, this conference, we've got two major presidential candidates here. Michael, how much is this helping your evangelism amongst corporations?
I think the challenge is always to get people to notice. I mean, you know, they say in politics, you got to say something 42 times before people know what you said. And so now that you've got major political figures on the national stage coming here to Bitcoin in Nashville, I think you've got media attention. You've got a lot of politicians, a lot of journalists, a lot of business leaders, a lot of community leaders that are stopping and spending a few minutes to think about what this means, and now they're asking the right questions.
Mike, your take?
Well, I think, you know, if you build it, they will come. Let's look what we did in 2021. You know, remember when Michael Saylor was on stage, and there was such unbelievable energy there when people were looking at how he was approaching Bitcoin for a publicly traded company. And now we're going to have 20,000 plus people that are going to be here at this conference. All the news, all the companies around the world that are making all their Bitcoin announcements this week. We really have the attention of not just the niche media, which is the crypto world, but the kind of global media, the people that are coming to this event. And I'll tell you how many of them, we keep trying to just walk around this conference center and everyone's asking us, how do I bring Bitcoin to my company? How do I become a Bitcoiner?
Right.
And if we've had 10 years of telling people, hey, this is the tools to become a Bitcoiner. Here's where to buy it, here's how to, and here's how to connect with other Bitcoiners. How do we do that at a much larger scale for corporations, which need a lot more information?
I was going to say, is this a top-down movement, a bottom-up movement? If you're at a corporation now and you're a passionate Bitcoiner, how do they make change with these materials that we're producing?
I think it's a bit of all those things. Sometimes it's big shareholders that are going to the management team saying they want the company to adopt a Bitcoin strategy. Sometimes it's coming from the directors at the board level that are lobbying for the management team to adopt a Bitcoin strategy. Sometimes it's an inspired executive at the company. That might be the CEO, it might be the CFO. And then sometimes it's an employee that's a Bitcoiner, a Bitcoin maximalist that looks at their company and they see the company is struggling, but it could benefit enormously. And so they're bringing the idea up the chain of command.
Do you have a sense of, we've talked about the playbook, you've talked about all the facets, where, if you're a company, where do you start? Do you have an idea of, here's how you start bringing Bitcoin to your company?
Well, that's exactly why we're engaged in this partnership. Yep. Our thought is, let's give people a website and then let's organize a set of materials, the right playbook, the right legal, accounting, process, execution, advice, and also let's give them the ability to reach other people, either other business executives that have already gone down that path, or reach the legal professionals or the accounting professionals or the business process professionals or the custodians and exchanges that can provide this kind of service at an institutional grade level. And we want to create a one-stop shop and make it easy.
And what we've seen is there's so many partners out there to help companies do this, but a lot of times people could want to have it at their company, they don't even know who to turn to. They don't know who's trusted, and they honestly don't want to maybe risk their job making a wrong judgment on a partner. So once again, proof of work is very important. We've seen the companies that have done this in the space. We want to make sure that every other company knows who's had success, who to turn to, right? And where a company starts is different for everybody. And even though we have the playbook, what MicroStrategy did, the time they've invested, there's a bunch of different approaches to that. We're seeing companies all over the world now try test this out and try it. It's our job at Bitcoin Magazine to report on that, to understand that better. But how do we now turn that into something to really help companies move forward with this? And that's what we've been exploring, and we're excited to show the world.
We're winding down here. Of course, a lot of excitement to come. We'll have Robert F. Kennedy Jr. tomorrow on stage. We'll have Donald J. Trump on Saturday. I want to talk a little bit about the regulatory environment. We touched on it a little bit, but how much could a positive U.S. regulatory environment help an initiative like what we're putting together here with MicroStrategy for Corporations?
I think a positive regulatory environment is going to be a tremendous boost to the space. I think that that Bitcoin got a huge boost with the approval of spot ETFs in the U.S. in January. Now we're up to 39 ETFs around the world. So every time a new jurisdiction like Australia or Hong Kong or Germany approves an ETF, it gives us another boost. I think there's a big movement afoot to let banks into the business, let banks custody their
SAB
own Bitcoin.
121, of course, yeah.
Yeah, repeal SAB 121, and the support of the FDIC, the OCC, and the SEC, which is, I think it's inevitable. It's just a question of when, not if. That's going to accelerate adoption quite a bit as well. So we've got a set of milestones. They're going to come. They're probably going to come over the next 12 months. And each one of those just reduces friction and risk and accelerates the Bitcoin journey for corporations and institutional adopters.
And not only that, but now just the public awareness of a topic like this. President Trump 2 years ago might have said that, Bitcoin was a Ponzi scheme, and now all of a sudden he feels orange-pilled. He's talking about this topic. All the people that are part of the party, are part of their movement, that now are giving Bitcoin a second look. Mainstream culture is changing. We just saw even Kamala Harris and her conversation saying her campaign is thinking differently, clean slate about crypto, clean slate about regulations. So being able to let everyone know that this is something that can be accepted, talked about, whether it's regulations or not, people wanting to accept this. And now all of a sudden we have, 2 out of the 3 major candidates that are running for president that want to come here to address Bitcoiners and say, this is how we can help your community. This is why we believe in what you're doing. I mean, I think the proof is in the media coverage of this event alone.
Well, of course, the rumors that Kamala Harris might attend, of course, not attending now. Michael, curious for your take. Is there a sense that this regulatory environment is going to change for the positive regardless of the administration, or do you think Bitcoiners should be plugged into this election?
I think there's a fair wind blowing for Bitcoin regardless. I really can't see any administration in the future not embracing Bitcoin. It's not really a question of whether they'll be pro-Bitcoin. It's a question of how aggressively they'll move, how fast they'll move, and whether they move with alacrity or whether they move a bit more deliberately. But I think that we passed an inflection point in January of 2024, and at that point it became clear Bitcoin is the institutional grade digital asset. And as Larry Fink has said, you know, it has a place in every portfolio. It's got enormous global appeal. It's something which is unique, and the world needs more of it. And so from this point, it's really just a question of education, and there's a lot of moving parts in the global financial apparatus. There's a lot of regulators, and every regulator's got 20 different switches they got to flip. They're all going to flip over the next 4 years. The question is, over the next 4 months, over the next
An orange wave maybe cresting in November, 4 years. And it sounds like we have a landing page now. People can learn more at home if they want to understand what we're doing with Bitcoin for corporations.
Sure.
Mike?
Yeah, so go to b.tc/corporations. That would be kind of where we have a landing page. We're going to be providing that information. There's a lot more to come, as you can imagine. With everything we've been doing with the conference, we need a little break, and obviously a lot more information after that. So part of the goal was to get this out because as we're meeting with so many companies that are here, all these conversations, we knew that this was a conversation we need to have, and we wanted to make sure we gave them a place to let them know what we're doing, how they can be a part. We invite all companies that are interested in this, interested about putting Bitcoin, whether on their balance sheet or they're interested in seeing the playbook, to reach out to us and start building that community with us.
All right, well, special announcement, Bitcoin Magazine and MicroStrategy will be right back on the Bitcoin news desk here at Bitcoin 2024. Word from our sponsors.
This is Mara, taking Bitcoin mining to the cutting edge of energy solutions. We're monetizing excess hydro energy in Paraguay, turning waste into value by reducing landfill emissions, and recycling data center heat to warm communities in Finland. With Mara, we're building the base layer of a sustainable future. To learn more, visit mara.com.
So what is money and how does it get value? Paper money has value because someone says so. Bitcoin is different. It's like digital gold. It has value for many of the reasons gold does, but that's only the start. It has a limited supply, only 21 million, so no one can decide to just print more. Because no central authority controls it, it can never be shut down. And unlike with banks and credit card companies, you don't need approval to use it. It puts the power back in all our hands. Bitcoin lets you control your finances. Kraken lets you buy Bitcoin. Kraken, see what crypto can be.
Welcome back to the Mara News Desk at Bitcoin 2024, powered by Bitcoin Magazine. Once again, I'm your host, Pete Rizzo, editor of Bitcoin Magazine. Our special guest, rotating a bit here, of course, Michael Saylor, just with us moments ago, executive chairman at MicroStrategy, and now joined by Eric Semler, chairman, Semler Scientific. Did I get that right?
Correct.
Excellent. The topic is Bitcoin treasuries, putting Bitcoin into the balance sheet of corporations. Eric, want you to talk a little bit about your journey and obviously the inspiration maybe that you drew from Michael and just becoming, as you said, a fast follower of the strategy of adopting a Bitcoin standard.
Yeah, you know, it was something that we decided very recently at the end of May that we wanted to take our cash and buy Bitcoin as our adopt a Bitcoin Treasury reserve strategy. I don't think it would. Sure, how's that? Okay. I don't think it would have ever happened had this man here next to me not been such an inspiration. He has been out there telling companies and countries that they need to do this. And our board, as a group, listened to him very closely, and he convinced us, frankly, not directly, but through our listening to his preaching, this made this kind of bold move. And frankly, it's shocking that there aren't more companies doing this. It's such a compelling argument. He's created so much value. He started with a company 4 years ago that had a $500 million market value and all $500 million of cash roughly, and has turned it into a $35 billion enterprise, which is just phenomenal and so that's Hall of Fame. And I've been an investor my whole career. I've been a long short TMT investor. I follow Bitcoin closely, and he's up there with the greats, with Jensen Huang and Steve Jobs and all those guys for the value he's created.
Well, we just had Metaplanet on earlier, their CEO. Their story may be a little bit different. They were a Japanese public company in the hospitality industry. COVID happened. They were looking for a model to adopt. MicroStrategy comes along, a major inspiration. Was it the same for Semler Scientific, or was it a bit more of just it made sense for the business to have your cash hedged against inflation and economic uncertainty?
It was probably a little different because we have a solid high margin cash flowing business in the medical device and software area. So we've had a pretty good run in medicine and healthcare products, and as a result, we've built up a very attractive balance sheet. And we've been looking at acquisitions, we've been looking at buying back our stock, and we just didn't see a better alternative for our cash than Bitcoin. After a lot of debate and due diligence, it made so much sense, but it took a while to get there. And clearly, listening to the MicroStrategy for Corporations, podcasts and so forth, it was very helpful to understanding, that alternative.
And Michael, of course, your reaction, obviously you must have felt some sense of accomplishment having Semler follow in the footsteps. What was your reaction when you heard the news?
Well, I think Eric's too kind to give us any credit at all. The information is out there, and 1 million people will stare at the same thing, and 999,999 will not do anything. So I think the impressive thing for me about Semler Scientific is they went from concept to consensus to commitment to execution in like 20 days. To do something in 3 weeks is pretty extraordinary. And a lot of people will look at the information, they'll agree with you, and they'll do nothing. And to actually do something is quite extraordinary in this world.
Well, I want to talk a bit about a broader subject. We'll have Robert F. Kennedy Jr. on this desk tomorrow. He's talked a little bit about Bitcoin, backing Bitcoin with $1. So, an innovative proposal, obviously, and something that a lot of people in Bitcoin are excited about. Does that solve some of these problems that maybe you were adopting Bitcoin in the first place to solve? Michael, Eric?
So say that again.
The topic is backing the dollar with Bitcoin.
Yeah. Well, I think you back the dollar by doing something economically rational. So when the United States actually purchased Louisiana, and we expanded the country and doubled the size of it, we backed the dollar. And when Seward bought Alaska, and we found $1 trillion of oil underneath it, we backed the dollar. And when we developed the port of New York City, and we engaged in international commerce, we backed the dollar. So the country's got to look to the future, and the future of the country is in cyberspace, and Bitcoin is, in essence, cyber Manhattan. So the way you back the dollar is you buy Manhattan for pieces of paper and trinkets, and you buy it before it's worth hundreds of trillions of dollars, just like the Dutch bought New York for $50 worth of plastic beads. And so I think that it's it's right in front of us. The United States owns the majority of the gold in the world. The U.S. federal government owns 28% of the land, you know, in the United States. The U.S. government should own the majority of the Bitcoin in the world.
Very interesting stuff. We got the chat going, of course. We're streaming live now on X, YouTube, and Rumble. Got some questions going in the chat, so I'll ask directly to our panel here. Of course, there's a question about the opportunity that you've had both to engage with politicians who are running in the November election. Have you had direct engagement with these campaigns? Are they looking to business leaders in the Bitcoin industry to provide them feedback? Eric, Michael?
Because we're new to this journey, we haven't really engaged in those discussions yet, but two things are happening. One, they're reaching out to me. I am meeting a prominent politician here during this conference. I haven't met him yet. But also, we're dealing with the SEC too. We're waiting to go effective with our filing for at the market offering. We filed a shelf and.
Sorry, what is it? At the market offering?
Yeah. So what we're looking to do is to sell stock for general corporate purposes, including possibly the purchase of more Bitcoin.
Oh, wow. Okay.
And the SEC has
some exciting news happening here on the desk.
So the SEC has been, we've been waiting for a while now for the SEC to approve it. They've had comments on our Bitcoin strategy, which will become public information. But they, they're not friends of crypto or Bitcoin, and so I think they're going to, take their time before they approve our filing. But we're hoping that will happen soon, and that will enable us to buy more Bitcoin, I hope.
Topic here is engagement with these politicians and the industry. Michael, your experience so far, where you can share.
We have a lot of senators attending this event, a lot of congressmen, a lot of governors interested, some, the majority of the presidential candidates interested. So I think that political interest in Bitcoin has increased, to say by an order of magnitude since the last election cycle is probably an understatement. I think, well more than half of the politicians in the country now are thinking they need to have a strong opinion. And the opinion has flipped, generally uniformly positive, right? If you were to take a vote, the majority of Congress persons, the majority of senators would have voted pro-Bitcoin right now. So it's been a wonderful inflection, a positive sentiment.
Let's just say we had President Trump here, we had Kamala Harris or someone. What would you say are the steps that they should take to help the industry? What's the one thing that they could do, I think, to most help your businesses and Bitcoin for corporations in general? Michael?
I think the future of the country is based on embracing technology and exploiting technology. So 30 years ago, it was own the internet. And 100 years ago, it was cultivate your energy resources and make sure you're a leader in oil and steel and air power and space power. And I think in the 21st century, it's digital power. So embrace digital assets, embrace digital capital, embrace digital power, embrace Bitcoin. It's worth hundreds of trillions of dollars. You can either own it and benefit from it, or you can ignore it and then give that technology to your competitor.
Eric, say you had an opportunity with Donald Trump backstage. What are you asking him?
Well, selfishly in short term, I'd say just a more friendly regulatory environment. I think it's gotten better, but I would like to see it not be so, such a wall for us. And so that would be really important. And I think it's just, really important to recognize that that the younger people in our country really believe in crypto and in Bitcoin, and that they need to, their policies need to reflect that better, because that's the future.
All right, we're getting a word from our sponsors coming in hot. We've got Michael Saylor on the desk, Mr. Semler from Semler Scientific. We'll be right back here at the Mara News Desk at Bitcoin 2024. Stay with us. We'll be here for the next 3 days, broadcasting live.
This is Mara, taking Bitcoin mining to the cutting edge of energy solutions. We're monetizing excess hydro energy in Paraguay, turning waste into value by reducing landfill emissions, and recycling data center heat to warm communities in Finland. With Mara, we're building the base layer of a sustainable future. To learn more, visit mara.com. This is Mara, leaders in Bitcoin mining with global energy solutions and advanced proprietary technologies. Mara sets the digital gold standard. To learn more, visit mara.com.
So what is money and how does it get value? Paper money has value because someone says so. Bitcoin is different. It's like digital gold. It has value for many of the reasons gold does, but that's only the start. It has a limited supply, only 21 million, so no one can decide to just print more. Because no central authority controls it, it can never be shut down. And unlike with banks and credit card companies, you don't need approval to use it. It puts the power back in all our hands. Bitcoin lets you control your finances. Kraken lets you buy Bitcoin. Kraken, see what crypto can be.
Why?
What's the second best? There is no second best.
We will ensure that the future of crypto and the future of Bitcoin will be made in America.
So yeah, today we're going to be talking about runes.
We're talking about runes.
Good afternoon. Last but not least, we have a very special presentation from Will Reeves, CEO of Fold. Please give a warm round of applause for Will.
What's up, Nashville? My name's Will, and I'm the CEO and co-founder of Fold. You know, we're the team that has introduced over 500,000 people to Bitcoin rewards and Bitcoin savings accounts. And we have some pretty big news to share. But first, a quick word from our lawyers. I'm sorry. No, but seriously, back to the news. You know, Fold is set to list as the first pure-play Bitcoin financial services company on the NASDAQ. And our mission is to maximize wealth creation for our customers and our shareholders, and all powered by Bitcoin. We're taking Bitcoin to the center of global capital. So every single day, we've seen people choose Bitcoin. And we know this network is growing faster than the internet itself. And Fold is the home for Bitcoin personal finance. So we provide all the banking tools you need for the currency you prefer. We give you that choice for the first time. And we're building financial services on Bitcoin for Bitcoiners by Bitcoiners. So when you download Fold, you end every day with more Bitcoin than you started. You can earn Bitcoin on your everyday spending. And just yesterday, we announced the ability to earn Bitcoin on your mortgage, on your rent, on your credit card bills. And you're able to buy Bitcoin directly from your cash balance, or even pull out cash directly from your Bitcoin balance. And it's truly a special thing. Most of us here already know this, but people that adopt Bitcoin and Fold are better off than their peers. You know, we've distributed over $45 million in Bitcoin rewards to our customers. And had we distributed that same amount of rewards in cash, we would have been just above 20 million. Bitcoiners and Fold customers have more purchasing power and more savings than ever before. And this is special because right now, this is happening at a time when most people find that their purchasing power is less and decreasing, and their savings are decreasing. So Fold, we believe, is an engine for prosperity, and all powered by Bitcoin. So we're laser focused on this mission to accelerate wealth creation for Bitcoiners and value creation for our shareholders. So today, you can use Fold as the home for most of your personal financial needs. FDIC accounts, cards, bill pay for your dollars, custody and trading for your Bitcoin, and rewards on everything. In the future, we're going to give you access to native bill pay, premium credit cards, loan products, and business accounts. Your entire life powered by Bitcoin and brought to you by Fold. So we talked about our mission, and it's really to drive wealth creation for our users and wealth for our company and our shareholders. And this is how it happens. We've created a virtuous cycle, we like to call it, where we align incentives on both sides. Our customers use the product, and they accumulate Bitcoin along the way. And as a result, Fold accumulates Bitcoin for our treasury. And as our customers accumulate more Bitcoin, they need more financial services to support that Bitcoin, and Fold is going to be there to provide that for them. And so the cycle continues. We've built an unstoppable Bitcoin accumulation machine for our customers and for our company. And this is where we're at today. Already, Fold has amassed over 1,000 Bitcoin into our corporate treasury, and this is just the beginning. Every day, we expect our product to generate more and more Bitcoin, and we're going to follow in the footsteps of giants like MicroStrategy to accelerate that Bitcoin accumulation. So there is no company more focused on Bitcoin than Fold on the entire stock market. There truly is no second best. Going back to what we're here for and why a lot of us joined Bitcoin. You know, we built Fold with an idea to help people save and accumulate over the long haul. And we wanted Fold to become a prosperity engine. Little did we know it actually worked, and it's all powered by Bitcoin. And so we hope this engine continues to drive value to our customers and the shareholders and our team. And ideally, we can find a new American dream all powered by Bitcoin. So we're excited for the future, and we welcome you all to come and join us. You can find us actually trading today under EMLD, and it's been an absolutely wild ride for myself, for my team, and for all of our friends in the community, and we're just getting started. So appreciate everything, Nashville. Thank you.
back to the Mara News Desk at Bitcoin 2024, powered by Bitcoin Magazine. I'm your host, Pete Rizzo, editor of Bitcoin Magazine. You just heard from Fold, a Bitcoin rewards company that's about to go public. Our next guest is CFO at a public company, Salman Khan, CFO at Mara. Salman, welcome.
Thank you. Thank you for having me here.
And of course, you've had some exciting news of your own, announcing yesterday the purchase of $100 million, just want to make sure, $100 million worth of Bitcoin, taking your company's holdings to more than 20,000 Bitcoin, worth roughly 1.3 billion. Congratulations.
Thank you very much. We're very excited about it. This is such a fascinating day
What are
for
you
us.
doing with all that Bitcoin? That's great.
Well, this is not new to us. We have done this in the past. Back in 2021, we invested $150 million in Bitcoin, and we've held that Bitcoin since then. If you think about it, that's 2021 pricing, and it's still in our HODL position on the balance sheet. And today we announced that we will continue to do that. In the last 1 year or so, we have, since probably 2022, we started selling some of the Bitcoin to fund our operating costs. And now we've announced today that we will stop doing that and continue to hold all the Bitcoin that we produce as the largest Bitcoin miner, as the largest publicly traded company that mines Bitcoin, and HODL that. We believe the market conditions are very suitable right now, and macroeconomic conditions, there's tailwinds from a political situation standpoint here in the United States that we believe will have a worldwide impact. And we believe Bitcoin to be the best asset class when it comes to being as a treasury asset reserve. And we encourage all the companies, corporations, governments to consider this to be a HODL asset for them.
Well, of course, it's even more exciting for us in the Bitcoin industry, the fourth halving taking place earlier this year in April, issuance of Bitcoin declining to 3.125 BTC per block, obviously putting a squeeze on the Bitcoin mining industry, some companies. So nice to see that you're persevering through that. It sounds like that hasn't put in a damper on your financial operations at all.
Yeah, it's a fascinating space to be in. So if you're used to some other traditional industries, like I come from oil and gas background, and there you can continue to produce oil, and Exxon can go ahead and have a huge discovery of oil, and suddenly you have a mismatch of supply and demand in the world. In Bitcoin, it's very different. Although the Bitcoin price may act like a commodity, like oil prices act as commodity, but when it comes to the quantity of production, that's restricted per the protocol. Nobody can change that. 21 million coins, and majority of those have already been produced. And as we go through halvings every 4 years, there will be further reduction of that supply. Whereas on the other hand, you see mainstream investors are now realizing how great this asset class is, because this has been sitting in as the best kept secret over the years, with a few believers just believing that Bitcoin is the asset to hold. As this becomes mainstream, as we are seeing in this Bitcoin conference, beautiful conference by the way, amazing presence of people here, and great to see so many people attending, and as you see this asset class to be recognized by traditional investors and also mainstream corporate institutional holders, you will see this demand to continue to creep up. As you know, the ETFs were announced earlier this year, and 11 ETFs announced. Out of those, 5 were the best ETF launches since the beginning and the inception of ETFs history. And this is huge. There's a demand out there. Institutions will follow along the way, and that will likely result in the demand to continue to increase. So going back to your question on halving, yes, halving happens every 4 years. And we, as a publicly traded corporation, we plan for a very long duration of time, not just 1 year, 2 years, or 4 years. And we plan ahead of time. And we see that this, despite having every 4 years, we will continue to create value for our stockholders, and Bitcoin price will continue to accrete as the demand creeps up.
Well, I was going to say, obviously, the halving, great, because it's ensuring that there will only ever be 21 million Bitcoin, which is great for everyone. How do you plan for something like a halving? Coming from oil and gas, they're telling you there's Bitcoin, this fixed supply commodity, there's only 21 million. How does that affect how you think about it, and did that lead you to the conclusion that a Bitcoin treasury was the best thing for the business?
Yeah, great question. So this concept is not novel to our industry. It exists in other industries as well. You look at oil, for example. Oil price fluctuates a lot. There was a time when oil price was $140 per barrel. Then it went down to $30 per barrel suddenly, overnight. And it stood there, if you look at the last 10 years. And then since then, it's been fluctuating with the period of time. Bitcoin is another commodity, and commodity-based and capital-intensive businesses like oil and Bitcoin in a similar fashion, you have to plan ahead of time. You have to plan for the worst, and you have to plan for the best of the time. So you plan for the down cycle, and we also prepare for the bullish market. And during the bear markets, you have a slightly different strategy. And during bull market, as we believe right now, we're at that inflection point where pricing is expected to act more bullish over a period of time. This is the time to hodl. This is the time where you get back into the rhythm of investing into Bitcoin, because from a long-term perspective, pricing is going to be much larger than what it is today. Yes, it may fluctuate over a period of time. But we are a long-term investor, and we view this as an investment class that will continue to create value for us. Last year alone, Bitcoin was 150% up. You tell me how many assets would give you that kind of a rate of return?
Very few.
Yeah.
Well, of course, there are things you can't plan for. You mentioned the halving, certainly something you can plan for, but the regulatory environment in the United States has been volatile. We're going to be having some of the largest presidential candidates. Robert F. Kennedy Jr. will be on stage tomorrow. Donald J. Trump will be on Saturday. And it sounds like you had the opportunity at the industry roundtable that Donald Trump put together. What was that experience like? Was he receptive to the industry? And was he promising to solve some of these challenges that we've seen Bitcoin miners face?
Yeah, we had the pleasure of attending the advocacy group of leaders from mining industry, and met President Trump a couple of weeks ago, and that meeting went very well. And we showed President Trump United States manufactured ASIC miner that Marathon co-founded with Auradine. Invested in Auradine, and that was a fascinating sight to see former President Trump holding that miner in his own hands and asking questions.
What kind of questions did he ask? I mean, obviously you're talking about a former president of the United States in a room with Bitcoin miners. Was this a subject he was familiar with?
It's fascinating. It's mind-boggling, and when you are in the presence of a former president, it's already so overwhelming, but at the same time, few key takeaways from my personal perspective. I was very positively surprised how much former President Trump understood Bitcoin mining, and he was quite educated around the difficulties that this industry has faced with the current government and the regulatory environment that this industry has operated under. And he was keenly aware of that, and he understood the dynamics. And look, his perspective was all Bitcoin should be mined in the United States, and his perspective was that we have to make it easier for American companies to operate in America, and that is an agenda that has existed since a long time ago. His previous presidency also was dictated by U.S. first. And we would fully expect something similar this time around as well. And it was very predictable from that standpoint.
So his famous quote, of course, "I will ensure the future of Bitcoin will be made in the USA." Did he give you any assurances of how he would achieve that goal from a policy standpoint?
Yeah, I'll let the Trump administration and the team that will be talking later this week, which we're all looking forward to talking to or hearing about. I'll let them outline the details. There are certain things that we can and we can't discuss with our conversations that we had, but it's overall a very positive meeting. But at the same time, we view Bitcoin as a bipartisan issue. This is not a one-party issue. Although we welcome the meetings that we had, we also converse with all the other parties involved in the process, because Bitcoin is Bitcoin. It's a valuable asset, and everyone should benefit from that.
Well, of course, great to see companies like Mara supporting Bitcoin, buying and holding Bitcoin. A lot of fans here in the chat for Mara, and of course our prior guests, Semler Scientific and MicroStrategy. Do you feel like you're part of this Bitcoin for Corporations movement, and are you looking at some of the tools MicroStrategy is putting out, and is that informing your business?
Look, we all believe in the same thing. And we may all be coming from different angles, but ultimately we're holding, like, MicroStrategy is a leader in this space in the sense that they've hodled a much larger position. At the same time, Marathon provides a different flavor to the same solution, right? We are also believers in the hodl strategy, and that has created value for our stockholders significantly. Our stockholders believe that we should be holding at the right time. Obviously, the interest for us and the caution for us as a public company is that what is the right strategy at the right time? And as of now, the market conditions are very conducive for us to go back to the hodl strategy, which used to exist for us a long time ago.
Salman Khan, CFO at Mara, appreciate all the work you do in the industry. That's going to be it for us in this conversation. We're going to throw it back to the main stage. Of course, there's still a bit of time to go here on Industry Day at Bitcoin 2024 in Nashville, Tennessee. We've still got 2 days to go. Stay with us. We'll be broadcasting live on X, Rumble, and YouTube. More great content